Fed is saying about January. Does this mean a pause after this cut, or will there be room for more? Meanwhile, oil prices are dropping as Ukraine will share a revised peace plan after meeting European nations, and he'll provide this peace plan to the US. Brent was below the $62 mark. Let's pull up Asia and see what's happening there. An interesting story that the Financial Times has reported on China's move on NVIDIA's chips. All three indices that you're seeing on your screen down in the red, so it's not looking great. The India implied also looking like we will have another weak start. So expect some turbulence today as well. I mean, 26,000 looking very, very far away right now, although we had some recovery yesterday. But the story that I was talking about, this media reports, and this is actually the Financial Times that has reported this, citing two sources, that Beijing will be limiting access to NVIDIA's advanced H200 chips. This is after Trump's decision to allow export of these chips to China. Of course, 25% of those revenues will have to be paid to the US government by NVIDIA. But this is, you know, like a reverse chess move, or like I was saying, this is reverse Uno draw 4. So the whole table gets turned in that sense. And I thought it was interesting because all of this time it was, okay, we want chips, give us the NVIDIA chips. And now they're saying, okay, we'll think about it.
I mean, the big ramification that if indeed the belief is that the trade deal between the two countries is slated on two key things, chips versus rare earth. And now China is saying, okay, we have the rare earth, you have the chips, we don't want your chips. And therefore, the edge is with us because we have the rare earth, which you definitely need. I mean, it's quite a statement. I mean, it's just astounding, really, what's happening.
In the art of negotiation, right?
In a big way.
Now, I think it also is pointing to how more and more sovereign nations are going to weaponize tech. And that really is, I don't know, one of the big takeaways. If you don't have that cutting edge technology, you're really going to be at the bad side of that bargain.
Yeah, the small change, and sorry, I mean, just as we end this, the very interesting pricing observation that I saw, or the price behavior observation that I saw, was in the last 6 months, what Apple, which is very slow of the AI blocks, right, of the blocks for AI, they've had major pushbacks as well. That stock has outperformed S&P, NVIDIA, MAGA 7, 8, whatever you call it. Apple is up 37%. Everything else, including NVIDIA, is below 30. So quite something that the markets are now, are the markets telling you that we had enough of the AI trade? Yes, they are important, but now we want to look elsewhere.
Yeah, sector rotation and more. But talking about the art of negotiation, key trade dialogue will kick off today. A US delegation led by Deputy United States Trade Representative Ambassador Rick Switzer will be in India till the 12th of December. Of course, from today is when those conversations begin. The two sides will hold crucial talks on tariffs and other key global topics. I presume rice will also make it to the list of conversations, perhaps. My colleague Rishabh Bhatnagar joins in with more details. Rishabh, tell us a bit about the US Trade Representative who is coming. Who is Rick Switzer, and what's on his agenda?
Right, you had a set of marathon meetings that started on Monday with the EU team. Now the EU team meetings are done, and the focus is now shifting to the US team. You have a very important set of meetings that are kickstarting today. Again, this is going to be the Deputy US Trade Representative, Rick Switzer, who will be in town. This is someone who hasn't visited India previously for trade talks. So this is someone who will be on a familiarization visit. That is what India's Ministry of External Affairs is also categorizing this particular visit as. What we can expect is that he will meet India's chief negotiator for the US trade deal. He will perhaps meet the Commerce Secretary as well. We don't know so far if it is in his schedule to also meet with the Commerce Minister, Piyush Goyal. So that is something that all eyes are on currently. Remember, the fall deadline for the India-US trade deal, already we're past it. India is still facing 50% tariffs, 25% Russian oil tariffs, and 25% reciprocal tariffs. And what the commentary has been is that what we're looking at is at some sort of a framework of a deal to at least address the tariffs part of it, and the rest of it can be negotiated later on. So the focus is currently on, of course, at some sort of a framework of a deal to address these tariff bits. Something about Rick Switzer before he was appointed as the deputy USTR. He was also a member of the Secretary of the State's Policy Planning Council. He's also someone who has a very deep knowledge about China, and that is also perhaps why he's appointed as the deputy USTR and why he's being sent to India as well, because this is something, the trade dynamics between India, China, and the US is something that also play a part with all the trade deals that are happening. So all eyes on December 10th and 11th for these US trade talks that are set to happen in New Delhi.
Indeed. Thanks so much for getting us those details, Rishabh. And of course, we'll come back to you over the course of the day to find out whether any headway has been made. Let's talk about what happened in trade yesterday, and what a volatile day of trade it was for the Nifty 50 expiry, the weekly expiry. Of course, you had foreign institutions that intensified their selling, even as domestic institutions stepped up. So domestic institutions net buying to the extent of over 6,000 crore rupees of equity in the Indian equity markets. And you had the Nifty 50 ending about 0.5% lower, but it recovered quite sharply from the low point of the day, about 0.4%. The Nifty 50 heavyweights, ICICI Bank, HDFC Bank and Reliance Industries, in terms of contributors, were the biggest contributors on the losing end. Asian Paints dropped as much as 4.5% and made its way into the top 5 contributors on the losing end. And this is because channel checks had suggested that Birla Opus was faring better in the October to November period. The broader markets, by the way, that rebound was even sharper and important to note, right? So take a look at this. The gain from the low for the mid-cap index as much as 2%, 2.7% for the Nifty small cap index. In fact, if you pull up that intraday chart, it will be very stark, the gain that you see. Defense, PSU, banks as well as realty, even consumer durables making quite the comeback as well during the day. And you saw similar rebounds play out for all of those sectoral indices. The market breadth as well turned on its head midway, or not midway, but actually 1/4 through the session. You saw the sharp shift and you ended with much more gainers than losers. So all told, you ended more or less on the high for the broader markets. The question is, do we see the large caps lose a little bit more ground? And what do you see amidst all of these major events to track? Neeraj, what do you think?
Well, lots, but before we get to the nuts and bolts, Alex, just wanted to lay out something which is true for the US markets, but true for India as well, because portfolios are in so much pain. We've been talking about this, right? That markets may do what they do, but portfolios are in pain. Look at this chart, and this is the bull and bear markets, and eventually you realize that the quantum of gains made in every subsequent bull market after a bear market tend to be higher. That's just the natural way the markets and economy performs. And therefore, if you believe that the Indian, or your portfolio, if not the Indian markets, is caught somewhere here, or wherever it is, remember that the subsequent bull market, if history is to be believed, will be better. So please keep that in mind if you get discouraged by the recent turn of events of what the SMIDs are doing, because frankly, that is what's wedged in almost every portfolio, the SMID stocks, which have had a slightly brutal move in the last few days. Okay, now the trade setup for the day, as Alex asked, right? I mean, he's got an observation, Tamanna has one, this is mine, right? The Nifty clung yesterday to the 50 DMS support, but did form lower highs, and therefore that is a bit of a fly in the ointment, if you will. But, and by the way, sorry, and the fresh call positions, if you see, and Puneet will talk more about this, but at the money and the near-term strikes are very, very high. If you just look at the positions that are getting built, 78.82 lakh call contracts added at the 26,000 strike. This is almost at the money, right? So you see that the call writers are very confident of writing the calls, which means that they don't foresee upsides. The trend of the market seems to be lower. Even put positions got unwound. And like I said, Puneet will talk more about it, but this is quite stunning, really, what happened yesterday. Just the quantum of addition at the money strikes. Okay, now, even the bank Nifty, if we just see, the good part is that the bank Nifty defended the key psychological support near 59,000, and we know it's a heavy weight, right? So therefore, you expect this to be driving the market, if you will. IT alone can't take the weight, and IT2 as the last 2 days has come off. But what we are clearly seeing is rotation into domestic facing themes with regulatory support, which clearly evident yesterday. I mean, as Alex said, you had PSU banks leading the charge. To an extent, real estate came too, but PSU banks leading the charge, clearly showing that whatever is domestic facing is something that is drawing a lot of attention. And guys, I don't know which one of the three are you very excited about, but three key listings today: Meesho, Acres, Vidya Wires. Quite a day at 10 a.m. as well, aside of 9:15.
Yeah, I think that's one of the reasons you're seeing lackluster trade in markets as well, because you have these three and two more IPOs opening up as well. But some of the, those are the ones which are seeing the listing today. Meesho, look at the subscription numbers. Equis 101 times, Meesho 79 times, and Vidya Wires 26 times. All of those details, of course, will be there. I think one of the big factors is, and we spoke about it briefly, this visit from Rick Switzer. This is important because if there is any kind of, I would say, indication that talks are going well, this will be something that the street needs to see. Meanwhile, markets, of course, remain in a short-term corrective phase, but key supports are holding. The PCI is rising and the VIX is stabilizing lower. These are early signs of a potential bounce, but only if crucial levels hold. Overall, the Nifty direction hinges on global cues. Volatility will rise ahead of the Fed meet. Crucial supports at 25,700 to 25,500. Sustaining above 25,700 is now key. Resistance zone 26,000 to 26,200. The Bank Nifty has showed relative resilience, closing flat after a smart recovery, indicating mild positivity with caution. Resistance there is 59,335, 59,450 and 59,630. Support at 58,970, 58,855 and 58,670, amongst other things. Now, before we get to the specific stocks that are on our watch list this morning, let me go across to Puneet, joining in for the F&O setup.
Well, thanks so much for that, and good morning to all three of you. It's been a mood dampener, to say the least, over the last couple of days, where largely, as you rightly highlighted, the Bank Nifty has been consolidating at the 20-day EMA, and that's been the only key level. Apart from that, largely a setup for the F&O queues also quite straightforward, to say the least, because we have seen an increase in open interest, and that's largely because of what we've seen in the expiry yesterday. Post that on the Bank Nifty as well, a key level that we are continuing to monitor is 59,000. So remaining to be that key level that we continue to monitor and speak about as well. Foreign investors had a net short position being built of almost 600 crores, a net of which in trading session yesterday. And the index long continues to be very depressed at just 10% odd. So this is again the most bearish that foreign investors have been in the last 8 to 12 weeks. It was continuing hovering below around 12 to 13%. It slipped even below that right now, and they are maintaining quite a neutral position, both puts and calls. So when you look at the open interest distribution, Neeraj did highlight the 26,000 as the key level for the calls, almost 78 lakh contracts. But yesterday, because of the expiry, you did see a reduction between 25,500 and 25,900 for the puts. So you will start to see an increase again from today at these key levels. That'll be something to watch. And on the levels between 26,100 and 26,400, there has been some reduction in the calls as well. So that key level around 25,900 and 26,000 continues to be the one that traders are continuing to focus on, at least in the near term. In terms of stocks, there's not too much to talk about. Some short build-up across key stocks. Hero MotoCorp is one that I'll continue to watch post that interesting note from UBS yesterday about market share losses. But largely, it's a month where retail sales are more important than the wholesales. So it'll be something that will develop in the next couple of weeks as well. So we'll continue to monitor that. While Keynes Tech was the other one, only limited open interest change, but short covering seen with a 14% up move, and the other rise stocks. These will be the only key plays that we'll continue to monitor, with, of course, additions of IT, defense, and banking, amongst others that we will continue to monitor for trade session today.
Okay. All right. I think one of the stocks that is on my watch list, and it happens to be on our watch list, I think, pretty much every day for the last few days, one way or the other, because the news flow doesn't stop, is IndiGo Aviation. Now, here's the latest. The government has ordered a 10% curtailment of the company's operations. Now, earlier it was 5%. What was announced during market hours is that 5% of their operations during the winter schedule will be curtailed. They have made it now 10%, and the government has made it clear that they expect other airlines to pick up that load of the flights, of the 10% flights that IndiGo will be operating at a fewer number. Our calculations will be about close to 200 flights, which will get impacted. But what does that do with the stock? Sentimentally, it is a negative. But I thought this Citi note was interesting to just put things into perspective. They have maintained a buy on IndiGo, and they've cut the target price to 5,800 from 6,500. They say hitting turbulence due to new FDTL norms. Those are, of course, flight norms. Pencil in higher staff costs as IndiGo will likely induct new pilots. EBITDA cuts sharp as we account for depreciating rupee versus dollar. Operations should normalize over the longer term. Costs could inflate slightly. They maintain a buy given strong demand and IndiGo's sustained market share. No significant shift of flyers to competitors based on current fleet and networks. And we'll get you a more detailed analysis on what these new norms actually mean for IndiGo and the aviation space. But as of now, the question really is that can other airlines pick up those extra flights that they need to? Do they have the capacity and are they ready with it? Remember, this also becomes quite a busy season, so keep that in mind. The second stock on my radar is ICICI Bank. Now, this was known, but it has been put out by the bank as well and could be a sentimental positive. There's a reservation of up to 24 lakh shares for subscription by eligible shareholders in ICICI Prudential AMC's IPO for shareholders of ICICI Bank. So that might see a bit of a positive. The stock did not do well yesterday at all. Meanwhile, AU Small Finance Bank, I thought this was significant. Government has given a nod to increase the FII limit in the bank to 74% from 49%. And the FDI limit in private sector banks is 74%. So this may be useful for the bank. The positive impact is higher foreign capital inflows, allows more global investors to participate, can lead to fresh capital infusion, better institutional shareholding, strategic global partnerships as well. Risks, of course, are ownership dilution concerns, and existing shareholders may face dilution as well.
All right. So, interesting stocks, particularly Interglobe Aviation. I think apart from the stock market, you have travelers that are looking very closely at the schedule. And I'm just hoping that my flight takes off.
Are you flying
IndiGo on the 20th of December? Let's hope it takes off. But Anupam Rasayan, top of my list. This is an acquisition, Jayhawk acquisition. It's set to acquire 100% in Jayhawk Fine Chemicals. It's a US-based company. The amount is $150 million, a little over 1,300 crore or thereabouts. And the deal is funded through internal accruals, debt, and also quasi-equity from a global fund with over $100 billion of AUM. That acquisition is set to be EPS accretive, and it values the deal at 9 times EV to EBITDA. The last available data for Jayhawk was its CY24 revenue, and that stood at $78 million. EBITDA was $15 million. I was asking my colleague Varsha, who tracks the space very closely, what the key benefits for Anupam Rasayan would be, and she listed out a few. Acquisition gives them direct access to the US manufacturing, in that they will have presence there. They will also have immediate access to global customers and end markets. It also adds high-value dianhydrides as well as polyamide intermediates. So these are specialty chemicals that they're operating in, but specifically what? Performance materials and semiconductor-linked portfolio gets a boost. And it also builds their forward integration after TANFAC backward integration. So watch out for this one in trade. It was up as much as 4% in trade yesterday. And by the way, we're also speaking with the management later today, so you should watch out for that interview. PG Electroplast, I've put it on my list. We discussed this yesterday and wondering whether or not there would be a formal apology. Well, PG Electroplast says that they got a written response from HDFC Securities with respect to the HDFC Sky article that we referred to day before yesterday. And HDFC Securities noticed certain unintentional glitches, their words, not mine, in that article. And the article was taken down by HDFC Sky at 9:05 a.m. yesterday. You had the stock price recover quite sharply in trade, but remember, it's still down 45% year to date. HDFC Securities, by the way, offering sincere apologies to PGL and its stakeholders. And finally, GPT Infra Projects is a small development. They've been declared L1 bidder for orders worth 199.2 crore rupees. That order is from the Northeastern Railway, Uttar Pradesh, for the construction of a bridge on one of the rivers there. So it's an interesting update.
Interesting update indeed. I thought the HDFC Sky piece first happened on our channel, wherein the management quite clearly
But he
said
was
this.
right.
He was right.
At that point, it sounded like someone could be angry, saying this is not my company at all. But when he said, I think maybe someone else's report and our name,
Yes.
he was actually right.
No, and when I listened back to it, it was not. I don't think it was said with anger. It was actually bemusement, and like he's like, how can you say that for me? I have net cash.
Yeah, true. So, I mean, but pretty interesting, really, what happened that day. And thankfully, the management came on our channel and said everything. Okay, very quickly, 3 stocks on my list. Swiggy has launched a QIP of up to 10,000 crores. This was known. 10.8% equity was known. Second fundraise within 1 year's 1 month time was also known. What was not known was the pricing and the demand. Now, we know the pricing here. 7% discount to current market price, 5% discount to the IPO price. What about the demand? We learned that the demand is not necessarily the strongest. So let's see how Swiggy reacts today to this IPO pricing, and depending on the absorption of the QIP paper, I think the stock price will move. We learned that not necessarily the strongest. Maybe the markets have to do with it as well, but keep this in mind. Grow in focus as well. Shareholder lock-in period comes to an end today. 14.9 crore shares, or 2% of outstanding shares, free up for trade. That's not small, that's not chump change. And while the stock is off from the highs that it clocked in, it's still up about 34% since listing. So maybe some of those shareholders might want to come in and book their profits, if you will. So let's wait and watch if Grow has some stick today. And Newland Labs is interesting. The management has reiterated medium growth guidance of 18 to 20% in an analyst meet. They said that the recent R&D expansion allows the company to consider new high growth modalities, and the company would chase complex APIs and continue to add new blocks into the future. Nuvama, on its part, one of the analysts who attended that meeting, has forecast an FY25 to 28 expected revenue to PAT CAGR growth, or compounded annual growth rate, of 24% and 49%. 49% profit after tax compounded annual growth rate over 3 years. If Newland manages to achieve that, well, no surprise, it's off from the lows of 11,000, but maybe there could be more to go. Keep this in mind. This is Nuvama's estimate, by the way, not something that the company has said. So, my 3.
Okay, there's so many more on the watch list, and I think we should go through them very quickly. So, we have the full stack in front of you as viewers. On the thumbs up side, Hind Zinc and Vedanta. Silver has hit $60 mark, so you could see a bit of a pop there. I'm not sure why IndiGo is in the green after the government has curtailed flight by 10%. It will be sentimentally negative, to be honest. Yatharth Hospitals, Nuvama has initiated a buy. JSW Cement, Kotak Security initiates a buy with a target price of 135 rupees.
Okay. Adani Enterprises has completed the AGH Sport Aviation acquisition. Godrej Industries, a significant investment has been penciled in, 10,000 crore rupees in Telangana. And watch out for that. AU Small Finance Bank, RBI approval has come through for a higher FDI limit. That detail is missing in that graphic, but then that's what it is. 74% is what it stands at now. Sammaan Capital has gotten CCI approval for a key development. SEPC, GPT Infra have significant order wins as well. Tata Power has commissioned a transmission line.
Yeah, a couple of thumbs down added to that list. Like I said, Grow, but Chronox Lab Services as well. Lock-in opens today, and the Swiggy 10,000 crore QIP. Again, something that I mentioned, but important to highlight that these are the ones that you really want to watch out for. This is the all-encompassing list, so that viewers have a sense of everything that could be reacting in the session today. Well, we slip into a very quick break on that note, but don't go anywhere. Up next, we get in you the top technical ideas, fundamental ideas, what dealing rooms are recommending, and lots more. Stay tuned.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
All right, welcome back. You're watching India Market Open, and it seems like it's going to be a wobbly start to trade, but don't count it out. You saw quite a sharp recovery midway through the session, or just a short while after the start of the session yesterday. Somil Mehta, head of alternate research at Mira Asset Sharekhan, joining in right now to talk to us about the key levels for the benchmark and individual stocks that he likes this morning. Good morning, Somil. Thanks so much for taking the time. And what are the key trends that you're watching for with regard to the benchmark? Do you see that gains could be capped at least in the near term?
Good morning to everyone. The view still remains positive. We've seen a little bit of correction in the last couple of weeks. We have been closing below. We have closed below 20 daily moving average. However, Bank Nifty hasn't closed below crucial levels. Nifty has taken support at the lower end of the Bollinger Band on the daily charts and also has closed above the 40 daily moving average. Market, I'll be expecting market to take support around 25,750, 25,700 and continue the uptrend. The medium term trend still remains positive. So I'm positive on the markets. The only caution here is that we should be focusing more on the large caps and the mid caps and the small caps. So focus more on large caps. Now on Bank Nifty, as I said, it is still above crucial levels. The crucial level would be around 58,850. That will be very crucial. Bank Nifty has been consolidating in a small range, and I'll be expecting this range to break on the upside. Now, the 40 daily moving average is at 58,370. So that will be a very crucial level as well in the medium term outlook. So these are the two levels which I am closely watching. The targets on the upside for Bank Nifty is 60,100 and above that 60,400, 500 would be our next levels. So buy on decline should be the strategy, and we are still trading above crucial levels. So focus more on the large caps.
focus more on the large cap. So therefore, is that going to be where you're looking for your picks this morning?
Absolutely. So from the picks point of view, the stock picks, first one is Titan. Titan has taken support at the 40 daily moving average, consolidating in a very broad range in the last couple of weeks. But I'll be expecting this range to break on the upside. Medium term trend is already on the positive side. I'll be expecting this trend to resume now. Stop loss would be 3,750. Target would be 4,200. The second stock which I've chosen is from the auto pack, which is Ashok Leyland. Very good momentum here, already in the uptrend, taken support at crucial levels at 40 daily moving average as well. So the stop loss would be 155 and the target would be 168.
Somil, good morning, Neeraj here. And I wonder if IndiGo now comes into a range wherein you can think of building up any kind of trading positions on it, if not the entire position.
I think for a trading perspective, I may expect a little bit of bounce here till 5,100, 5,200 levels. But I would not suggest to trade this in the very short term, not even the medium term outlook. Hold on to this position. I'll be expecting, it's a falling knife. Basically, it's a falling knife and we should be avoiding this at this point of time. I'll be expecting targets of around 4,600, 4,650 levels on IndiGo in the medium term outlook. So my suggestion would be to stay away, avoid at this levels. Short term bounce expected till 5,100, 5,200.
Somil, trading idea, but slightly longer term. I'm just wondering whether you would look at the IT pack. And I'm not talking about just the last two sessions. Of course, you saw cuts of about 1% or more for the index yesterday. And it was one of the worst performers, if not the worst sectoral performer. But I'm talking about the last few weeks. In last week, you saw 4 out of 5 sessions in the green, and it's had positive up moves. So would you pick individual names?
Absolutely. I've been tracking TCS and Tech Mahindra, both of them very closely, and I'm bullish on these stocks. Last month was a great month for IT pack, especially TCS and Tech Mahindra. TCS has started forming, in fact, Tech Mahindra has also started forming high tops, high bottom on the weekly and monthly chart. So the higher time frame is already on the up move. Now the medium term trend is positive, but in the very short term, we've seen a sharp correction here for a few of them. But I think this is a buying opportunity, and my picks are definitely TCS and Tech Mahindra. For TCS, the stop loss is around 3,100, around 3,100, and targets would be above 3,500 levels. So this is one of the large caps which I'm picking. Tech Mahindra, again, same thing, high top, high bottom on the weekly, monthly charts. Medium term outlook looks great from here. Stop loss would be around a little deeper, 1,520 would be the stop loss. But the targets on the upside is 1,700 plus in the medium term outlook. Short term, yes, we can see a little bit of pain, but this will be a buying opportunity.
Tech and tech-related businesses is what I want to quiz Mayuresh Joshi as he joins in the conversation as well. Mayuresh, good morning and thank you so much for joining in. Great having you as always. Like I said, we discussed IT with you the other day. I want to discuss the tech-related businesses or tech-enabled businesses and start with Swiggy with you, Mayuresh, because now the pricing for the QIP is known, right? Which is about a 7% discount to the current market price. And we hear that the demand is not necessarily the strongest. Second fundraise in less than 12 months. How are you viewing this? If you are a Swiggy shareholder, would you continue being one or would you swap to something else?
Morning, Neeraj. So I think it's a typical catch-22 situation out here because I think the second fundraise which has happened is primarily and solely based on the fact that they have to aggressively open their dark stores and strengthen their network as well. To a large extent, competition is coming in very, very thick and it's coming in thick and fast. I think Amazon, we are hearing that from a lot of sources has done its pilot runs and might do some element of a launch. We're hearing of Reliance probably going into this space as well. And as competition brews up very, very strongly, and with the bigger guys coming in, I think the kind of network that we'll probably need to compete over the next few quarters with these guys is going to be huge. So to that extent, I think we've always felt valuations were relatively higher. Volumes might still keep on coming through, specifically for the food delivery business, also for the quick commerce business. But at what price? I think if margins still remain a little bit under the pump, the bottom line growth that one really expects to come through, that might not come through at the pace that one really expects. And therefore, our call is still the same. I think we still maintain a neutral view on Swiggy Eternal as we speak. For all these factors put together, for existing shareholders, I think they need to probably map out both competition trends as well as financial performance, specifically Q3, Q4.
Just to add to the point that Mayuresh is making, there is a comment from Albinder Dhinsa of Blinkit saying that the industry may be approaching a reset. And he has said this in, I think, an interview he did with Bloomberg, if I'm not mistaken, where he's saying that there could be a shakeout coming in.
Yeah, I remember that word. Yeah.
Shakeout was the word, yeah. So I thought that was interesting at a timing, of course. The timing coincides with Swiggy, a competitor, raising money, but nevertheless not putting two and two together. But Blinkit, who is, some would say, the leader of the pack. Not some would say, it's very clearly the leader of the pack. Saying a shakeout is coming means that not everyone will survive.
Yeah, I mean, if you have people with the kind of depth of pocket coming into the space, they can just easily blow people out of the water. If the ammunition is money, right, and the ability to deploy quickly, then what are you talking about? There is no other moat.
Or as some people say, that at some point of time, the market will get tired of giving them money to fund future businesses without current profits.
Yeah, but you know, if Amazon wanted to get into this game in such a big way, they would have done it so far.
There's no reason why they can't right now, is what I'm saying. Entry barriers don't exist.
Yeah, that's true. Fastest, quickest, cheapest. That's all we want as consumers. All right. So that's a quick discussion on the whole quick commerce space. Eternal, Swiggy in focus as well. But so are steel stocks, to be honest, because this note from Jefferies is interesting and noteworthy. They believe falling Asian and Indian steel prices could put pressure on near-term margins. However, they do maintain buy ratings on Tata Steel and JSW Steel. In fact, let me go across to Sharath for more details.
Tamanna, mixed cues are coming in for the metal space, and do remember that Fed's FOMC meeting is also there today. So global metal prices has an inverse relation with dollar as well. Interestingly, Jefferies has stated that the steel pricing pressure is still there, but they are still constructive. Already we have seen the metals, especially the ferrous names, are doing well in the medium-term technical setup, and they've stated that the recent drop in Asian and the Indian steel prices might be a drag on the margins in the short term. Also, overall, they are remaining positive as the Asian spreads are still near the 15-year lows, and they should recover as well, and a potential reinstatement can happen, and there is an overhang also on the expected safeguard anti-dumping duty which is expected to kick in for the sector. But overall, on a current basis, there has been a reduction in the EBITDA numbers for the next 3 years. For JSW Steel, it's a downtick of 4 to 15%, and for Tata Steel, it's at 2 to 6%. Minor target price rate cuts are also coming in. Tata Steel maintained by, but the target price is at 200 from 210, and JSW Steel also maintained by. Target price is cut from 1400 to 1300 rupees per share. So there might be a technical pause in the ferrous players, both the macro space as well as from the broking houses.
Okay. All right. So steel, there's quite interesting comments coming through there, right, about the trends in the underlying commodity. Mayuresh, you want to comment on that? What do you think about, and also beyond just the commodity, there's significant developments for JSW Steel to talk about as well, right? So in the context of everything that we know so far, what's the view on ferrous?
Morning, Alex.
Morning.
No, so two things. One, I think in terms of expectations of the demand-supply dynamics, the Indian demand still remains relatively stronger compared to the rest of the globe. And therefore, I think ferrous companies specifically providing local operations are going to still have a reasonable amount of volume growth. When it probably comes to pricing and the operating performance, steel prices have remained very, very volatile, and they would continue remaining so, both HRC and CRC prices over the next couple of quarters, to say the least. But input costs have stabilized to a large extent. The expectation in terms of more wine allocations, that might start aiding the backward integration process and also the margin performance as we head into FY27 for a whole host of these ferrous players. Which brings us to the third aspect in terms of global prices. Now, that is beyond control of local steel manufacturers, because how China's demand-supply dynamics play out, of the globe probably plays out, will play on the LME. However, in my opinion, again, I think a large part of what is expected to be done on the macro front, whether it's safeguard duties to protect the industries to a large extent from dumping, and some element of hope post the tariff wars and the rationalization thereof of demand coming back slowly and steadily as we head into the second of the next financial year, might mean LME prices start coming back. In that context, along with what JSW Steel has recently announced, with a large part of the debt reduction happening on their balance sheet, JSW Steel within the ferrous pack is something that we still believe can report reasonable and stable earnings growth, and therefore anybody holding JSW Steel within the ferrous pack should continue.
All right, quick view, Saumil, on the metal pack. Would it be the ferrous players or would it be the non-ferrous players on the technicals?
I think it is more stock specific. I'll be bullish on Tata Steel, Hindalco, Hindustan Zinc. Hindalco would be my preferred pick here. It is still trading above the crucial levels, moving averages. On the medium term outlook as well, in the monthly and weekly charts, it's been consolidating in a very broad range, taking support at upward sloping trend line. A great setup. So Hindalco would be my preferred pick here. Stop loss would be around 795 and my targets would be well above 860. But if we talk about Tata Steel has been correcting a little bit. I'm a little cautious here because it has closed below the 200 daily moving average. So I'll stay away for a little while here till the time it does not base out around these levels. Crucial supports around 150, 152 levels. I'll revisit at that time.
Okay. The other note that caught my eye is what Kotak Securities is saying on LG Electronics. And LG Electronics has had quite a boom after its listing, about 40% up from its issue price right now. But Kotak Securities has initiated a reduce with a target price of 1600, which is where it is, to be honest. It says double-digit industry growth led by volumes and premiumization. So this is the thing. Everything that they're saying about it, if you look at the commentary, is not negative at all. They're saying it has strong parentage and market leadership, which has created a durable moat around the company. They see a 10% growth in revenue, 11% in EBITDA, and 10% increase in earnings per share CAGR over FY25 to 28. But they believe the stock is fairly valued for all of this. And Mayuresh, this is something that I want to ask you about on LG, because we've spoken about it before. If you really want to, the stock also rose at a time of those GST cuts. It was timely, it was working well for the company. But do you think all of the positives are now in the price?
Morning, Tamanna. More or less, yes. And again, I think from a consumer durable space, I think the long-term structural drivers still remain in place. However, in my opinion, again, the kind of pricing and then the kind of product mix is something that a lot of their competitors also have in place. And therefore, very little to differentiate in terms of core performance, in terms of buying dynamics from an end consumer perspective. I'll give you a very interesting perspective, Tamanna. In fact, over the weekend, I had gone to a lot of local shops, including the likes of Chroma and otherwise. And I was speaking to the owners and the dealers and the salesperson over there. It came out in a very common manner that when customers come in and when walk-ins probably happen, it's not necessarily the brand any longer. I think people have become price sensitive, and even if they want to buy consumer durables, they're very, very flexible where pricing comes in their favor. And therefore, I think it's a very, very competitive space. We still carry a neutral view as I speak.
It's actually a good point. A lot of people willing to go out and buy televisions that are significantly cheaper, even if they're not necessarily the Sonys and the LGs of the world, I guess the thinking is that you will replace white goods faster. The smartphone has changed the way that people utilize tech. All right, let's talk about more stocks that you should watch out for and what the chatter from the dealing room is. Somit Sarkar joining in with our regular feature, Heard on the Street. Somit, good morning to you. Are there more stocks on your list today?
Good morning, Alex. If you look at the index, it has been under pressure for the last couple of sessions. There has been selling pressure across the board, and dealers are indicating that the selling pressure is largely emerging from PMS, AIF and HNI categories, and these are the categories which own the mid and small cap largely. Now, dealers have also indicated that there are redemption pressures coming in on the PMS book, and that's the reason this selling is happening. And because of the intense or a large selling pressure that we have seen in selected a few mid caps, the MTF book has also come under pressure. So that is also one of the reasons. Now, a couple of reasons that dealers have highlighted is that a delay in India-US trade deal and INR depreciation or rupee depreciation is something that has led to this negative sentiment across the market. However, dealers are expecting some reversal to happen given the fact that yesterday the Nifty expiry and weekly expiry has been done through. So they're expecting some reversal in trade to happen today or during this week or the remaining part of this week. Couple of stocks that dealers have highlighted in trade PI industries is something that they are seeing buy flows on the large HNI desk just because the valuations are quite attractive at the current levels. So we could see some buy flows coming in. And Keynes Tech was one counter that was gaining in trade yesterday, but this was largely because the stock was under FNO ban. So some short recovery, short covering was happening, and post that the stock has again come out of the FNO ban, and there was some buy flows in DI desk because the negatives were largely priced in at lower level. In fact, the stock was below 3,900 level at one point of time yesterday. And delivery was a part of our segment on December 8th when we did indicate that there were DIF flows at the lower levels. The stock was down that time. But yesterday in trade, we saw the stock jump nearly around 5% in trade on the back of these flows.
Well, so many khabar confirms happen almost every single day. Isn't surprising. Somit, just one quick follow-up though. Of all the stocks that you've gauged from the dealing rooms, which is the one where the dealers or your sources were the most confident about?
Well, PI Industries was one counter that they have highlighted that at current valuations the stock looks quite cheap. So there could buy flows could continue in this counter.
Interesting. Thanks a lot for that, Somit. And Somil, I wonder if PI Industries features or shows on the charts any kind of accumulation, any kind of trading probabilities as well. It may not necessarily be a trading position that Somit's sources are putting in, but I wonder if there is a trade here.
For PI Industries, the trend is down. It's been struggling below 20-40 daily moving average. It's been trading below 200 daily moving average since August 2025. So clearly on the downtrend, monthly, weekly, daily charts. A medium-term trend remains negative. However, in the very short term, yes, there is very crucial supports around 3,200, 3,250 levels, and I'll be expecting a short-term bounce till 3,500. But I would not suggest a medium-term position on this. Short-term trade can be executed, but not in the medium term. The stop loss needs to be very strict around 3,250.
I'm just wondering how you're looking at a Keynes Tech today, Somil. Some sharp recovery there. We spoke about PG Electro also. Do you think more legs to the Keynes Tech recovery, or was this just, in a sense, a dead cat bounce, after it got beaten down?
Overall, in the medium term, yes, it's a dead cat bounce, but in the very short term, it's very exciting because it has taken support at 3,700, which is a very crucial support. Multiple times the stock has taken support around those levels and again started the move up. So in the short term, yes, the stock can go up till 4,800, 4,820, and if it's sustained at those levels, then 5,500 are on the cards. But at this point of time, short-term trade only because and with very strict stop losses because it's a falling knife. Just one day bounce does not define a short-term trend or a shorterm reversal. But yes, on the upside, I'll be expecting it to go up till at least 4,800.
Would you exit today if there is an opportunity?
I would exit at 4,800 for sure, because medium-term trend is down. So if I have a position, I would exit at 4,800.
How are you feeling, Mayuresh, about AU Small Finance Bank? They have some, easing of norms in terms of FDI coming in, and the entire small finance bank space as well. There's been quite a bit of action there. Fino Payments had good news, but it didn't quite work out for it in terms of the stock price movement. How are you looking at AU Small Finance?
So, Tamanna, generally for the space, including the like of an EU Finance, Small Finance Bank, I think we would ideally like to watch out Q3 numbers and the commentaries thereof. I think for the banking industry as a whole, post the interest rate cut cycle, what you're really looking at now is going to be a test of the industry as a whole in terms of advances growth, in terms of how deposit accretion is probably happening, asset quality. And we're still hearing that certain segments, specifically MSMEs, SMEs, where there was some hope a couple of quarters back, they are showing signs of stagnation as we speak. A lot of the lower rung banks have become very, very aggressive in terms of unsecured loans. And that is what we like to watch out for as well, because that might suddenly start showing a bump up in terms of some elements of asset quality or asset liability mismatches as we head into Q4 and the first half of the next financial year. So things are becoming stable, but we want to just have some element of conformity coming through in Q3 numbers.
Okay. All right, so that's the view on AU Small Finance Bank. Keep it on your radar today. But let's talk about the fertilizer space. I was reading a headline this morning that spoke about urea imports rising quite considerably. But the thing is, Coromandel believes that favorable government policies are boosting fertilizer production right here in India. And that's according to the Chief Executive Officer of the company, Sankara Subramanian. He spoke with my colleague Rishabh Bhatnagar, and he said that all urea and phosphatic plants are running at full capacity. And in fact, he also spoke about the fact that more plants are on their way. This is an exclusive chat. Listen in as we slip into a quick break.
On all fronts, we are operating the plant at 100% capacity, whether it's urea and phosphatics, and we continue to see this positive momentum with the favorable policies from the government. Production will continue to remain robust in the coming years as well.
Sir, in terms of urea production as well, you're seeing a lot of import value. We're seeing a lot of imports rise this particular year, but there are production and contracts also lined up. Talk to us about urea in specific.
So urea capacity has gone up in the recent past. As you know, the government has converted old plants, and we have added capacity close to 7 million tons in the last few years. And that has increased the production, and we are also expecting another 2 more plants to come in.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
All right, welcome back. We're just a few minutes away from their pre-open session. The implied is showing another weak start. Now, is this an opportunity to buy today, or should you sit on the sidelines? I suppose that is the question, because yesterday was quite a painful session. There was some recovery from the lows, but not quite enough. What's going to be in action today? I mean, the aviation space is still going to see some action. I would watch out for a SpiceJet as well. We've been talking about IndiGo, 10% cut, but other airlines are supposed to come in and fill in that gap. SpiceJet is the only listed entity who can benefit from it if they are able to. I would look out for steel stocks. Jeffrey sees some weakness over there, but is there going to be some improvement? Among other things, I think we should pull up Anupam Rasayan as well. And I want to get a view. There's an acquisition that they have announced. I want to get a view from both Mayuresh and Somil on Anupam Rasayan. Mayuresh, I'll come to you first. And on how you are liking the announcement that has made, and what are you thinking about Anupam Rasayan right now?
So, Taman, I think a very positive development because what they have done the acquisition for, if I'm not mistaken, it's $150 million or dollars, where if you go by the existing run rate, 2 times of the top line and almost 10 times in terms of EBITDA, which seems to be fair. What they're getting in return is almost 3 million square feet of operational plants in the US. And the kind of areas that the target company is probably doing a lot of work. The chemistries are definitely a little bit unique in terms of what Anupam does. Obviously, there are some overlapping technologies or chemistries that are at work, but the newer technologies is something that will open up the market, and a lot of synergies can built in terms of both the core US market, where a large part of the revenue probably comes through, but also diversification that Anupam is probably looking at. So yeah, in my opinion, I think a very positive development.
You know, the interesting thing, one, that Anupam is rumored to be in the midst of another large acquisition, part one. But part two, I wonder if multiple other chemical companies or pharmaceutical companies do this. We know pharma companies are setting up shop afresh, greenfield. But I wonder if multiple chemical companies make small tuck-in acquisitions in the US to be able to address that major market. You do not... I mean, one is you wait for the trade deal to happen at some point of time and you don't know the terms. 2 is to be proactive, make a tuck-in acquisition and then open up that market. Yeah. I wonder if this is Anupam's end game right now with this.
Yeah, and it makes sense. Makes sense. Possibly many more that will do that, because you can't wait around, and it's one of 2 things, and we spoke about it. Either the trade deal happens or the Supreme Court says the trade tariffs don't make sense in the first place. So before that, you might as well...
The US Supreme Court, you mean?
Yeah, the US Supreme
yeah.
Court. And so you might as well set yourself up in any case. Okay, first pre-open rates in. But Anupam Rasayan is one of the stocks to watch. In fact, Varsha joining us with a list of other stocks that should be on your radar this morning.
Good morning. Thank you so much. So, just a little bit on Anupam Rasayan. The one benefit that the company will have is they are going to enter into forward integration. That means high margin, high value products. And with Tanfac acquisition that they did a few years ago, that was a backward integration, and now entering into forward integration. So, they are entering into a full supply chain, which is the benefit. And also this give access to the US market as well, and of course the global market. Well, the other stocks which are in focus is one is GPT Infra Projects, wherein they've secured an order of rupees 199 crore from Northeastern Railway in Gorakhpur, and the order is to construct a bridge substructure. Then on the list is Godrej Industries and Godrej Agro, wherein the group itself is going to invest 10,000 crores in Telangana, and Godrej Jersey have signed MOU with Telangana government to invest 150 crore, and the MOU is for setting up dairy processing unit. So these are three stocks which will be on radar as of today.
Right, thanks so much, Varsha, for that, and certainly watch out for Anupam Rasayan. We're joined, and the pre-open rates starting to flash on your screen. Chandan Taparia, Head of Technical and Derivative Research at Motilal Oswal. Chandan, thanks so much, as always, for taking the time. Very good morning to you. And what are the initial signs that you're seeing? Do you anticipate that there could be heightened volatility similar to what we saw in trade yesterday?
Good morning. Thanks for having me. So yes, we witnessed volatile move on the last trading session. However, we need to keep a couple of things in mind. First, the market is finding pressure because of weakening rupee, selling from the FIs, and mixed cues from the global market. Yesterday it turned volatile also due to its weekly expiry of Nifty. But I believe somehow support-based buying is intact in the market. However, Nifty is not expecting further decline, while selective sector and stocks may see more pressure comparatively. So I believe the Nifty is likely to hold the key support of 25,700, 750. Yesterday it respected the same, and there is a 50-day exponential moving average. So because of that, it might see a bounce towards 26,000 mark. But we need to keep in mind that setup of the indices are likely to be mixed, where declines could be both, but upside seems to be kept as of now.
Okay, and what about individual counters that you're looking at? And specifically, you haven't mentioned the Nifty Bank. So let me ask you about that as well. And individual counters that you would look at?
So Bank Nifty is comparatively resilient, and it has been outperforming the broader market from last couple of weeks, couple of months. The good part is that supports are intact. It is respecting well above its rising support trend line. However, it remained subdued, but supports are intact, and I believe till it holds above 58,500, it can again reclaim to 59,750 to 60,000. And selective private banks or PSU might see support-based buying from lower levels. Now, talking about stock-specific idea, first that is buy on Policy Bazaar. This counter is holding well, in fact doing well from last 3 trading sessions, especially when market is falling down. So looking for a fresh leg of rally, recommending to buy with support of 1915 for an upside move towards 2045. Second trading idea, that is buy on L&T Finance. Selective financial counters are doing well, and this stock has been consolidating. A small follow-up could lead to the fresh breakout. So recommending to buy with support below 301 for an upside target towards 315, 318 levels.
Okay, well, those are some ideas. And then, of course, there are a bunch of stocks which will be moving around. So, let's mark Swiggy. Let's mark Grow, let's mark IndiGo, let's mark Anupam Rasayan, let's mark Newland Labs. These are 4 or 5 which come top of mind in terms of news flow. For now, we do not have any positive reactions. Maybe Newland might, or even Newland doesn't. Anupam might. It's an interesting acquisition and opens up the market. So, wonder if Anupam Rasayan is in the green. Well, marginally at that, but not otherwise. Now, Grow is the other interesting one. So keep an eye out for that one too. Should be an interesting stock to monitor, considering that a flow of nearly, a 2% of equity odd coming into the market, 15 odd crore shares. They are all in the money. They might want to book the money or book the profits in a market like this. So you might see some pressure on the stock today. But the big brokerage call is on a healthcare stock. Nuvama has a note on Yatharth Hospital, and I think I remember somebody else putting out a note about 3 weeks back as well. So healthcare is firmly in focus. But Sharad Johnson to give us a sense of why is it that Nuvama is constructive on Yatharth at the current valuations. Sharad, good morning.
Good morning, Neeraj. You are right. Yatharth is actually becoming a favorite of the brokerages, and it's domestic facing as well. You had pointed out earlier, Nuvama has given an initiate buy rating and the target price is set at 920 odd rupees. That's a significant upside potential. That's roughly, you could say, 15 to 20% from the current market price. And they've stated that it's an emerging hospital player in the northern Indian segment. The company itself is on a high growth plan going ahead, and they are doubling their bed capacity to fuel the revenue growth. A significant headroom is expected for the average revenue per bed, and the occupancy levels, that's also expected to scale up further. That means there's a bullishness coming in the operational parameters of this company, and the margins that's slated to revive going ahead, and a strong balance sheet will also aid a robust expansion coming in. Interestingly, they have pointed out one important line which is very important, is there's an improving governance happening which is boding well for the stock. It's a very qualitative aspect, but nevertheless the important line picked out from the broking house.
Interesting. Yatharth Hospital. Interestingly, the couple of IPOs that are in focus, and Nephro Watch? What is the name of the company? Now, let me pull that up. Both of those two counters are in the healthcare space. Mayuresh, if you've been looking at some of these primary issuances, have you looked at these two, the hospital chain and the one that focuses on kidneys?
No, Alex, I have not focused on the recent ones, but I think we've remained optimistic in this space for a long time, and we continue remaining so, because the thesis remains very simple, that India probably needs more hospital beds, more organized players coming in, and they are doing the right things. They're expanding into tier 2, tier 3 cities. They're adopting a very asset-light mode. And therefore, I think leverage is not increasing on the balance sheets. Bed capacity is expected to go significantly higher because of the arrangements that they're doing with local players. I think the scale-up happens faster in terms of even the brownfield part that is probably required. And the ROCs probably inch up as well. So our take is that interesting space, the new government norms, regulations that have come through, some positive implications on GST might also aid the balance sheets.
Okay, since we're talking about the primary market, looking at some of the listings today, Mayuresh, are you tracking what's happening with Meesho?
Oh, absolutely. Tamanna would like to see how it opens up at 10 o'clock.
Yeah.
But that's about it.
Is that something that you got into or invested in?
No, that's what I said. That's about it. I think we'd like to look at the price and probably take a call.
What? But that's about it means what? After it opens up, would you look at it? I mean, it's supposed to be the Desi Amazon, isn't it? Low-cost Desi Amazon, to put it very, very simply.
होने दीजिए, but हम भाव देखेंगे, भाव भगवान.
Arey, wow, that's this morning. Chandan, grow. Actually, grow, no, not enough data. I will come to you on Swiggy. Swiggy, if there's some pressure now with the floor price that we've seen, would you look at it positively to pick up? How would you see a Cane's Tech? Cane's Tech, I want to just see pre-open. It was buzzing in the pre-open session when we started off. Let's see how it's closed in the pre-open session. But Cane's Tech and Swiggy, two stocks that I'd like Chandan's view on.
Yeah, Tamanna. So before you talk about Meesho, the same question was asked at home in the morning. So my interview already taken. I said opening would be positive, but I don't know. So you can see that Desi Amazon is there. So I think Mayuresh is having the same view, and that's why he's laughing and emotionally invested in the counter. But yes, talking about Cane's technology and all, the trend is slightly negative. It has been making lower top, lower bottom. However, on the last trading session, some recovery was seen. But as of now, it's very tough to see whether the bottom is temporary or the short term. But as of now, with support of 4,300, looking for a bounce towards 4,550 kind of level, because we have seen huge short position and some short covering trigger could be there in the counter.
Okay, so that's on Cane's Tech as well as Swiggy. I don't know if you're tracking an Anupam Rasayan, Chandan?
Yeah, so we are tracking this. In fact, some support-based buying is clearly visible in the counter. As of now, the way structure is being formed, 1275, 1280 is an immediate support, and some consolidation breakout could take it towards 1350 kind of levels.
Okay, well, you know, the other thing is, of course, what's happening with precious metals, right? And quite a stunning move that is there in all of these. So.
All that glitters is silver.
Yeah, that thing has
changed, at least over the last couple of weeks.
Yeah, all that glitters brighter is silver.
above 60 fresh record, so doing on very, very well, has outpaced gold as well, so that's quite stunning really. And therefore, Hindustan Zinc, Vedanta and a few other stocks come into focus. Guys, either of you have done the math around the EBITDA contributions, but it's been stunning really what this silver rise would mean for both Hindustan Zinc as well as Vedanta. And for Vedanta, incidentally, the other piece is what aluminum is doing on the US bourses, and therefore the gains that come into Vedanta from there too. So I think there is a classic cocktail brewing of some pretty strong potent gains to them.
Yeah, so it's 20 to 25% of the company's revenue, right, for silver, and 35 to 40% of the EBITDA. So that's why you're seeing that kind of an impact for Hindustan Zinc, at least. And for Vedanta, which is a parent company, it has 62% stake in HinZinc, which contributes 40% to Vedanta's EBITDA. So either way, it's good for them. So you might have a bit of a bump up there on metal prices. I don't know to what extent that is a play though. Mayuresh, you want to come in here on the silver story?
No, so it will play out, but I think it is a mix, right? So even if you look at IndiGo's balance sheet and the contribution of silver, I think it is restricted. I mean, I don't know the exact figure, I can't recollect that, but it's not a major contributor in terms of the EBIT performance itself. So I think it's positively, I mean, it's sentimentally positive, but it does not become a game changer for IndiGo, in my opinion.
Okay, Chandan, let me ask you on HinZinc on the charts, and if at all you have, I know that you track prices beyond the stock market, so if you have a view on silver, that would be great.
Yeah, so I'm quite positive on the gold and silver. In fact, many times I've discussed about the same. In fact, personally, I'm invested in the same through physical and through some ETF bonds, mutual funds, same with the gold and silver, and I think prices are likely to move up. In fact, we are having the target to us 2,25,000, 2,35,000 in the silver. In fact, expecting 10 to 15% more surge in the gold as well. Talking about companies which are from the equity market, which can be the proxy of the gold, silver, copper. So Hindustan Copper is one counter which we are keeping on radar, suggesting from last couple of days with the view that those who believe that gold and silver can do well and want to play with the equity market, I think these are the couple of names. So Hindustan Copper is on radar with support of 340. We are looking for 400, 420 kind of level. Hindustan Zinc also we are tracking it closely. However, it has not performed well, but I think supports are intact until it holds above 470. Any declines could be bought towards 520, 530 kind of level. So Hindustan Zinc, Hindustan Copper are positive, and apart from that, gold is likely to glitter and silver is likely to shine more going forward.
What is the view on Vedanta again, Chandan?
Yeah, so talking about Vedanta, view is positive to range bound. However, that has not performed well. But the good part is that every decline is being bought. The counter is holding well above its 50-day exponential moving average. Major support is near 495. Any decline could be bought for a positional target towards 540, 555.
At least as things stand right now, bucking the initial trend that showcased a negative start. But I'm wondering, Chandan, if beyond everything that we've spoken about so far, you have one stock that you've spotted in the pre-open session that seems to suggest that it's going to have a good Wednesday.
So I think we need to focus on the few name, and I think Policy Bazaar is one idea which I've recommended here. So we have to be with the safety comparatively. However, if market recovers, many beaten down counter might see some recovery. But I'll be with the strength with the view of margin of safety. So Policy Bazaar will be one idea where we are looking for 3 to 5% kind of momentum going forward.
It's very interesting. PB FinTech is coming into the conversation and the lists of many. And I take notice when Chandan says about the 3 to 5% uptick in PB FinTech possible. So keep an eye out for that. 20 seconds to go. We are, less than 15 hours away from the Fed decision. Very likely that the global markets will not be moving too much ahead of what looks like a potential rate cut, but who knows? There could be a surprise. So don't expect fireworks, if you will, in today's session. But here's how we're starting off. Absolutely flat. Let me not say we are in the green because this could change anytime. It's just 0.07% for the Sensex, the Nifty, two similar moves. IT, is it? Oh yes, it is bouncing back after a couple of days of stick the previous couple of days, that is. Keep that in mind. Yesterday was a slightly different day, but up in the green. Mid caps about 0.2%. Small cap index coming up on the screen. Absolutely flat. So no big moves for the headline indices. Let's see if individual stocks are reacting. 50-50, no, more green than red, which is actually a good sign. Let's start with the gainers. Hindalco, well, metals, no surprise there. Hindalco up 1%. There is strength in Grasim today. Mahindra & Mahindra, Max Health. Adani Ports is in the green as well. The recent news flow around Adani Ports has been pretty constructive. Keep that in mind. Bajaj Finserv, JioFin, Wipro are some of the others. What is losing out? Airtel 1% lower. JSW Steel 1% lower. I believe there was some news flow around it. Maybe a brokerage note, I may be mistaken. Titan, Bajaj Finance, Eternal, second day on a trot, is in the red. And more importantly, Interglobe Aviation refuses to budge. Now, this is a big development that has happened. 10% of IndiGo's capacity curtailed. And while we'll do a broader analysis on this, keep in mind, because the stock has fallen so much already, maybe the reaction is not exaggerated. But otherwise, I would have thought that it could be a fairly sharp dip on IndiGo. For now, 1%. Let's see how it fares during the course of the day.
Part of the reason could be that the cut is on what they were allotted for the winter schedule. They were anyway flying lower. So we'll show you the math on that. Maybe on balance, it won't be that bad for IndiGo. And nevertheless, sentimentally, it is a negative because that regulatory eye is on them so sharply right now. Let's pull up Nifty contributors for you very quickly. It's quite a tepid start to the morning, but at least we're in the green. That's very different from what the implied open was indicating. RIL pulling up the market to some extent. Bharti showing some pressure on the lower side. Bajaj Finance, Interglobe as well. ICICI Bank doing okay, and we told you that allocation that investors will get in the AMC, ICICI Pro AMC IPO will be interesting because that's a hot one to watch out for, and then you don't have to go through the whole oversubscription route. Broader markets at this point, let's just look at what's happening there very quickly. This Wednesday morning, flat on the mid-cap 150, but in the green. We've seen worse openings than this in the last couple of days. Keep that in mind. Likewise for the small cap 250, the heat map will give you a picture of what's working and what's not this morning. So we'll pull up the heat map, and this is not a bad screen at all. Pretty much all in the green, apart from consumer durables, which is about 0.25% down. I suspect you might have LG Electronics on that, and we'll see when we come to individual stocks. There's a reduce initiation from Kotak Securities on the stock. Nifty Auto, Nifty Media, FMCG, Energy, all doing okay. Middle of the road kind of a situation, but and we told you this in when we talked about the factors this morning, the technical setup also seeming enough for a bounce back. Will this sustain through the day becomes the question. Let's look at some of the individual stocks, and those on our watch list, those have news flows and whether the market is reacting accordingly. Anupam Rasayan as the first one on our radar. Acquisition announcement has come in 2.5% up. Grow, I want to look at what's happening with Grow. Their lock-in ends, and then you are likely to see some pressure there because then your anchor investors can exit 3.5% down. AU Small Finance Bank, some of their norms have eased, so you will have more passive flows coming in. 2.5% up on the stock. That was on our watch list as well. I want to look at the twin pairing of the listed airlines. Interglobe on one hand, a curtail of their flights, SpiceJet on the other hand. Now, 4.5% on the stock. You have to go back and do the math on whether SpiceJet has the capacity to take up some of those flights that Interglobe has cancelled. But nevertheless, SpiceJet has been making the most of this because it's the only listed player among other airlines. 4.5% up. Yatharth Hospitals, in buy initiation on it by a brokerage house. No, it's not 10% flights curtailed. It's a buy initiation, so that's about 0.5% up. LG Electronics. I want to see what's happening to LG Electronics. It's not like Kotak has any problem or sees any problem with the company. They're just saying that the valuations do not see too much growth. So 0.5% down on that stock. Swiggy, let me look at Swiggy. Their QIP numbers have come in at a discount, but clearly there's appetite for it. 1.5% up that you can see. I want to look at Hindustan Zinc. Silver is at a record high. This was one of the gainers, 3.5% up. And let's look at Tube Investments as well. Big block deal in Tube Investments. And that impact is definitely positive, 3.5% up. So it's not as bad as the pre-open was indicating, Alex. Maybe some signs of life this Wednesday morning.
Certainly, and green on the screen, always pleasant to look at. Even though the gains are relatively narrow at this point, 0.1%, and that Nifty 50 move can go very quickly either way. So keep a watch on that. In the meanwhile, let's talk about a few more counters beyond what Tamanna has already highlighted for you. And from the broader markets, Dr. Agarwal's healthcare is doing particularly well this morning, up about 4.3%, one of the top gainers from the broader markets. Jyoti CNC, another one that's doing reasonably well, up close to 4% or thereabouts. You have JSW Energy, that's up about 3.5% or so. Aarti Limited, Godfrey Phillips, AU Small Finance Bank, all gaining ground. Among the losing end, you have Tata Teleservices, which was quite active in trade yesterday, that's losing ground today, down about 3.7% or so, or 3.6%. Eris Life, again another counter that was in focus and that saw considerable activity in trade yesterday, that is on the losing end today. And Triveni Engineering among the top losers. But you also have Paytm that's losing about 2.2%, and you should keep an eye on that one as well. Chandan, from the stocks that I've mentioned, and there are quite a few, and by the way, there's also IRB Infra, may not be the biggest mover, but it's had a 16% uptick in toll collections. That's the latest update that it shared, and the stock was up. But anything that stood out to you from the list that I just read out, Chandan?
So I think market is going to be very selective. You mentioned about Paytm, which might see some corrective move where it is the key support near 1250, 1240 kind of level before it gets buying interest. I think gold and silver might give the positive stance to Hindustan Zinc, which can continue to hold the buying interest with support near 500. Now it can head towards 520 kind of level. So I think we have to be very selective, and the market will be very counter and sector specific in this scenario where Nifty will be in a broader range.
You saw pretty wide moves on either end for the realty index in the recent past, right? And Mayuresh, the question to you at this juncture, are you convinced by some of the lead indicators that you're seeing on demand for housing with the interest rates where they are and the possibility of another rate cut? Which counter would you say benefits the most from this?
No, so I think the industry is consolidating, Alex, and you can see that from numbers, right? Though I think the kind of sales numbers that a lot of developers have put forth, I think they'll achieve that very easily in this financial year. I think the new projects that are coming up, specifically in terms of the new pre-sales velocity, is going to consolidate. At the same time, certain pockets, you are certainly seeing signs of inventory levels building up. And therefore, the strategy that developers have adopted over the last few years have been doing JDAs, have a very asset-light approach where leverage does not increase on the balance sheet. And therefore, I think they're now really, really picky and choosy in terms of launching new projects. Having said that, the expectations in terms of the base that has now got created in terms of both the top line growth, in terms of the collections that they've been doing so far, and the other factors at play, actually it should be a reasonable growth in terms of developers and real estate as a space included. So a couple of counters, as I said, something that keep on holding in our global portfolios is DLF and Phoenix Mills, because our belief is DLF is doing the right things in areas where demand still remains strong and sticky, and numbers in terms of collections as per the accounting procedures will still continue remaining relatively better off. Similarly for Phoenix, I think the kind of expansions that they've probably done, both in terms of the annuity spaces, the mall development that you're speaking about, and the hotels as well, the keys that they're probably adding, the capex that is continuing to grow at a calibrated pace, will mean numbers improve, the fit outs are strong, and the escalations on those fit outs also seem to be very, very strong and stable. So I think out of the space, a couple of stocks that continue.
Okay. Mayuresh, thanks so much for joining in. Thank you so much, Chandan, for joining in today as well. Just want to talk very quickly about what's happening with Keynes Tech, because we've been following the story. There's a Kotak Securities note which has maintained to reduce and cut the target price to 4150 from 6180. So a steep cut over there. They say, and this is why perhaps we will see a bit more pressure today. They say that certain aspects with respect to intangible accounting and elevated working capital still remain unclear. FY 2026 guidance is at risk. They believe generation of positive OCF in that's operational cash flow in FY26, and improvement in internal controls and timely execution of PCB and OSAT expansion will be crucial. You might continue to see some pain in this counter, and really it's an uphill task right now for the company to convince the street that all is well. They've come on NDTV Profit, we've spoken to them extensively, they had a conference call, they then said that we're going to fix things with our auditors, and they said, okay, that's going to take some time. Whatever it may be, their conversation right now is whatever has happened in terms of the definition of working capital in their balance sheet and the problems that analysts had was an oversight from their part. But the street doesn't seem to be buying it yet. So Keynes Tech might see some more swings today. Just watch out for it. Nevertheless, Manish Sonthalia joining in this morning, Director and Chief Investment Officer at MK Investment Managers. Manish, great to have you on NDTV Profit. As always, we love our conversations with you. This is the time of the year where we do a bit of a recap of the year that's gone by and what we're looking forward to. So let's start with the recap bit. Survival, resilience, if you had to really describe what the Indian markets have been through. And at the end of it, everyone wondering why they haven't made as much money as they thought they would.
The headline numbers seem to suggest that we are closer to or just about at the all-time highs. So, no need for extreme pessimism. But if you look deeper into the market dynamics, bulk of the market is still bleeding very badly. And that is why you really don't have that sort of a euphoria which is associated with all-time highs in the market. Very few stocks have basically made it. The 10, 12 large cap stocks are basically at, leading the market from the front. So headline numbers don't really seem to suggest the true picture of the market. And I think going forward, things look pretty decent from these levels. No need to be bearish, according to me. Earnings pickup will happen both in the broader markets as well as the headline numbers, and one needs to be selective. I think one thing which is going to happen is basically sector rotation. The high-flying sectors of the last 1 year, or last 2 years, which is roads, railways, defense, EMS, there you don't have any valuation comfort. Today, the markets are giving you a very clear signal that valuation euphoria will not be entertained, and there is going to be correction in spite of earnings. So I think out here, if you have discounted earnings for next 3, 4, 5 years, basically it's not going to be acceptable is what the markets are trying to tell you. But on an overall basis, FY26, FY26, 27 looks pretty much better than FY25, 26.
Manish, morning, Neeraj here. Just a point, for a lot of people who are looking at the markets currently and thinking this excruciating pain in the portfolio has never happened before. I guess this tape has played over and over, right? We've seen this times in the past. 2017-18, if I'm not wrong, the mid caps went for a toss. Whenever this turns, right, Manish, and you mentioned that earnings growth will come about, do you expect the turn in the quality mid caps and small caps which are trading at very good valuations to be very swift, or could it be gradual?
Yeah, so, it always looks like that the end of the world is here whenever you see these sort of meltdowns in the market. We have seen 2008, we have seen just before the COVID broke out, after the capital gains tax was introduced. I mean, it seems like the end of the world, and, you have stocks falling 30, 40, 50%. But I mean, it takes that much of a bold heart to, go out and buy in these sort of market that creates your maximum wealth over the next 3, 4 years. And basically the mid cap, small cap story is a story for 3 years and above. I mean, if one was to believe that you would buy a mid cap and a small cap and they would give you exponential returns in the next 6 months, more often than not, they will further correct. And then from there, it is going to turn. So the proof of the pudding is basically earnings revival. And I think on a very high base, we are going to see earnings revival. My sense is FY 26-27, your mid-cap, small-cap earnings revival is going to be slightly better than the large cap, more like 15% plus. And at the end of the day, it is going to be about the specific earnings on your individual stocks and the valuation. I mean, there is no one size fits all in these sort of the markets. In the broader markets, it's a very large space. You know, you don't have the luxury of deploying capital in just 1 to 100 in the large cap or 101 to 250 in the mid cap, and you get SIP flows and you keep buying those same very stocks and they get elevated valuation. The small cap space is a very, very diversified, you know, number of stocks. And I would believe that there is some great value in the mid and small cap, provided you give it 3 years and above. And that is something which was lacking in the last 2-3 years, that, you know, you start discounting next 5 years of earnings and still believe that the story is good. That is what the pain is all about in the current space. So I would believe that, yes, as like in the past, when there is blood on the street and you go out and buy, you get the maximum benefit.
Manish, hi, Alex here. And so let me extend that a little bit, right, to ask you, and also just a comment, if people thought that picking stocks from the broader markets was easy, the last 1 year has disabused them of that notion. But having said that, if you're talking about earnings that you're looking at and trajectory looking promising from the broader markets, as you pointed out, it's wide. And so therefore, what are those pockets that you're convinced that have rounded the corner that you're looking specifically at?
Yeah, so, you know, adding to what you just said, you know, picking stocks from the broader market is the most difficult form of stock picking that one could do. You know, the easiest form of stock picking is basically the large cap space. And the mid and the small cap space is a lot of homework that you got to do before you basically take your call on the large number of stocks that you, from within the large number of stocks that you have in this universe. Coming to which are the themes and sectors, I would believe that's a no-brainer that obviously consumption should make a comeback. You have platform companies, you know, which are leveraging on technology, you know, and basically these are intermediation businesses across domains. They would tend to benefit. Capital market plays have corrected and would offer great value at these levels from the next 2-3 years point of view. You have healthcare, you have rate sensitives, which is going to do very well over the next 1 year. So these are some of the pockets which I think is going to likely outperform the markets.
Right, right. Okay, Manish, I know you've been a big proponent of the capital market theme. You know, in some sense, I think my fellow co-anchors will accuse me of sounding like a broken record when I talk to everybody about this particular aspect. But is there money to be made here? We've got a large IPO coming in from an AMC. We've got a recently listed tech broker, if you will, and a clutch of other old school businesses trading at very cheap valuations as well. Are you a buyer in this theme en masse, or are you picking and choosing specifics within this very wide bucket now available?
So look out for duopolies, because the profit pool in the capital market businesses is only going to grow over a period of time. And basically the profit pool within this space is going to get shared between very few number of players, apart from the broking space. And here also there is going to be a very massive differentiating factor, whether you are a brick and mortar or let's say physical or phygital broker, and you know whether you are an online tech platform, because the operating leverage benefit is going to be disproportionately higher if you have a massive market share vis-a-vis guys who have a lower market share and are catering to the brick and mortar or let's say the phygital space. So from that point of view, except for the online broking space, the rest of the space, I mean, I would believe that the sky is the limit. And you were to take the next 5 years, 10 years point of view, these are very high entry barrier businesses. You don't get market share in this space very, very easily. And 21 crore demat account, whether this is likely to be 50 crore demat account, the answer is a yes, because the equity penetration is just about minuscule in the country, even now. And you know, you have 75 crore PAN accounts. So as the prosperity of the country increases, you have a larger number of players investing in the equity market, and these structural, you know, the companies are duopolies or maybe 3 players, and so disproportionate benefit is going to come across the space. You alluded to the AMC space, the 30,000 crore worth of SIPs, and the top 10 players get bulk of these SIPs. These are again very high operating leverage businesses. Agreed that the TER is going to come down, but at the end of the day, you get paid on AUM. And the AUM, if everything's said and done, is going to double in the next 5 years, a 15% CAGR in the AUM, without any additional flows. And that the doubling of AUM would mean that your total income is going to double in the next 5 years in the AMC space, irrespective of any flows coming in. Plus, you have the flows. And what is the major cost item in these? Basically, people cost, which is 30% of the revenue.
Yeah.
So, all in all, a very big space and a lot of money to be made in this space is my belief.
Okay. So we were discussing this morning, Manish, about Swiggy and the fundraise that it has, right? 10,000 crore rupees. And this is simply ammo to stay in the race as you have large players likely to come in and have significant competition. So you mentioned platform companies, but I'm just wondering whether it's difficult to pick right now, because if you pick someone and then a large conglomerate or a large global multinational comes in and deploys a huge war chest, your business model is finished.
So, yeah, I believe that, business intermediation businesses leveraging on technology are going to be in a sweet spot. So, obviously, Swiggy, Zomato, Zepto, you have Flipkart, you have Amazon. These are all basically intermediation businesses using technology to connect the buyer and the seller, as a marketplace, or whether you have your own carrying inventory. The point out here is that, whether you get your unit economics right, if you're burning in a lot of cash, and this is also a reference to players who have very large, deep pockets to burn a lot of cash to gather market share, you can't get this business model right if you don't get your unit economics straight. And I think out here, only Zomato has got its business economics, unit economics correct out here, and rest of the guys are basically discounting a lot and getting turnover. So there's no point in buying turnover. You must be actually pulling business turnover based on your competence. And that is where the difference is going to be. So yes, it's become a crowded space. Zomato has taught everybody how quick commerce is done, and everybody is following. But it's a tough business. The rider economics, unit economics is not easy to get, even if you have deep pockets. So there are limited number of players who will have a right to win. And, very few players will take bulk of the market share is what I believe.
Thank you so much for speaking with us. We hope to speak with you again before we close the calendar year and get thoughts on, what the plan is for 2026. Manish Sonthalia there. All right, corporate focus. We're speaking with Transrail Lighting this morning. Company has bagged 882 crore rupee worth of fresh orders. That includes a major 400 kV turnkey transmission line, EPC transmission line project in the GCC region. The company has also secured additional wins across its civil and poles and lighting business. To speak more on this, I'm joined now by Randeep Narang, the Managing Director and Chief Executive Officer at Transrail Lighting. Mr. Narang, thank you so much for your patience, and thank you so much for speaking with us this morning on NDTV Profit. Let's get a little more detail on these 822 crore orders. Is it one? Is it many? Which GCC areas?
So, thank you for having me here. Definitely, that's a good win for us. It's a new entry in a new country. It's basically GCC Abu Dhabi, and it's something which we've been planning for some time. So it gives us a breakthrough for turnkey transmission project, and we are very happy to have this order and execute it on time.
Your current order book status post this additional order?
We are around 16,000 odd crores of order book, plus another L1 of around 2,000 odd crores. So it's around 18,000 crores current order book. This year we booked so far 5,100 of orders which are in the bag, plus 2,000 L1 as I mentioned. So we are, as per our plan, we are on track, and we will be reaching our goal of around 10,000 plus crores of orders by end of the year. End of March.
Specifically on those L1 orders, Mr. Narang, I'm just wondering about the conversion and also at the same time you're bidding for new orders. So I'm just wondering how that dynamic is going to fit.
So normally a L1 converts in 2 to 3 months. And that's the normal norm until unless there's some delay either for the funding backing or some approval process. But we are pretty confident that this level of L1 will fructify in the next 1 month.
Okay. What about the margin profile of these new orders that you're winning on the international side? How do they compare to the domestic side?
So as we had mentioned, the margin profile both for domestic has improved, international is where it was. So we are in a good zone as we have forecasted our EBITDA. Around 11 to 12% is what we are working on.
Okay. And you mentioned GCC. So this latest order is in the GCC region, and you said Abu Dhabi, if I'm not mistaken, right? What are the prospects going forward, heading into the new financial year? What is the opportunity here?
So if you see the overall market potential, I can talk international overall, we're talking about 50 to 75,000 crores of addressable market. Of course, the market is very big, but what we can address, we want to address looking at our risk matrix and what we want to look at the opportunity, we would summarize it around 50 to 75,000 crores of opportunity internationally. Similarly, in domestic, we are talking about 50 to 60,000 crores of opportunity. As you know, there are very ambitious plans for generation, which will lead to transmission focus. And therefore, we are pretty buoyant on T&D, which is our 88 to 90% of business going forward for the next few years.
Mr. Narang, what is the kind of capex update that you have, and what is slated in now that we're speaking in the second half of the financial is pretty much done? What is slated in, say, in the next 4 quarters?
So principally, we had looked at 2 brownfield project expansions for towers and conductors. So the tower part is on stream with the Baroda plant and a Deoli plant. And the production has started ramping up from December this month. The new greenfield project, which we had mentioned, which will be for towers, will happen in January, February. That's the early part of first quarter. And the conductor plant expansion is also happening by June, July of next year. So all our ramp-ups, production expansions are in place to support our order book so that we can execute our projects on time.
The net debt picture looking like you've guided for an increase in the net debt. Why is that?
We've talked about around 700 odd crores of net debt, which is basically based on our capex requirements and internal accruals for that. But this is pretty much in sync with our expansion plans, and we know the payback period on these investments, which is in good stead. So this is what we had already planned, and we are on track.
Okay, thank you so much, Mr. Narang, for speaking with us. Transrail Lighting, they're talking about 822 crores worth of orders. The new market that they have managed to get into in UAE, in Abu Dhabi, is what has got the management excited. Let's talk about 1% down this morning. But I think all eyes really on what's happening in the primary space. The new listing, Meesho has settled at 162 rupees versus 111. You're hearing the management speak over there, and we'll get you more on that when we come back, including a live report from NSE where all of that action is. So it's not just Meesho. You have, I don't know if you can pull up those pre-listing rates for some of the others. Acus is also not doing bad. Vidyavaya is also not doing bad. I saw them on Artica, and hopefully we'll get those lines back so you can look at what these prices really are. So you're seeing pre-listing rates settle with a pop for all three. Primary market investors might be happier than what's happening in the secondary market.
But secondary too, there's a nice recovery today.
Yes,
so
there is a nice recovery. And reason for that in part, very quickly. So Acus, thank you for that on the flash team, for coming in on that, 140 versus 124. And so this is nice.
Vidyavaya is more or less at the issue price.
Vidyavaya is not that great, but the others are not bad. You're seeing all of that on your screen. No, there is a statement from Mr. Greer coming in, and we'll get you that bite on the other side of the break, saying that the offer we have from India on the India-US trade deal is the best one so far. Is that pointing out to something positive? It might explain what you're seeing on the Nifty. So we're coming back with more details on that. We're talking about the IndiGo saga and much more. Don't go away. We're coming right back after this very short break.
Twenty 2025 has been a tremendous year for markets, money, and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns and making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come.
All right, we're talking about what's happening in India's civil aviation sector, and it's a lot. Now, the latest, IndiGo has been asked by the Civil Aviation Ministry to cut its winter schedule capacity by 10%. How is this going to affect the airline? If you're wondering right now if the stock is less than 1% down, well, some of the reasons could be found in what Sumit Sarkar is going to explain next. Optically, it looks bad. It's gone from 5% to 10%, Sumit, in terms of the flight cuts. But is it actually going to hurt IndiGo that much?
Exactly not, because if you look at these numbers, you'll clearly understand why the stock is not reacting the way it should have reacted. Now, yes, 10% cut is what Civil Minister has asked for IndiGo to cut their capacity by. But if you look at the numbers, for winter schedule, what IndiGo had planned was close to 2,145 flights on a daily basis. But what they were doing before this cancellation fiasco was just 1,940. Now, if you remove 10% out of 2,145, the number comes to 1,930. Which actually means that before the cancellation fiasco and right now post the government cut, they have to just reduce their flight number by 10 flights on a daily basis, which is actually nothing for IndiGo at this moment, given the fact that current issues with flights is largely because of pilot shortage, which is still ongoing, and hence they would have anyways not been able to fly close to 2,145 flights on a daily basis. So it's kind of a blessing in disguise that has come in for IndiGo at this moment. Now, other airlines, they also won't be able to make up for this shortfall, and this is largely because there is aircraft shortage in the market, and this is also one of the reasons why other airlines like Air India have not been able to increase their capacity even in the winter schedule because of the aircraft shortage. So what will this lead to now? This will lead to higher passenger load factor, which means that better utilization for all the airlines across the industry and higher fares as well. And this will definitely benefit not only IndiGo but also SpiceJet and Air India. Now, the only negative here for IndiGo is that even if they get more capacity going forward, their growth will be capped at least till Q4 of FY26. So the growth will be just based on airfares and high utilization now going forward, and not on capacity growth. Now, what is the impact of this flight cancellation? A financial impact. IndiGo has around 190 seats on each flight, and each flight is around on an average 1,000 kilometer. Now, the revenue loss based on Q3 numbers would be close to 10.3 lakh rupees per flight. But the impact on profitability will be lower because the variable cost moves out for them. So the variable cost is close to 2.5. So per flight loss, fixed cost is actually 2.5. So the per flight cost for them is close to 4.8 lakh rupees. Now, in the third quarter of FY26, so far they have cancelled close to 5,200 flights. So the impact on profitability will be close to 250 crore, which is around 10% of its Q3 FY25, that is the last year number profitability. Now, around 109 days are left in the winter schedule, and the Delhi capacity is cut by 215. So if anyone had assumed that that IndiGo would fly around 2,145 flights on a daily basis, so that assumption will now come down by around by 23,435 flights. So these are the number of flights that IndiGo now can't fly in the third quarter based on compared to what earlier assumptions were. Now, as per what our calculation is, the notional revenue loss per flight would be close to 10.3 lakh rupees. So the overall loss over a period of 109 days will be close to 2,400 crore rupees. To give a context, on a quarterly basis, IndiGo does generate a revenue of close to 22,000 crore rupees, and the profit number on a quarterly basis is 2,449. So not much of an impact based on what the company has been doing. But who will bear the bigger impact of this curtailment? It's firstly passengers in terms of higher fares, hotels because of lower occupancies, because a lot of travel plans could get cut down, and travel agency companies like will also impact because of lower bookings that we'll see going forward. Now, there is airfare cap that has been imposed by the government, but even that will not help passengers, because even the airfare cap or the maximum fare cap that the government has decided is nearly 2 to 3 times a normal fare. So we have done this calculation, but as per the government norms what they have given, for up to 500 kilometer, the fare cap has been as around 7,500. Now, up to 500 kilometer is generally Delhi-Lucknow route, and there the average fare is close to 3,842. So this is nearly 2 times of the average fare. Similarly, for Delhi-Patna, which comes under the 500 to 1,000 bracket, fare cap is 12,000, while the average fare is close to 5,000 rupees. For 1,000 to 1,500 kilometer, we have considered Mumbai-Delhi route. Fare cap is 15,000, while the average fare used to be 5,232. And for 1,500 plus kilometer is the Delhi-Chennai route, where the fare cap is 18,000 rupees, while the average fare used to be close to 6,400. So despite this fare cap that the government has imposed, airlines could continue to earn much more than what they were earning earlier because of this curtailment that government has imposed on IndiGo.
So this is when you read between the lines that you get the real picture. What it's sounding like is that this is very anti the airlines and very pro customers, but that's not necessarily the case. Amit Mittal, aviation expert, joining in. Amit, let's look at this from different perspectives and start with what this means for Interglobe itself. And you saw the breakup that Samit Sarkar from our team gave on impact for IndiGo. Question is there enough capacity in the system to take up those extra 10% flights?
See, the flight cuts have primarily been done in such a way that mainly it is on the trunk routes or on the regional routes. Now, if the trunk routes where there are multiple flights available, there the possibility of getting an extra flight or additional flight from other operator is very much there. But when the capacity is cut on the regional routes, some of the airlines which are not operating there, and IndiGo is the only operator there, in that case, the other airlines will have to have the aircraft type available for that route, as well as the uh, aircraft available should be good enough to fit that route, because you cannot deploy a full capacity A320 or a 737 on every regional routes. So those are the certain constraints that could be felt in regional routes where primarily only IndiGo was operating.
Amit, the messaging from the ministry seems to be that the cuts should be focused on the routes where there are multiple options. At least that is the interpretation that we have. And given that, to fill the gap, would you say that there are currently aircraft available that for lease, either wet lease or dry lease?
The availability of aircraft is a challenge, because typically the lease transactions happen for a period of 7, 9, 12 years, and these are most of the times dry operating lease. So when we talk about a sudden curtailment of capacity for one certain airline like IndiGo, which is a big operator in India, and then you talk about getting the aircraft for other airlines on a short-term lease, the only option left for the airline is a wet lease, which if you talk about a A320 or 737, those are the aircraft which are, and ATR 72. These three aircrafts are constrained in the market in terms of the availability on the wet lease. But so that there will be a challenge on the availability of aircraft on a short-term lease.
Do you see airfares going up?
Depends, because if we talk about regional routes wherein some new airline has to come in to fill in the gap of IndiGo, that case, if the airline is not able to fill up with a right type of aircraft, it could be a regional aircraft, then if they deploy a bigger aircraft, yes, the operating cost of the airline will go up, then the fares could go up on the regional routes. On the trunk routes, it depends on the time of the day, because if it is early morning or late evening, wherein most of the corporate travel is happening, and if there is curtailment of the flights of IndiGo, how do the other airlines absorb that additional load that will have the impact in the fares?
Just want to have a culmination to this. And by the way, we're also joined by Amit Jaiswal, who's a CFO of Royal Orchids Hotels. Mr. Jaiswal, just a little bit, we'll come to you in just a bit. I have one more question for Mr. Mittal on the cost for these airlines and the fact that they will likely pass it through. So, assuming that they will even find these aircraft, Amit Mittal, the assumption would be that they would have to pay more, the airlines, and so that would invariably be transferred, right, to the customer?
Yes, of course, because see, what happens is when you take an aircraft on a short-term wet lease, one is the challenge of getting the availability of the aircraft. Second is, of course, the lease rentals will be higher, because when we talk about a wet lease, it will be having the pilots, crew, or maybe only the pilots. But then it depends how the airline is able to absorb that cost. If some of that could be passed on to the customers, subject to the airfares cap which the Ministry of Civil Aviation has put forward, they will have to comply with those norms. But yes, there could be constraint on the operational cost, and some of it could be passed on to the customer.
Thank you so much, Mr. Mittal, for speaking with us. Mr. Jaiswal, very quickly, just, at the end of the day, whether IndiGo suffers or not, the fact is that less people can travel, and this is a busy time. Do you see this as a hit?
See, let me summarize the whole thing. While short-term chaos, what was created in first week of December till I think 8th of December, it also provided a flip to the hotels, some of the hotels, via stranded guest stays. Okay, so this short-term chaos was not of that effect on our industry, that is the entire hotel industry. But the way things are now getting clear, that if the capacity curtailment of IndiGo is not taken over by the other airlines, then we will definitely see some hit to the occupancy, especially in the in the regions which are prone to travel and tourism. Okay. I feel that the business hotels will not get affected that much, especially the tier 1 cities. But tier 2 and tier 3 cities, which are, on the arena of tourism, there the business may get affected, and I'm evaluating a effect of 3 to 4% on the occupancies. Unless the load which is being depleted out of the IndiGo Airlines is taken over by...
Just for a second, Mr. Jaiswal.
2, 1.
We had to get you the live listing of the 3 IPOs today, and I would say the most newsprint or eyeballs taken up by the one in the center. That's Meesho. But, don't wonder why, because look at the listing pop. Wow. So, various ways to describe it. We've been calling it the Desi Amazon. And there's a whole different kind of ecosystem that Meesho has been quietly building. That's showing. Aquis not doing badly at all, 19% up. Vidya Wires, 4% up. And in the front of Meesho and Aquis is looking a little weak, but that's not a bad listing either, isn't it?
19%. Yeah. Fireworks on the ground and fireworks on the screen as well.
Yeah, and for Aquis, that the competitor landscape, Dynamatic Technologies has moved from 6,500 to 9,500. That whole ecosystem, aerospace in India, for the world is really alive and kicking, and Aquis is a symbol of that, right? One of the larger companies.
Is it Aquis or Aquis? Aquis.
I think it's Aquis.
Aquis. Okay, we'll go with Aquis. But Meesho, I think the center of all attention. Jasmeet is at NSE this morning covering Meesho, and Jasmeet, I believe, there you are in Meesho colors as well. So you've color coordinated to Meesho. That's really interesting. All right, what is the mood over there, and why is there so much excitement about Meesho?
Well, there's a lot of excitement down the line. We have founders, the families, investors, everyone out here. And everyone is very excited. Well, it's not just listing of a brand, but it's an overall movement towards India supporting the new tech age brands. Right? That's why we see so much of excitement. And Meesho being an institutional heavy invested firm, so it's something to watch out. How will the regular markets react to it after getting supports of all these investors out here? The stock has already been listed at a 45% premium from the listing price, and the GMP was somewhere around that. So the street's excited to see.
Absolutely. All right, and quite a lot of action and excitement from that listing. Of course, 3 simultaneous bell-ringing ceremonies that you got to view right here on NDTV Profit. And of course, we'll get you more updates on those 3 listings over the course of the day. But we're in conversation with Mr. Amit Jaiswal. Mr. Jaiswal, you're making a point saying that it's not too much of an impact for the industry as a whole. But having said that, let me ask you this. In the remainder of the season, do you anticipate a bump in your demand? Has it been robust, or do you anticipate that it is a little softer than you had that you had initially thought of?
See, the demand has been robust all this while. There is no dearth of demand as far as the market is, as far as the hospitality market is concerned. But this, chaos, as well as the planning of reduction of the 10% of the capacity of IndiGo, will definitely hit to some extent especially the tourism-bound, tourism-heavy regions in 2026, unless they are taken over by the other airlines. And this underscores the need for diversified travel, options in India's hospitality sector. You see, a lot of roads has been created. So there are options for people to travel as far as the leisure travels are concerned. And, today, Bangalore, Chennai, Jaipur, Delhi, this is a no-brainer. Nowadays, you can avoid the flights and go by road also. And it takes equally almost the same time. But the leisure destinations will definitely get hit if there are a lot of flight cancellations.
Okay, Mr. Jaiswal, thank you so much for coming in and speaking to us. No impact really on hoteliers today. I think we should look at what's happening with InterGlobe, since we're talking about InterGlobe and SpiceJet. Just quickly look at what's happening with those stock prices very quickly as we move ahead, because InterGlobe about 1% down. You expected 10% cut over there. Is SpiceJet gaining? SpiceJet was gaining at opening and cooled off a bit, but still about 1% in the green. I think one of the reasons you might have seen a bit of a shift in market mood is this statement coming in on India-US trade negotiations. We told you it's the big one, right? The US Trade Representative Jameson Greer has informed the US Senate that the country has secured the best offer by New Delhi in the ongoing discussions. Those talks, his deputy, Rick Switzer, is in India today, and those talks continue. But listen in to what Greer told the Senate.
You mentioned India. I have a team over there right now as we speak in New Delhi working on this. There's resistance in India to certain row crops and other meats and products. They're, like you said, they're very difficult nut to crack. I agree with that 100%. But they've been quite forward-leaning. The type of offers they've been talking to us about have been the best we've ever received as a country. So I think that's a viable alternative market.
Okay, so it bears repeating, this is an important meeting that is going to take place today by the Deputy US Trade Representative. Let's bring in Rishabh to give you a little bit of context and tell you what's lined up today. Rishabh, what are you picking up?
Right, you had a set of marathon meetings that started on Monday with the EU team. Now the EU team meetings are done, and the focus is now shifting to the US team. You have a very important set of meetings that are kickstarting today. Again, this is going to be the Deputy US Trade Representative, Rick Switzer, who will be in town. This is someone who hasn't visited India previously for trade talks. So this is someone who will be on a familiarization visit. That is what India's Ministry of External Affairs is also categorizing this particular visit as. What we can expect is that he will meet India's chief negotiator for the US trade deal. He will perhaps meet the Commerce Secretary as well. We don't know so far if it is in his schedule to also meet with the Commerce Minister, Piyush Goyal. So that is something that all eyes are on currently. Remember, the fall deadline for the India-US trade deal, already we're past it. India is still facing 50% tariffs, 25% Russian oil tariffs, and 25% reciprocal tariffs. And what the commentary has been is that what we're looking at is at some sort of a framework of a deal to at least address the tariffs part of it, and the rest of it can be negotiated later on. So the focus is currently on, of course, at some sort of a framework of a deal to address these tariff bits. Something about Rick Switzer before he was appointed as the Deputy USTR. He was also a member of the Secretary of the State's Policy Planning Council. He's also someone who has a very deep knowledge about China, and that is also perhaps why he's appointed as the Deputy USTR and why he's being sent to India as well, because this is something, the trade dynamics between India, China, and the US is something that also play a part with all the trade deals that are happening. So all eyes on December 10th and 11th for these US trade talks that are set to happen in New Delhi.
Thanks, Rishabh. Stay busy and keep us updated with everything. Time for a short break. On the other side, we talk about all of this and the economic implications of this and more with Sonal Verma of Nomura. Stay tuned.
Woo! 2025 has been a tremendous year for markets, money, and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye, 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
In a very volatile and uncertain world, it must be getting very difficult to make a prognosis around what the economic impact of moves can be, especially if these moves happen in the blink of an eye, once a day or maybe twice a day as well. So it makes Sonal Verma's job very difficult. She's Managing Director and Chief Economist, India and Asia ex Japan at Nomura. And Sonal, great having you. Thanks for taking the time out and being with us. Just trying to understand how difficult is it right now to write a note for 2026, considering that no one knows anything?
Neeraj, every year is sort of similar. Uncertainty is very high, but you're right. I think in the last 12 months, just the speed with which policies are changing has made life a lot more difficult. But we try to do our job.
Actually, before we get to the brass tags and the numbers and your thoughts, just trying to understand. I was listening to a comment from External Affairs Minister S. Jaishankar, who said that a lot of government to government or country to country affiliations / tie-ups, etc., might now happen not because of economic sense, but because of the political comfort that a leader may have with the other or a country may have with the other, even if it may not make complete economic sense. I wonder if that is something that now would take precedence as you try and figure out what the economic impact over the next 12 months of policy making could be.
Yeah, I think that's quite interesting and important. I think, like in general, over the last many years, this geoeconomic fragmentation has been ongoing. And in the last 12 months, with US, trade policies being sort of more negative, I would say, for the exporter nations, what we have seen is, one, many countries actually trying to find new export destinations. So there is sort of this push towards diversifying and hedging against just being solely reliant on the US market, which is sort of more from an economic perspective. But the second bit is also in terms of aligning with like-minded partners and putting sort of domestic national sovereignty as a top policy priority. So we've seen sort of, BRIC nations come together. We've seen some patching up on India-China relationship as well, which has been sort of a positive development relative to expectations. So yeah, I think given the challenging world we are in, what each country is trying to do is really put its own interests first.
Sonal, hi, Tamanna here, and great to speak with you. I think one big question mark is the trade deal, right? We're looking like we're closing 2025 calendar year without a trade deal in place. Meanwhile, trade deals which have already been negotiated with the United States look like they're collapsing, or there's a backtracking or lack of clarity. How big a factor do you see this for India economically going into the next year, considering that some of that pain on exports and the rupee are beginning to show?
It is beginning to show, but I think all said and done, actually, overall numbers have turned out to be better than expected despite the higher US tariffs. So there's a segment of MSME exporting firms which need more support because of these higher tariffs. But I think we've seen enough offsets from other economic channels to negate the impact. Now, the deal is taking a lot longer than expected, and given, next year is going to be more about US midterm elections, politically, the agriculture sector is also quite important from the US perspective. And for India, of course, it's always quite important. The one change, though, is, India's imports of Russian oil should come down because the sanctions are now into effect. So to that extent, there is still this window for at least the 25% additional penalty to be removed, given India's imports from Russia, oil imports from Russia are coming down. But I think overall, it is an issue for the labor-intensive sectors. They will need some hand-holding. But I think businesses are sort of just going about their business and doing sort of more medium-term planning rather than waiting for this to completely resolve, as is the case with India's approach. I mean, we are out there negotiating free trade agreements with all other countries while trying to, negotiate the trade deal with the US. So I think it's negative, but things have been much better than one had feared.
And that's, I think, shown in the Q2 GDP numbers. Just your reaction to those numbers, Sonal, and are they truly reflective of what we're seeing in India right now?
I think, like in the low deflators have amplified the real GDP numbers this year. And therefore, when we sort of look back into 2025, while we've actually had to upgrade our real GDP growth projections, I think in terms of the underlying momentum in the cyclical economy, to our mind, that has been soft. So some of the more sort of consumer discretionary segment demand through the course of this year, has been soft. Of course, the pivot point came through once the GST cuts got announced. But I think 2025 has really been more about cyclical demand softness in India. And therefore, to some extent, the real GDP numbers are, in our view, being amplified by the low deflators. But as we look out to 2026, we are more positive.
GDP outlook that you have for India, what's the number you have in mind for 2026?
Well, 2025, first of all, will end up closer to 7.5%. In fact, we should end 2025 calendar year close to 7.7% because even the October-December 2025 quarter will see real GDP growth of at least 7.5%. So we will be ending on a fairly solid note there. As we look out to 2026, our own forecast is growth of around 7%. We are forecasting a 6.9 for CY 2026. And as I said, I think some of the disconnect between the strong real GDP numbers but soft high frequency indicators, we think will sort of course correct over the next 12 months. So even though our real growth projection is a bit lower, we think the underlying cyclical demand in India should improve going forward.
Sonal, I'm presuming that, I mean, a lot of talk around how lower inflation and therefore the lower nominal numbers are a bit of a worry. Is it, to your mind, to an optimist or somebody who looks at a glass half full, it is maybe, yes, the GDP numbers might be high because of the low base, but it's still a good number accompanied with lower inflation, giving the RBI the ammo to cut rates. It's not that bad a space. So is the optimist right, or is it better to be a bit skeptical on this?
I think, it's a good situation to be in. I think many countries would like to have, 8% growth and very low inflation. So it is actually an envious spot where India is. Now, the disinflation in India is caused by many factors. I think, the low food prices, at least the volatile components of food can mean revert. But, the analysis we've done shows that there is also a structural element to the disinflation in India. And particularly some of the core categories, which historically have been sticky at 5.5%. The trend in the core categories has also moderated to less than 3.5%. So while the food side can rebound, there is a durable element to this low inflation. So it is actually it is a good spot overall from a macro perspective. There are consequences of very low, nominal GDP growth, particularly for a country like India. The tax collections are linked to nominal GDP growth. Corporate revenues are linked to nominal GDP growth. Next year, as we are moving from a fiscal deficit targeting to debt targeting, and the gap between your nominal GDP growth and your nominal interest cost is one of the factors that will determine the pace of moderation in debt to GDP. So I think, there's sort of positive, negative, both factors. For India's stage of economic development, I think we need the right balance. So if you look at 2025, on average, inflation will be a shade above 2%.
Right.
And 2026, we are expecting around 3.5%. So very low inflation is also not good for food producers. So some balance is important.
That's true. That's true. Sonal, one quick word. I mean, if the Fed were to cut, and if the incoming Fed is perceived to be dovish, as per Donald Trump's wishes, right? Does that give enough ammo for the Reserve Bank of India to stay put with lower rates, which might help corporate capex, so on and so forth, for the foreseeable future?
I think in general, the RBI's reaction function, Fed policy is probably not in the first 2-3 factors in terms of what determines RBI's policy. So, the outlook on inflation, the outlook on growth, continue to be the predominant factors. In fact, what we are seeing, not just in India, but across a lot of other countries in Asia, is that central banks are not simply following the Fed because, the growth outlook is very different, the inflation outlook is very different. And therefore, each economy is doing what is necessary from its own perspective. Now, from India's perspective, if inflation stays benign, then that does offer the RBI space to ease further, irrespective of what the Fed does. And I think it's important to understand that, in a flexible inflation targeting regime, as long as currency depreciation is not threatening your inflation mandate, it is manageable. So in India's case, despite the currency weakness we've seen, inflation in our view will stay below the 4% target at least till September, November of 2026. And we have more than sufficient FX reserves to manage the volatility as well. So the predominant driver, therefore, remains the domestic growth inflation dynamics. I don't think the Fed outlook materially changes that view.
Yeah, fair enough. In terms of room for more cuts for the Reserve Bank, do you see that propensity at all? And do you see the dollar or the rupee versus dollar recovering if there's no clarity on a trade deal anytime soon?
Yeah, I think the like in terms of space for RBI, 125 basis point is already done and in the bag. So when we look out to 2026, we do think that the rate cutting cycle is not over. There is still some room, but the RBI, has the luxury of going a bit slow from here. So we're expecting the pause in February meeting, and we're expecting a 25 basis point cut in April. So we are expecting a 5% as the terminal rate. What will be more important for the RBI now is essentially ensuring transmission. So some of the durable liquidity injection measures that were announced in the December meeting, we do expect more open market bond purchases to be announced early next year. So transmission, both via the bank lending channel and through the market channel of transmission will be a bigger focus. So we do think that the overall outlook on interest rates and the monetary conditions in India will be favorable next year. On the currency, I think, a trade deal now would actually be a positive surprise because a lot of people have been waiting for it for very long and have sort of given up. So I think the announcement of a trade deal itself would be positive. The biggest challenge for India in 2025 has been, that we are not an AI story. And B, the cyclical slowdown that we've seen in India. So, if you're right and the easy monetary conditions do lead to a pickup in cyclical growth, then India can actually get more equity inflows next year. And there's also potential for bond index inclusion next year. So, flows returning, current accounts staying around 1% of GDP should mean that the balance of payment, will be easily funded. So I think the external sector should be less of concern compared to the challenges we faced in 2025.
Okay, so net rupee might not be such a big concern, and US-India trade deal could be a positive surprise. Sonal, thank you so much for speaking with us. Always a pleasure to hear from you. Sonal Verma, of course, is Managing Director and Chief Economist, India and Asia ex-Japan at Nomura, joining in. That's all the time we have on this edition of India Market Open. But pleased to report, at least the markets have recovered to some extent, nearly 100 points up on the Nifty. And that could be thanks to Mr. Greer's statements that we played out for you. That's all the time we have from Neeraj, me, and the show and the people that put the show together. Thank you so much for watching. Stay tuned. Ask Profit up next.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. the course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान. सोनू निगम के लिए जोरदार तालियां.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Hello and welcome to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. So do start sending them. You can either WhatsApp us on the number that's flashing on the top of your screen. You can also call us, talk directly to us on the stock-related queries that you might have for today on the number that's flashing on the bottom of your screen. Before we do all of that, it's a very interesting morning to say the least. Let's quickly look at how the markets are doing, because in the last 20 to 30 minutes, we have seen a strong pullback on the Nifty 50, up almost 87 points now as we speak, and you're seeing that spike continuing. It'll be a very interesting session because we had all the indicators for a flattish day to say the least for today, giving up some of those negative cues that we had from the last couple of days. So today marks a very important day for some key levels. For the Nifty, 25,900 will be the key one. If we can close above that, will be something that the market will take positive cognizance on. Look at the heat map, give you perspective of the Nifty 50 as well in terms of a couple of stocks. The likes of Asian Paints amongst others were the top gainers. For Reliance, the contribution is the highest right now, batting there for the bulls. Mahindra and Mahindra, Kotak Mahindra is the other ones. Let's also look at the heat map very quickly also. Eicher Motors, M&M, as well as Adani Ports and Hindalco are the top gainers for the Nifty 50 as we speak. Eicher is up almost 2% now at the day's highest point. On the losing end though, we have some struggles on stocks like Eternal, the second consecutive day. But in the downtick today, the advanced decline ratio will also give you perspective of what's happening in the broader markets as well. At the start, we were in a 2:1 ratio for the advanced decline. That is the other one that we continue to track right now. Or it's almost moved up to almost 4 times in terms of the advances at 1900 versus 509 decline. So that's a key positive trend. Mid cap and small cap will show you that perspective also. Mid cap almost up 0.3%. The small cap index too is in the green with up almost 0.54%. And the BSE 500 is the last one I want to quickly highlight before I move on to the stock related queries. It's an interesting day because we have Hindustan Zinc, because of the silver prices continuing their up move, up almost 4% in trade. I want to highlight Welspun Living, Chambal Fertilizers as well. A couple of stocks that were in the downtick in the last week. On the negative side though, Paytm is down 2.7%. So is Eris Life Sciences and Triveni Turbine as well. But a couple of key aspects that we continue to track is what's happening with IndiGo and the flights. You have a SpiceJet statement coming in that they're planning to introduce 100 additional flights during the winter schedule. Stock was up almost 4% at one point of time yesterday also. So over the last 1 week, if you can get that chart for SpiceJet, it'll give you a perspective of that, because while a lot of those gains have sold off today for SpiceJet, started off with a 4% uptick. In the last 1 week, almost up 7 to 8%. So we will continue to monitor that. They also had their analyst day where they gave some positive commentary. So that's one space. The other one is what we're getting in terms of tech spending. So we will get you some perspective during the show from Satya Nadella of Microsoft, giving us some perspective of what they want to do in India. Just had some flashes on the screen that Amazon is investing $35 billion, and this will have a direct impact on the IT players in some or the other way. So we will see a long-term view of what happens with those companies. And finally, the IPO ones, 3 listings today, 2 new issues that are opening today as well. Let's quickly look at what Meesho is doing. Up almost 46% of what it started with. That momentum has continued for the markets, and stocks up almost 57% as we speak. Aegis is the other interesting one, a loss-making entity, but market gave way for some perspective on Aegis, up almost 20% now. Started with a 12 to 13% uptick, but Meesho is continuing that positive momentum. It's a similar one that we saw for what happened with Grow as well, because 100 rupees was the target, was the issue price for Grow. 112 is where it listed, and since then the momentum has been consistent. But Meesho is one that we continue to track, a differentiated business model for the company. It will shake up, have some impact on the other logistics players like delivery amongst others as well, because delivery is a key revenue generator for Meesho, and they get a lot of orders from Meesho as well. So that will be something that we continue to track as well. But let me go across to Rajesh Agarwal. He's the head of research at Om Capital. Because before we get you some more perspective on Meesho as well, Rajesh, very good morning. Thanks so much for joining in today. While I'm not sure if you have a direct view on Meesho, it's a positive listing to say the least, and will expand the market in that sense. How do you view Meesho at this point of time?
Good morning. As far as Meesho is concerned, we have come out with the IPO report on that with a subscribe rating. And as you see that Meesho has carved out a niche in Tier 2 and Tier 3 cities where Amazon and Flipkart are still struggling to make some inroads, I would say, and they have turned free cash flow positive in last year. Although the bottom line is still in negative, and I don't think in the near future it would be in positive. So the bottom line is going to be in negative because of various reasons that e-commerce players regularly face. But the thing is, it has a scarcity premium to it because this is a only value e-com player that is listed. So there is some kind of institutional interest too. But at these valuation, maybe it's trading at around 60-70,000 odd crore at this point of time. But because 50,000 odd crore was on the upper band, so it's around 70,000 odd crore. And at these levels, I would be little skeptical in buying new. Somebody holding can continue to hold for maybe somebody got an IPO allotment can continue to hold for a target of maybe 190 odd rupees. But a partial profit booking is would be a prudent advice, I would say.
So partial profit booking on Meesho, but we have my colleague Jasmeet also, who's speaking directly to the management on the IPO. Let's listen in to that conversation.
bottom line changing going forward?
Yeah, so I think, like we just kind of mentioned, that we have been, the way we have built our business, we are still scratching the surface of what is e-commerce adoption in the country. So I think for the very immediate future, we'll continue to invest behind growth, and we are seeing good results of that. Last year, if you saw, we grew by about 29% year on year. First half of this year, we're growing at about 44% NMV growth year on year. So we are seeing very good results of the investments that we are doing in the growth of our business. And till such time that, you know, it is a very fast growing growth market, we want to kind of make sure that we are serving our mission statement of democratizing e-commerce for everyone, bringing all those customers and sellers and logistics partners online. And doing so, we'll continue to kind of focus on making sure that we are not diluting shareholders by kind of being less capital efficient. So we continue to generate significant amount of free cash flow, and we'll continue to be on that path. And like I was mentioning before, as our monetization levers around advertisement, logistics, other services that we provide continue to grow, we'll also keep on compounding on the other metrics of profitability, be it EBITDA or PAT.
Well, thank you for that. My second question is regards to the in-house logistics services. Currently, it contributes 65% to the overall top. So do you see that expanding going forward, and how will that change post the listing? Have you all planned any new strategic investment in that particular domain?
Yeah, so as Harish mentioned earlier also, we don't take a specific goal on how big that should be. Who gets volumes is totally dependent on the kind of cost, like the particular service offers to our merchants. So if an external partner, not Valmo, is able to offer a much low cost, we are very happy to give that volumes to those partners. And we have great third-party logistics partners as well who are also trying to push and become better and better at cost structure. So we basically think of the entire ecosystem rather than Valmo as separate. Like, it's not that we make more money if only Valmo is running on a platform. We want to grow our ecosystem, and that will grow when every single third-party logistics partner, including Valmo, is able to offer a much lower cost. So I think, in short, we don't take a goal on should that be 65%, 95%, 45%. Our goal is to keep growing our ecosystem much, much faster and keep reducing the cost for all our ecosystem players like consumers, sellers, and so on.
My last question regards to contribution. We have seen that increase from 5.5 to 8 in the past time. So where do you see the contribution going forward? Do you plan on increasing the contribution given the AOV has seen a drop?
So I think contribution is linked to the monetization path that we kind of spoke about. As we continue to make more progress on various levers of monetization, we would expect the contribution margin to go up as well. I think we don't have a specific timeline on that, but we do expect directionally that to kind of improve over a period of time.
Once again.
Thank you.
Well, that's the management of Meesho giving us some key perspective. It will be a key result that we track, but it's a time to slip into a very short break. Come back because the first query is on Kane's Tech, a key stock that we're tracking this morning. Lots more stock queries on the other side.
2025 has been a tremendous year for markets, money, and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
Welcome back to Ask Profit. Let's start with a second query for today, and that's on Keynes Tech. It's a very interesting one. Stocks down 4% in trade today after a 14% up move on the upside yesterday. Siva from Canada is asking if it's a good time to buy into the stock. He's also asked if it's a good time to buy Reliance, L&T, M&M, amongst others. So let me go across to Rajesh Agarwal. Rajesh, firstly on Keynes Tech, what would you recommend Siva to do? And if Reliance, L&T as well as M&M would be a better play right now to enter at this point?
Good morning, Vaishali. As far as Keynes is concerned, I think at this point of time, I would like to avoid that because of a whole lot of corporate governance issue that has cropped up. And secondly, all these companies were trading at a much, much higher valuations, almost on 3-digit Ps. So a correction was bound to happen, and it's going to happen in some other companies too. I don't say the corporate governance would be there in everywhere, but valuations are very rich in almost many companies where they are trading at 3 times P in the peer set, I would say. So this correction was going to happen, and I think there would be more correction going forward, although the fact remains the company is doing well. They have moved into semiconductors too, and that's going to be a big story going forward. But at this point of time, I would avoid. As far as other counters like Reliance, L&T, and M&M are concerned, all three of them are a buy from our side, especially Reliance, because of the fact that the Geo platform and retail, they are doing well with 19,000 odd stores in Reliance Retail. That's one of the that's the largest, I would say, in the retail chain ecosystem in our country. And once any corporate action happens, that would be a much bigger trigger. And apart from that, they're moving into renewable energy, doing a whole lot of things. OTC business is doing well. So Reliance is a buy from our side. When you talk of L&T, the kind of order book this company has, around 6 trillion order book, that speaks volumes about that. And every quarter, new orders are being added. And if we believe in Indian infrastructure, Indian economy, I think L&T is a good proxy play. And M&M again is both, you said the rural and urban theme with the tractors and, cars doing well. So all three are buying from a side.
Got it. Well, that's Rajesh's view on Keynes Tech as well as the other three counters. But the next question we have is the first caller for today from Mysuru. Vishwas is dialing for a stock query. Vishwas, very good morning and welcome to Ask Profit, and thanks for patiently waiting by. What's your query?
Hi, sir. Good morning, sir.
Good morning, Vishwas. Go ahead.
Sir, Wari Renewable Technology in 300 quantity. In average price 1030 in short term 3 months. Profit in loss in 25,000 in seller or sir. Please technical analysis, sir.
Got your query, Vishwas. Vaishali, very good morning and welcome to Ask Profit. What would you recommend Vishwas to do with Wari Renewables? His buy price is 1,030, currently trading at 937. What should he do?
Very good morning, all of you. So yes, Wari Renewable has really corrected substantially. Currently also there is no reversal in trend, but since it's an absolutely oversold zone, we can expect a bounce. So I would suggest continue holding now that you are already holding at these levels with a stop loss of 900 levels. So if we see a reversal coming in, the stock can bounce at least to 1,000, 1,050. So that is how I would look at this stock, and my view would be to hold right now.
Got that view, Vaishali, but we have another caller now coming in from Hyderabad. Dheeraj is dialing for a stock query. Dheeraj, very good morning. Welcome to Ask Profit. What's your query?
Good morning, sir. My query is regarding Apollo Hospitals, sir. I'm holding 15 shares of Apollo Hospitals at 7120, sir.
Okay.
So, could I hold it for the next 3-4 months, sir?
Next 3 to 4 months, got it. Vaishali, again, a short-term query on Apollo Hospitals. It's trading to a very similar price of where Dheeraj bought it. What should he do with this counter?
So I would say actually this too, I would suggest, if it's really for trading perspective, then keep a stop loss of 6,980. But I would suggest such a stock should be held on for a long-term perspective. And even if there is a decline, say around 6,800, I would say add more, because overall hospital healthcare, they are likely to continue to do well. So purely from a trading perspective, keep a stop loss of 6,980 levels, or else for a longer term perspective, I would say accumulate even at dip.
Well, the next query that's coming in is on HG Infra. It's a stock that's seen quite a healthy correction, and Shimoga is writing in this query. They've been holding the shares at 890, which was a decent level, got broken down again. So currently sitting at a loss of almost 11,000. Asking whether you should hold or sell. Rajesh, it's been a one-way downtick from almost 1,550 for this counter. What would you recommend on HG Infra for Shimoga?
See, I think one can continue to hold at these levels. The valuations have corrected, the prices have corrected quite a lot, and now the valuations are on a comfortable level. So it's not only the HG Infra that is corrected around 50%. We see a whole lot of mid-cap and small-cap counters that have corrected in the last few months by more than 50 to 70%. So there are various reasons for that. At this point of time, HG Infra, considering its order book and other things, I think one can continue to hold for maybe a target of 850 odd rupees in the next 6 to 9 months.
Got the view, Rajesh, and pardon me, that was a query that was coming in from Shweta on HG Infra. Hopefully that view helps from Rajesh Agarwal. But it's time now for a first round of the rapid fire in this edition of Ask Profit. Vaishali as well as Rajesh, you know the drill. Keep your answers on buy, hold or sell so that we can take as many queries as possible. The first one's coming from Khurshid from Delhi. He is a regular viewer asking a view on BSC at the current levels from a long-term perspective. Rajesh, what would you recommend?
Buy.
The next one's on Zentech. Mangaldas is asking, because he's been holding at 1,600 for the next 1 year, what should he do, Rajesh?
Hold.
NCC or SMS Pharma, a good buy at this level, Vaishali?
Buy.
The next one's a short-term view, again on Hindustan Petro. What would you recommend, Vaishali?
Hold.
ICICI Bank from a long-term view, bought at 1,273, Rajesh?
Continue to hold.
Texmaco Rail, buying price at 163. The next 2-year view, Rajesh?
Add.
The next one's from Ravindra. He's bought Persistent Systems at 3,700. So he's bought at a very good price, holding for the last 3 years. Should he invest more at the current level, Rajesh?
Buy around 5,500.
KPI Green Energy, what should he do? He's been holding 625. Can hold on for some time, Vaishali?
KPI Green is avoid.
The next one that's coming in, okay, got it, Vaishali. The next one that's coming in is on ITC Hotels, bought at 212. And Suman is asking if it's the right time to accumulate more for the long term, Rajesh?
Yes, add.
Next one's coming in on standard glass lining. Is it a good time to buy right now for the next few months, Vaishali?
Calculated risk. Stop loss of 140.
Stop loss of 140 on standard glass. Got it. The next one's Tata Motors passenger vehicle, bought at 389 from Shankar from Bengaluru. Should he hold on or sell right now, Rajesh?
Continue to hold.
MobiKwik bought at 348, 750 shares. What should he do, Swati? Vaishali, pardon me.
MobiKwik hold.
Geo Finance is on ITC Hotels. Again, a quick one. Is it a good time to enter right now, Vaishali?
Yes.
The next one's from Gautam on GTV Engineering. I'm not sure, Vaishali, if you have any coverage on this one. He's bought it at 90 rupees. Ask if he can hold on for some more time.
I don't have this, sorry.
Clean Science Energy bought at 1203, holding for the last 2 years. What should he do, Rajesh?
Add.
Data Patterns bought at 2550, hold for the next 1 year is what Jose from Kerala is asking. What should he do, Rajesh?
Hold.
Bajaj Holdings, 7 shares bought at 11,770. Vaishali?
Hold.
AU Small Finance Bank bought at 179, including a bonus. So sitting at a very healthy profit of almost 8 to 9 times. Should he hold on for the long term, Rajesh?
Hold.
Well, that's a wrap on the first round of the rapid fire at this edition of Ask Profit. We'll be back with a lot more queries after this very short break. Stay tuned for more.
Woo! 2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
Welcome back to Ask Profit, but before we take a lot more queries, time to dive into the F&O markets setup and the cues that are shaping up the trade today. Let's bring in Sharad for a snapshot of what's happening there. Sharad.
Well, the F&O market, the volumes are on the lower side. FIs are taking lower positions just ahead of Fed's FOMC meeting. Yesterday there was long unwinding, and today also it's like even Steven support coming in from Reliance and Kotak. But on the other side, Eternal and TCS, Bajaj Finance are dragging as well. So there will be volatility in the day's trade today, especially in the last 90 odd minutes. And largely we see the Sensex features also in these important levels. These are the levels you're looking at for the call and put options. Largely the PCR numbers are very stable, nothing much to actually have to analyze these numbers. The BankX, the story is remaining the same, but there's a divergence happening, especially if you look at HDFC Bank and ICICI Bank. That's where the downtick is coming in, and ICICI Bank just turned red as well, so that support is also slowly coming out, but it's a very narrow range of movement happening. Same thing goes with the contracts. A very stock specific market today. And looking at the key longs being developed, Hindustan Zinc, the silver prices went up to the record high levels of $61. AU Small Finance Bank also seeing a strong up move, corporate news flow. Short covering for Manappuram Finance. And remember, the gold prices are slightly inching up as well. Adani Energy. And long unwinding, the candidates include PB Fintech and GMR Airports, but not that convincing volumes. And lastly, short build-up, that's a big one in Keynes Tech. And also Paytm, that's also seeing a significant sell-off of 3% Stock-specific moves coming in the F&O space, but largely the volumes are on the lower side and not much of volatility.
Well, thanks so much for that, Sharad. But let's go across to our next caller, dialing in from Hyderabad. Kalyani has a stock query for us. Kalyani, very good morning and welcome to Ask Profit. What's your query? Hi, Kalyani. Am I audible to you?
Yeah. Sir, my query is regarding Praj Industries. I know the ma'am is very positive about Praj Industries. I need the opinion of Mr. Rajesh Agarwal.
Got it.
I hold the shares at 355 rupees, but presently it is at somewhere around 305. So can I accumulate some more in this?
Got it. Well, Kalyani, firstly, thanks so much for being a viewer of Ask Profit and knowing already that what Vaishali's view could be. Let me go across to Rajesh Agarwal then, as requested. Rajesh, on Praj Industries, she's bought it at 355. What would you recommend? Is it a good time to accumulate more?
I think Praj is a good hold for a long-term horizon. In a short or medium term, I don't think anything meaningful would happen because as we all know, that crude is trading at a very low level. So unless that starts moving up, a company like Praj is not going to benefit. So a long-term horizon is good. The auto book is good. They're doing very well in the engineering segment. But still, for a short term, I don't think anything meaningful would happen. But for a longer term horizon, by long term, I mean maybe 12 to 18 months. That's a good hold. One can even accumulate in small quantities.
Got that view. We have another query now coming in from Shankar from Tuticorin on Ola Electric. It's a counter that's been in deep trouble, over the last few weeks, and he's Shankar is asking if it's a good time to enter the stock right now for a short-term view. Can it reach 40 in the next 2 quarters? Vaishali, firstly, would you recommend a trade in Ola Electric in general? And if so, would 40 rupees be a target in the next 2 quarters for Shankar?
I would say avoid. I would say totally avoid, because this has been quite a disappointment.
Yeah.
But if you have to, then well, keep 30 as stop loss, and if there is a good bounce, you can see 40 taps.
Got it, and it's a great answer, Vaishali. But we have another query now on WhatsApp. It's again on Keynes Tech, and I'm taking this query again because viewers actually bought it at 5,790. This is Jai Krishnan, writing to us from Kerala, and he's been holding it for the last 1 year. Now he's asking if he should exit right now and buy something like Maruti Suzuki. I already got Rajesh's view. Vaishali, would you recommend this trade? Firstly, exiting Keynes Tech right now, and secondly, buying Maruti at this point?
Definitely, I would concur with that, because the trend is definitely down. We saw just a bounce yesterday, but there is no reversal as such. Whereas, as compared to that, Maruti is holding on to a very strong, steady uptrend. And if the view goes right, I think 15,800 would act as a support in Maruti. And we are looking at a projected target of 17,000 to start with. So, my view would be, yes, shift.
Well, the other query that's coming in is on Ashok Leyland. Now, Arun Sanji has actually bought it at a very attractive level of 104 rupees per share. Stock's almost at 160. Asking if he should hold on, and he is ready to hold on. So what could a target be to expect on this one? Rajesh, he's sitting at a very decent profits. Should he hold on to it? And is it a good time also to buy given the run up in this counter?
Rather, I would say books profit, because it's run up quite a lot. All of the fundamentals have already been discounted. The order book of electric buses and other things have been taken care of. So I think at these levels, one should try booking profits and maybe switch to some other auto names like a Bajaj Auto or a Hyundai. That would be a better bet at this point of time.
Got the view. We have another query now coming in on another key stock, Techno Electric. It's a counter that we do get a lot of queries on. And Raj Gopalan from Chennai is asking if we can buy into it right now for the next 2 to 3 years. Rajesh, coming back to you, would you advise that at the current levels for Techno Electric?
Yes, one can buy for a long-term horizon. Companies doing very well. The order book is great. Even they have a lot of cash in their balance sheet. So it's a buy from our side, but keep a long-term horizon as the gentleman is having. So any long-term investor can invest into this counter.
Well, the other query that we're getting in is from Gautam from USA. He is also a regular viewer. So thanks so much for that, Gautam, for sending in your query today. He wants to invest 10 lakhs in the metal sector for the next 12 to 18 months and asking if he should invest in the commodity of silver or buy into the stocks. Let me get both of your views on this. Vaishali, first to you. Is it advisable to put in such a big amount in this sector for the next 12 to 18 months? What would you recommend in terms of stock picks?
First of all, I would say that distribute your stocks. I mean, it can't be just in silver, because silver is already at all-time high. So it can, you can see a dip. So ideal levels to get into silver would be 150. That would be the level. As far as the other stocks are concerned, I think there is still a good upside coming in Hindustan Copper, Hindalco, even Vedanta. So these would be my basket of stocks that I would be focusing on in metal sector.
Got the view, Vaishali, but we have another caller now dialing from Bengaluru. Chandana is dialing for a stock query. Chandana, very good morning and welcome to Ask Profit. What's your query?
Hello, good morning everyone.
Good morning, Chandana.
I had bought PNB, 250 shares at around 124.91. So I wanted to know 1 year outlook.
And Chandana, do you hold any other banking stocks in your portfolio apart from PNB?
No, I don't.
Got it. Let me go across to Rajesh then. Rajesh, PNB at 124. Chandana is currently sitting at a slight loss right now. Your view?
See, the entire PSU basket as such is looking very good, with the balance sheets being cleaned up, credit offtake going up. It's just a matter of time after the recent RBI announcements and all. So I think PNB also is a good hold at this point of time because of the cleaning up of balance sheet and improving of numbers. One can continue to hold. If one wants, even one can buy Bank of Maharashtra or Bank of Baroda at these point of time.
Got that view. We have another query now coming in from Sumit from Delhi. He is holding Anantraj at 504, so 200 shares at that price. asking for a 1-year time horizon, and if any other shares that you could suggest as well. Rajesh, again, back to you on Anant Raj. It's a counter that seems to have just lost some of its steam. And data center seems to be a far-fetched opportunity right now, given their time frame and the size of the capacity as well. Should he continue to hold?
I think booking profit at these levels would be a prudent advice because, as you said, data center seems to be a far fetch, and on the data center story, the counter has run up quite a lot. So it's better to get out of this. Move to some other large cap names at this point of time. Maybe a Reliance or a Larsen would be a better buy. In the mid cap names, yeah, as I said, Bank of Maharashtra or Lloyd Metal are good names to go for.
Got that view, but we have a very, very short commercial break. Back on the other side with a lot more stock queries as well. Don't go anywhere.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched.
Welcome back to Ask Profit, and thank you for patiently waiting by. Do send in your queries. We're already at 30 queries for the day. We can take a lot more on in the next 15 minutes, so do keep sending them, viewers. But we have another stop, before we go on to the few more stocks, Satya Nadella is in New Delhi speaking on Microsoft's roadmap for the new age of AI. Let's listen in.
Using it to change the lives of people and the citizens of this country, the outcomes for organizations of all sizes. Because to me, it always starts with our mission, which is ultimately about empowering every person and every organization on the planet to achieve more. And so what I want to spend some time this morning is all around what's that frontier look like today and where can we take it? Because ultimately, all this tech is only useful if it is able to bend the curve on the outcomes that we all care about. So if you sort of think about any organization, it cares about outcomes, about how are we dealing with our customers and our constituents? How are we internally changing the experience for our own employees to have the increased sense of agency that they can make a difference? And the efficiencies that come by deploying these AI learning systems. And also the pace of innovation inside the organization. Is it going up? And so these outcomes really are what we're after. I would sort of also submit that one of the things that we need to understand is a new framework for how to drive these outcomes. And it starts, quite frankly, with mindset, because in some sense, a deployment of an AI system is actually markedly different than even a previous generation information technology system, because you're deploying a learning system that is continuously getting better. So you need to even have things like, I have to reimagine a process ground up so that I can deploy a learning system inside of that process, versus saying, I'll just automate the existing process, right? So it requires a mindset set shift. That means you need to reskill yourself, to think about things differently. And in order to reskill yourself, you kind of need the everyday tool and the tool chain that allows you to do so, right? If you think about back in the 90s or in the late 80s even, when we said, we want to change forecasting as a process, the tool chain was Excel, email, and attachments. Right? And suddenly forecasting as a process changed, right? So we need to think about what's that equivalent of tool chain that allows us in the AI era to change. And then ultimately the data set, right? Because you really want to bring all of the data to those tools, to that new reimagined process. So that's really what I think the success in this AI era will be defined by. So to motivate this, I'm going to sort of go through what is essentially a tech stack. And I'll walk up this tech stack or walk down the tech stack. In the first place is that everyday tool chain, right? Because if you look back at the PC era, because the last time the real frontier of organizational work really changed when PCs became standard issues in the workplace, right? That was the last time when we could see productivity gains, because we started using digital tools to do information work, what we describe as knowledge work. And every business process in finance, in supply chain, in customer service, in sales, marketing, all rapidly changed. And so we're at that same point right now. So when we think about that experience layer, right, we are building that into what we describe as Copilot, right? We're building Copilots for many domains. In fact, we have a Copilot for consumers. We have Copilot for healthcare, the DAX Copilot. We have information work, which is the Copilot in Microsoft 365. We have for coding and for security. So we're building all of these. So I want to start by talking a little bit about what's the new suite in the office, in the workplace. So what we've done is we've taken the everyday tools that people are using and built the Copilot system into that. And that's, I think, essentially what the Microsoft 365 Copilot does, is it brings the latest and greatest intelligence to where work is happening so that we can help everyone starting to impact their work artifacts, and workflow, right? How does change happen? It doesn't happen by sort of saying AI is somewhere else and I am somewhere else. you have to bring the AI to essentially a bottom-up revolution where everybody is using it all the time to change their organizational frontier. And so that's the purpose of Microsoft 365 and the Copilot and how it's built in. In fact, up to now, we've been captivated by what we think of as a chat interface. And chat interfaces are going to be super critical forever, right? They're going to be there. It's kind of like ultimately we want to have a natural language conversation with AI. But we're going to get even high leverage with agents. And you already see this. Today, if you sort of think about the Copilot experience, it's like I go into work and I'm assigning tasks to agents. One such agent happens to be the researcher. So what is a researcher? It's like a researcher. It goes off and sort of, in fact, we have multiple models underneath a researcher. It comes back with a report and says, I researched this topic for you, right? Another agent we have built is an analyst. An analyst is literally, I can upload multiple or point it to multiple Excel spreadsheets or any other data, and it'll come back with what a data scientist would do, right? So it's an analyst that I have 24/7, right? All times of the day, I have the ability to assign tasks. And then in fact, if you look at what we're doing is we're building agent mode. This became very popular for software development in coding, and I'll talk more about it. But we are bringing what software developers do with agent mode and something like VS Code now to Excel, to Word, to PowerPoint, where you're literally creating work artifacts using AI and completely changing. It's kind of like working with an expert to create and author a document. It's not just, oh, I'm authoring a document. And so these are just everyday agenting experiences that are already there and fundamentally changing and transforming how we work.
Well, that was Satan Love Microsoft. It will be a key update that we continue to get you on NDTV Profit. Will have a multilateral impact across sectors, but it's time now, since it is a truncated session, going straight to rapid fire round 2 of Ask Profit for today. Vaishali as well as Rajesh know the drill. The first question is coming in from Surya from Hyderabad. He's asking if you should accumulate now more of Anupam Rasayan as well as transformers and rectifiers. Rajesh?
Avoid both.
Avoid both, got it. The other ones are Tube Investment and Chola for the next 2 years. Which one to buy, Rajesh?
Both of them.
Got it, Rajesh. The next one's Thermax. Our viewers bought 4,395 rupees per share. So he's sitting at a loss right now. What would you recommend him, Rajesh? Should he wait on for a lot more time?
Go for long term.
Hero Motocorp bought at 4,139. Is it a good time to hold this counter, Vaishali?
Continue holding.
The next one that's coming in is from Hyderabad on Titan. 3,560, good for the next 2 to 4 months, Vaishali?
Hold with the trading stop loss for target of 4,200.
Well, it's topical. Interglobe Aviation, is it a good time to enter, Vaishali? What would you recommend?
Technically, 4,600 is a good support.
Adani Green Energy bought at 1,938. What would you recommend, Vaishali?
Continue holding.
Zentech, Mangaldas is asking, he's bought at 1,612. What should he do, Rajesh?
Hold.
The next one that's coming in again is on Trill at the current price, but he's asking a short-term view. Vaishali?
Add.
Vikram Sola bought 200 shares at 400 rupees. Could he average or buy more right now, Rajesh?
Try to exit at higher levels.
A couple of stocks you would recommend for the next 1 year. He wants to invest 1 lakh rupees. This is Madhu from Hyderabad. Rajesh?
Reliance Industries, Bank of Maharashtra.
The next one is coming in on Websol Energy, a smaller counter. Vaishali, do you track this one? What is your view for the next few months?
Well, it is hold with a stop loss of 85. Look for a target of 110.
BEL bought at 401. What should he do, Rajesh?
Continue to hold.
A tech view on Anantraj bought at 640. What should he do, Vaishali?
Avoid.
Hyundai Motor, is it a good time to buy for the next 1 year, Rajesh?
Buy.
Is it a good time to enter Max Financial Services as well? It's a counter that's doing well, Rajesh.
Add.
The next one, Central Bank of India at 45. Should he continue to hold, Vaishali?
Hold.
ABB at 5,960. What should he do? He's sitting at a loss. Vaishali, should he continue to hold? Finolex Cables at 808. Should he continue to hold, Vaishali?
Hold.
Container Corp bought 200 shares at 512. The next 3-year view, Rajesh. Another one that's coming in on Tata Power, 30 shares at 295. Should he hold, Vaishali?
Hold.
Well, that's the end of the second round of the rapid fire. We were able to take in 51 queries, despite getting a lot more perspective on the show today from Meesho, from Satyan Nadella, amongst others. So, Vaishali as well as Rajesh, thank you so much for helping us solve all those queries today. A lot more action on the other side of NDTV Profit. We are doing KYC on a key company in the solar space. Watch out for that one. But thanks so much for joining in to Ask Profit. A lot more action on the other side.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani, and today in KYC is the very interesting company. It's just been 1 month since its listing, likely that's MV Photovoltaic. An interesting name, there's a double M and double E to it as well. But the question is not the short forms or the numbers, but the question is why we are getting this company. It's just been 1 month. There has been some analysis, but there are concerns in the industry.
Exactly.
That's where the street is getting spooked. Or is it the wrong time for the IPO to come in? That's also a question. But overcapacity in modules in the solar segment in India, that can this become a commodity theme? That's also a big question which the HNIs and bigger investors have spoken about. What are the company's plan going ahead? The second question I would like to know, for these various segments, ingots, wafers, frames, this is a bit technical, but these are important processes in this entire solar integration setup. The expansion and the capex plan, will it be on the higher side? Will it push the balance sheet numbers into some kind of a deficit? Or what will be the growth target? Because it's a sunrise sector technically in India. So we will be looking at least for the next 2 years, what the management is giving the guidance, and also order book details. That's very much important. And how much of that revenue actually comes back? That's very much important. Last question would be export contribution. I think Varsha, the US export, the trade tariff overhang, that's always there. So we'll be looking at these questions also from the management, but let's decode the company. What is actually it's there about? Because photovoltaic, it sounds very, very, Greek. Can you just break that down?
Right. So, talking about what this company does is this company manufactures PV modules and cell. Now, the peers for this company, the competitors of this company would be, if you know what Worry Energy does, or Premier Energy, so you have Vikram Solar or Websol Energy. So all these companies are peers when it comes to MV Photovoltaic. So basically they make modules and they make cells. So cells are used to make modules. So they are going backward integration also. So they are going from modules to cells, then cells to ingots, wafers. We'll also speak about that. Talking about the installed capacity, the capacity of modules stand at around 7.8 gigawatt, which is at 42.4% utilization. We're talking about the cell capacity, which stand at around 2.94 gigawatt at 67% utilization. Talking about capacity expansion plans, as Sharad was mentioning as one of the key question, well, they are targeting 16.30 gigawatt of module by H1 FY28, and the key projects includes 2.5 gigawatt of module line at one of the units, and also which will come online in FY26, and 6 gigawatt integrated cell module facility at Devhanli, which is slated for H1 FY28. And also, talking about the capacity plans, now we all know what are the concerns going on when it comes to, overall solar ecosystem. There are talks of overcapacity when it comes to modules, and government wants these module companies to backward integrate into cells, into ingots, into wafers. Just for the benefit of viewers, what is ingots and wafers? Nothing but the raw material, I would say, required to make cells. Then from cells you make modules. So everyone is now backward integrating into all these raw materials, because that's what government want, because we have overcapacity when it comes to modules, but there's no capacity, domestic capacity, when it comes to ingots, wafers and frames. That's what every company is targeting on, and ingot is no exception. And MV photovoltaic is no exception to that. Talking about the revenue bifurcation, export contribute only 0.6%. That's a good news, considering the US tariffs and all, because Waaree Energy was hit because of 20% of revenue coming from US market, while domestic contributes almost 99.4%. Talking about the segment wise, so B2B, the company is into B2B segment, which contributes almost 99%, and rest comes from B2G overall. So overall, nothing much. This company makes modules and sells, is also backward integrating into many of the raw materials.
Correct. But let's just give our viewers the entire flow chart of the show. And Varsha pointed out the important 8 rating parameters where we judge a company in our KYC show. These include the basics, income statement, balance sheet, cash flow, return ratio, and also the shareholding. Street cred is nothing but your stock price movement happening, and valuations as well, and overall outlook for the industry as well as for the company. That is where the important 8 criteria we judge and give a rating in the KYC segment. But interestingly, you had a chat with the management as well, and that becomes very much important about how to go about things. So what would be the first kind of rating parameter you'll judge the company on?
Well, every time, like, we start with the income statement, because we need to assess the financials of the company. So starting with the income statement, we would give a +1, or rather a positive thumbs up to this. Why? Because if you see overall, the CAGR growth for this company when it comes to revenue comes at around 61%. The EBITDA CAGR growth, if you see, comes at around 91%, and net profit 205%. But just wanted to highlight, MV is no exception when it comes to bumper or sharp uptick in numbers that you're seeing. This goes with all of your module and cells company. Just go and check out the financials of all these companies, say Vikram Solar or Waaree Energies, or for that matter Premier Energies. They've all shown a good uptick in numbers. Even in Q2 FY26, if I were to talk about for MV, good growth year on year when it comes to EBITDA. There was a sharp increase in EBITDA, and so as the numbers were also good for its peer companies. Just to highlight, the revenue growth that you are seeing is because of the new capacity coming online, and of course the EBITDA margin improvement is because of the increased capacity utilization. So overall, good numbers, strong numbers in the last 3 years, and even quarterly numbers are also good, and hence we have given a thumbs up. Even the margin trajectory, if you see from FY22 to Q2 FY26, the margins has grown sharply from 18% to 35%. We need to see whether this margin is sustainable, but overall, considering the historical financials, we would give a thumbs up to it.
Well, thanks for that, Varsha. But the balance sheet segment, remember, this is a newly listed company. There has been some shoring up of reserves as well, and just look at the book value numbers. That's on the higher side as well. Borrowings, that has actually come down, but not very much significant borrowing coming down. It's roughly 1950 odd crore rupees in FY25. That's down to just 1863 odd crores. That means we will see in the coming quarters this number actually coming down as well, when the company, as and when they give out their numbers, because of the IPO proceeds also there. Cash and bank, you could see that's a significant downtake coming in. It was 409 crore in FY25. It has been going down, and this is because of the capex expansion and the cash deployment which is happening. 175 odd crore rupees. So net, it's a neutral take coming in from the balance sheet.
Talking about the cash flow statement, let's look out how cash flow is looking like. So good numbers, and hence we've given a thumbs up. If you see the operating cash flows from 234 crore to 614 crore in FY25, even the H1 number also looks good. CFO to PAT conversion not bad when it comes to FY24, and there's been some suppression in FY25, but overall not a bad thing when it comes to cash flow, and hence we've given a thumbs up for cash flow statement.
The return ratios are magnificent for FY25. Just look at the numbers. Of course, the concern will be, will these ROC numbers or the ROE numbers sustain going ahead? And generally, by rule of thumb, it's around 15 to 20%, where we see there is some kind of positivity in this segment. So there are some aberrations also, but on the higher side, be it ROE and the ROC numbers, of course, some capital related adjustments are there. But currently, looking at the screen, I will give this a strong thumbs up.
You know, talking about the shareholding pattern, since this is a newly listed company, we don't have much data, and hence we've given a neutral rating for that, because if you see, promoters hold 80%, FII's holding is at 6%, DII's holding is at 11%, and public is at 3%. But nothing much dramatic over here, neither on the positive side nor on the negative side, because we don't have the trend and the data, you know, justifying the positivity or negativity for that matter, and hence we've given a neutral rating for shareholding pattern.
Varsha, I agree with you. It's just been 1 month, so judging a company on the street, the stock reaction, that wouldn't be fair. But net from its IPO price, it is still down 7%. And interestingly, the IPO price and the listing price are almost the same, 217 rupees per share. So on just that basis itself, I'll give a thumbs down. Of course, the company has a long runway, and we will be judging the company more as and when how the company proceeds and the stock reactions takes place. But as of now, it's a thumbs down when it comes to the street cred.
Now, you know, coming to a valuation point, now considering or comparing it with peers like Waaree Energies, Premier Energies and Websol, it's trading at 20x of price to earning ratio, which is not bad considering the peer you know, valuation. But you also have to consider, and maybe Sharad will speak about that on the outlook front, what street is expecting maybe in the next 1 or 2 years max. Analysts and the streets are expecting that the margins for these companies may go down, considering the overcapacity situation when it comes to, you know, whole solar chain, and hence maybe one of the reasons why you're seeing you know, from the last few months, couple of months, all these module and cell companies, they've not given much returns to investors. But considering the peer valuation, of course, this is at a discount to all its peers, and hence we've given a, you know, a neutral rating for valuation.
That's correct, and I'll agree with you, Varsha, on this front. The outlook segment, let's look at the industry perspective about it. Had this stock come for IPO, say 12 to 18 months before, then there was a very strong euphoria, but that is actually dying down, and that's why we saw that in valuations. The outlook, of course, it's a stronger side. They are targeting the second module line expectations that's operational by the FY26, and FY28 target is 16.3 gigawatt of solar and 8.9 gigawatt of cell capacity. Combine them, it's 24 plus gigawatts. Order book revenue visibility is there. It's for the next 12 to 18 months. That's fine. And 25 to 32% of production is expected to be exported over FY26-30. That means the company has actually not opened up its book when it comes to the exports as of now. So it's largely insulated, as Varsha had pointed out, from threat of US tariffs. But the commoditization of this industry, that is where the concern lies for me. So because of a strong outlook also, the industry outlook is not very convincing, and because of that, I'll give a neutral rating. But let's revise all of these important 8 categories which we have judged the company on in our show at KYC. Income statement, balance sheet, cash flow, all the financials have been very good. Varsha, we have given 3 thumbs up out of it, but the concerns, or maybe, you know, the investment period or the post the listing period is just 1 month. So we have given neutral ratings over here. Not much returns have come in from people who have entered the stock post IPO. And outlook, I'm still concerned regarding the industry rather than the company. So net we have given 5 out of 8 in the total KYC rating setup as well. But of course, we'll take a short break, and after that, we'll be with the management. Suhas Dhonti, he's the CEO of MV Photovoltaic. He'll join in and he'll answer all our queries at KYC. Stay tuned.
2025 has been a tremendous year for markets, money, and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, 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 Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show.
Welcome back to KYC. Well, as promised, now we are joined by Suhas Dhonti, who is CEO at MV Photovoltaic Power. Well, Mr. Dhonti, welcome at NDTV Profit. Pleasure to have you with us. Now, let's start this conversation by concerns in market of overcapacity in modules in India. Now, MNRE has also come out and said that there has been overcapacity of modules in India. Your views on the industry outlook for the same?
Yeah, I think that's a very valid point. Thank you, Asha. Thank you for having me here today. And I think, so basically, see, when it comes to modules, solar manufacturing, it is important to address the supply chain. So when you look at the supply chain, we have modules and then cells that is the upstream of the modules, and then further goes into wafers and then polysilicon, right? So the module capacity in India has been growing rapidly. And companies like MV, who have been there since 2006 in PV module manufacturing, we have grown to a scale and established our presence. But what happens if you look at 2025 as an example, there was 36 gigawatt of modules that were installed in India. And we had a ALMM capacity, that is the total capacity of module manufacturing, of 82 gigawatt. Whereas also 15 gigawatt of modules were imported into India, and we exported about 8 gigawatt. So totally, if you net it off, that means about 26 gigawatt was only the modules that were consumed from Indian manufacturers overall. So with that kind of a capacity, only of, like, you can see the phenomenal performance MV has done in FY25, as well as continued in that manner. In fact, did better in FY26, the first 2 quarters. So what's happening here is there are a few there is a capacity overcapacity, but there are few people in the industry who are going to be preferred manufacturers for developers, because of our track record, because of our experience, and because of our quality product that we are capability with. And more importantly, what is going to happen is I'm sorry. More importantly, what's going to happen is that there is going to be a backward integration that is going to be important. So, as you know, ALMM List 2 is coming in place from 2026 June onwards, and there is going to be a requirement that there has to be the manufacture all installations that is going to happen in India of PV modules must be with cells that are made in India. So with that case, companies like MV, we already have a existing cell capacity, are going to be important. And more importantly, companies like MV, who have invested in the latest cell capacity, that is TOPCon capacity that we are talking about today, is going to be leading the sector. And what the ministry's advice, if you've seen recently that has come, what you spoke about lending, it is quite important, because as after this ALMM 2 comes in place, the standalone module capacity starts to become quite irrelevant.
Right. But on that note,
just concluding that point, what's going to just remain important is going to be your integrated capacity.
Right. On that note, Mr. Dhonti, government clearly wants to go deeper into value chain. You talk about ingots, wafers, and frames. Do you have any plans for the same apart from cells? Do you have any plans to enter into wafers, ingots?
Absolutely. I think you can see in our prospectus also, we had clearly mentioned a strategy that we intends to get into wafers and ingots, manufacturing of wafers, and that basically is the strategy that MV wants to do. But what is also important for a business like ours is to time that particular expansion. So when it comes to cell manufacturing as well, MV was not is a company that timed it in such a case where we were not too early, neither were we too late. So that kind of a financial discipline, strategic discipline, is crucial to maintain, which is why the company has been profitable for every single year as of today.
Right. Mr. Dhonti, tell us about your expansion plans when it comes to ingots and wafers and capex aligned to it.
Absolutely. So today we have a 7.8 gigawatt module capacity, and we're at about 2.9 gigawatt cell capacity. First, I'll talk about the module. With 7.8 gigawatt module capacity, we're adding another 2.5 gigawatt of module capacity that's going to be commissioned anytime now, and we're adding another 6 gigawatt of module capacity that's going to be commissioned by March 2027. And when it comes to cell manufacturing capacity, we have 2.94 gigawatt right now, and the integrated capacity of that module 6 gigawatt and cell 6 gigawatt is going to be commissioned around the same time by March 2027. So that means the company is going to have full operational capacity for the FY 2028 with a capacity of 16.3 gigawatt of module and 8.9 gigawatt of cell.
On that, Mr. Dhonti, if you could help us, our viewers, to let us know the growth targets that you have in mind for FY 26 and 27 in terms of revenue.
So you can see the guidance. The way I'd like to look at it is with a capacity of 7.8 gigawatt of module currently and 2.9 gigawatt of cell, and you can see that out of that 7.8 gigawatt of module, one module line was commissioned in May, and the other module line was commissioned in Jan. So considering this scenario, and you can see that our mix of cell and module is about 35% of cells to the overall module supply that we do. We have been able to show a revenue of about 2,100 crores in in the first half of this year. So considering that and the growth plans that we have, I think we are very confident to continue the trajectory of growth that we are doing, and with the increased utilizations that is going to come up because of our expansions that we have been doing.
Understood. Well, thank you, Mr. Donti, for joining us with this conversation, and all the best for the business. Well, Sharad, clearly the next 2 years looks good, but as he said, as Mr. Donti was saying, that it is all about companies going into backward integration. Those companies will succeed.
Well, this was a very interesting take from the management, but this was valid, say, 1.5 years or 2 years ago. Right now, it's not convincing when it comes to how the industry is panning out, and I feel there will be significant pressure in the industry, and the company might get the brunt of it as well. And that is something which the street is still concerned even after this. That's all for the show. Stay tuned to KYC.
Twenty 2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely. You can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Thank you so much for tuning in to Markets at 12. Microsoft is working with India's Ministry of Labour and Employment to bring AI capabilities to the eShram and National Career Service platforms, which is powered by Azure OpenAI service as well. The goal, in fact, is to improve access and services for workers in the unorganized sector. Let's take a closer look.
India has more than 400 million unorganized workers. They are earning only day-to-day wages and not getting any benefits. We need to shift the people from the informal to the formal sectors. That would help us to develop our economy. Through the initiative of eShram, the National Unorganized Workers Database was developed, and we are able to provide those workers with social security benefits, also giving them access to the National Career Service portal.
NCS is a one-stop solution for job seekers, employers, training providers and counselors.
We have AI-based matching between the job seeker skills and the employers. So any informal worker can go to the NCS portal and match with the right employer. NCS has an AI resume builder, and if a person is lacking certain skills, the AI tool helps them to develop those skills by giving them recommendations.
We were expecting millions of unorganized workers to register in this system. So we wanted to have scalability, reliability and security. Microsoft Azure met all these qualifications. In addition to that, Azure OpenAI has become a game changer for unorganized workers.
पहले कंपनी में काम करता था ठेकेदार की तरफ से, तो मैं एनसीएस पे गया, वहाँ मैंने जॉब का रिक्वायरमेंट गिरा, तो मैम जॉब मुझे ड्राइवर की मिल गई और 50% ज़्यादा है। दिल्ली में कंपनी है ट्रांसपोर्ट की तरफ से, मतलब मैं बहुत कुछ कर सकता हूँ। अभी मुझे बहुत कुछ मतलब इससे सीखने को मिल रहा है और ये लाइफ सेटल हो सकती है इससे मेरी।
Around 150 million workers are now on the NCS portal. We are also now trying to bring in more and more schemes to benefit these workers. AI is supporting us to provide opportunities for the individuals and youth of the country.
Alright, and there you go. That's the word coming in terms of Microsoft and in terms of that very big investment. And that's something that we're looking at this afternoon. But what else are we looking at when it comes to markets? Is something that we should see when you take a look at the sectoral picture. Of course, you do have metals, oil and gas, auto, energy, realty, exactly in that order that are leading gains. On the flip side, there's a defense that is on the back foot. PSU Bank seems to be continuing the rally as well. There's Nifty, IT, Finance and Bank as well on the back foot as we speak as well. And in terms of the mid-cap space as well, there's a bunch of counters that are actually under pressure. So there's a Paytm that makes it to that list, PB Fintech, Coromandel, Hitachi Energy, as well as Wari Energies. Some of those counters that we're going to be talking about later in terms of the market moves. That's something that we should be looking at first things first. In terms of Nifty, Sensex, of course, you did have 2 days of weakness when it comes to the benchmarks. Largely, by and large, closed in the red, and that's something that we'll be exploring in terms of what next, because of course, this is the month of December, and you do have a Santa rally that we should be penciling in. Let's try and get the word coming in from Nikhil Khandelwal, MD Systematics Corporate Services, who's joining us to try and understand the picture when it comes to this. Nikhil, thank you so much for joining us this afternoon. I wanted to get a sense of what you think about the picture when it comes to the markets. Is there any pocket that is standing out to you?
Hi, good afternoon. Thanks for having us on the show. The markets,
definitely over the past couple of months has been in consolidation phase. And I think the shift of capital, largely the institutional capital, is happening in favor of larger businesses or businesses which provide more value at this levels of market. So from our perspective, you need to invest in pockets where there is value quite visible. The earnings momentum and earnings visibility is quite prominent, and hence there are certain specific themes or sectors or businesses which we have been going long for ourselves and for our clients as well. Specifically, we can elaborate more, but banking, pharma and healthcare, and certain new areas of circularity as a theme, wherein we like businesses like recycling, etc., are the prominent themes where we are seeing significant potential for investments, strong investment ideas, etc.
Absolutely, and Nikhil, we'll actually delve deeper when it comes to those pockets that you've mentioned, right? So when it comes to pharma and banking, what are you looking at specifically? Of course, we'll come to the bit that you talked about that really stands out to me in terms of recycling standing out as a theme, and we'll get to that a little later. But for now, let's also talk about bank and pharma.
Right. No, so from a banks as an overall sector, our view is that the sector is seeing significant amount of advances growth. The advances growth in the sector is close to about 11-12%. The sector has already crossed the hurdle of asset quality. So asset quality in the larger banking space is not an issue. Most of the banks are sitting with very good quality of book. So the differentiation is going to come from banks who are technologically strongly enabled, have got a good and widespread presence across corporate, large books across corporates, SMEs and retail, and SME and retail in particular as a category for us is a standout growth category, wherein the demand for advances is in excess of 12-13%. So banks who have large franchise, well capitalized, are having very strong presence in retail and SME as a category, and at the end of the day have very good have a valuation comfort. In that parameter, banks, among the larger banks, PSUs actually has been a big theme which we have been harping on for the last 6 months or so. So within the PSU pack, we at this levels also we like Bank of Baroda is our top pick. And among the larger banks, we see Axis and ICICI Bank as our top picks. So on all the parameters of retail and SME as a category, where the advances growth is 12-15%, strong balance sheet, very strong comfort on margins, wherein these banks actually are increasing their share of fee-based income. So margin comfort is significant. And valuation is on our side. These banks are trading at price to book, which is lower than the ROAs, which are there in their balance sheet. So given these 4-5 parameters, Axis and Bank of Baroda and ICICI are our top 3 investment picks as far as larger banks are concerned. Another very interesting pocket within the banking space, which Systematics as a house has been talking and writing about quite actively over the past couple of months, is the small finance bank space. And within the small finance banks, the top 4-5 names, starting from the AU small finance banks to Capital, SFB, Ujjivan, Equitas, Jana, all 4 or 5 of them have actually gone through a very rough ride in terms of their book from microfinance category. That their entire microfinance pain is behind us. These banks have started to diversify beyond microfinance into secured lending in a big way. Most of the banks are actually diversifying beyond their core states. So even geographic concentration is actually getting diversified. And these banks, except for AU, which is probably at about 3 times price to book 1 year forward, most of the banks are available at 1 time or less than 1 time price to book. So the entire small finance bank as a category is actually something which for us is going to create the maximum alpha over the next year or two. So banking as a space, there are lots of interesting themes which are popping up, and of this, these are the prominent themes or categories which we are looking at quite closely.
Well, absolutely. Thank you so much for that take coming in. So there you go. That's banking that makes it to Systematic's radar as well. Thank you so much for highlighting the picks as well when it comes to some of those banks. And thank you so much for joining us this afternoon, Nikhil. So there you go. That's a bunch of counters that actually stand out to Systematic. So there's Axis Bank, ICICI Bank, Bank of Baroda that make it to that list. And from within the buzzers of today, there's of course AU Small Finance Bank that does also make it to their list. But as we bid goodbye to 2025, let's take a look at some of the star performers of the year. Yes, the stocks which more than doubled, in fact. Why that happened, and would that momentum also continue? Varsha is here with that answer then.
Well, thank you so much. You know, there's a famous movie dialogue, 21 din mein paisa double. Well, these stocks have not doubled your money in 21 days, but surely, you know, in year to date. Let's see which are these stocks which has, you know, more than double the investors' money. You have Force Motors, you have NACL Industries, SML Mahindra, Lumax Auto, Lumax Industries, and also you have L&T Finance, Axis Tech, Apollo Micro, Gabriel, and AB Capital. Well, let's find out the reasons. Let's find out, you know, doubling के पीछे की कहानी क्या है, and what's the outlook going ahead. Talking about the Force Motors, the reason why the stock has doubled, of course, because of 2,000 crore 3-year expansion plan that the company has laid out, and EV focused strengthened order book outlook that the company has. While strong exports will support revenue visibility in future, and EV focus will strengthen the outlook when it comes to Force Motors. Shifting to next stock, which is NACL Industries. Well, the main reason why this stock has given good returns to investors is the Coromandel, when they acquired 53% stake, that was a key trigger considering the turnaround expectations from this company. Well, they're going to improve their margin from 4% to 9 to 10%, which is a huge uptick, which you will see in margin. And of course, margin eventually will come to closer to Coromandel's margin at around 17 to 18%. Well, next on the list is you have SML Mahindra, wherein you know, Mahindra and Mahindra acquisition led to the sentimental reversal that you're seeing in the stock. Gradual shift towards electric vehicle is the outlook that the company will see in future. Talking about Lumax Industries, well, you know, they've raised their guidance from 15 to 20% to 20 to 25% for FY26, and strong orders across two-wheeler and four-wheeler segments. These are the key triggers why you have seen, you know, sharp, rather doubling of the stock. You know, H2 launch indicates positive consumer sentiment for Lumax Industries. Talking about Lumax Auto, they're expecting FY26 revenue growth of around 20 to 25%, and also they've given a long-term guidance of around 11,000 crores of revenue by FY30. Key triggers why you're seeing the run-up in the stock, and they're expecting margins of around 14 to 15% for FY26. Order book, if you see, stand at around, you know, 1,357 crore, which is the, you know, outlook for the company. Talking about the L&T Finance, there you go. A shift towards high margin retail book nearing 80% of portfolio, and NBFC sector tailwinds have led to the sharp increase in the stock price. They're expecting 20 to 25% of AUM growth and expect to improve ROA to 2.8 to 3% by Q4 FY27 versus 2.3% in Q2 FY26. Well, next is Axis Tech, with huge interest I have seen in this stock because of the ambitious roadmap of around 9,000 crores of revenue by FY30, and they expect 20% EBITDA margin. Well, they are also expecting 45% of revenue and EBITDA growth for FY26 and 27. Talking about Apollo Microsystem, strong defense pipeline and FY26 order book has led to this doubling of the stock. Let's see what's the outlook. They're confident of 45 to 50% of revenue CAGR over FY26 to 27. Next on the list is Aditya Birla Capital. NBFC and insurance business have scaled sharply. Balance sheet has strengthened via capital infusion. This is the main reason or trigger why we have seen the doubling of the stock. But they aim to double their net, VNB over 3 years. Next on the list is Gabriel India. Major corporate restructuring and simplification has led to the sharp increase in the stock returns, and the revenue target of around 1,000 crores has been delayed by 1 to 2 years beyond FY30. That's kind of a negative outlook when it comes to Gabriel India. So except Gabriel India, if you see the companies that I've spoken about, all of these companies have good outlook. Maybe you can see good returns over the next 1 or 2 years.
Well, absolutely. Thank you so much, Varsha. So, 21 then may not be the case when it comes to some of these counters, but the outlook is in fact very good, except Gabriel India, like Varsha mentioned. Time for a very quick break. When we come back, more on the other side.
"2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here."
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities.
Welcome back. Thank you so much for staying tuned in. Let's take a look at IndusInd Bank that is in the spotlight. Sources tell your channel that Sunil Mehta will not seek reappointment as non-executive chairman of IndusInd Bank after his tenure ends in January 2026. You do have Vishy joining in with all of those important details. Over to you.
Right, so as sources are telling us that Sunil Mehta will not continue as the chairman of IndusInd Bank after January when his tenure ends. He's not seeking a reappointment, and this is something that he has already communicated to the bank leadership as well as the promoters. Now, this is an important development at IndusInd Bank, which has just seen a very contentious management transition which happened earlier this year. Mehta, as the chairman of the board, was essentially running the bank between the period of April 2025 and August of 2025, the 2 points at which the old management left and the new CEO stepped in at IndusInd Bank. The entire story at IndusInd Bank, of course, has unveiled itself because of certain discrepancies in accounting that happened earlier this year, which came to light, specifically in the derivatives as well as the microfinance portfolio. After that, you saw its then CEO Sumant Katwalia stepped down, as well as Arun Khurana, the deputy CEO of the bank, stepped down. Mehta, as the chairman of the bank, then took over strategic affairs at the bank while appointing a 2-member subcommittee to actually run daily affairs at the bank. As part of his role, he also led the board in finding its new CEO, Rajiv Anand, who took over in August of 2025. So now, with Sunil Mehta's exit from the bank, of course, what sources are telling us is that he has expressed that he's not keen to continue anymore because he's done a lot for the bank already, and now he's looking at the next chapter of his life. So there is a clarification that has come in from IndusInd Bank as well, which points out that the bank as well as its chairman are committed to ensuring due transition that might take place, while they've not confirmed Mehta's exit yet. However, they are talking about the fact that they will ensure that all transition is appropriately done. That's the story from IndusInd Bank. Sunil Mehta, the chairman of the bank, not seeking a reappointment after January.
Vishy, for joining us with that update then. So there you go. That's the update coming in as far as IndusInd Bank is concerned, and that's what sources are telling us. But let's also quickly take a look at some of those EMS counters as well. Of course, they've been under pressure, and for much of this week as well as some of last week as well in terms of key headwinds, you do have lofty valuations, concerns on working capital and institution selling, rising concerns by brokerages as well. And there's a bunch of things to look at when it comes to this one, right, Puneet?
Well, most certainly, and to talk about all of this and a lot more, Ajay D.D. Singhania, a Managing Director and CEO of EPAC Durable, is now joining in to give us perspective of what he's seeing on the ground. Mr. Singhania, always a pleasure speaking to you. Thank you so much for patiently waiting by. It's at a key and pivotal point that the industry is right now post the pandemic, probably the first time where you're seeing challenges across segments. But post Q2, what has changed for EPAC Durable? If you can give us some perspective on that, because you had reduced the guidance for FY26 in terms of revenues to be in low single digits or almost flattish. Does that guidance stay for now, given what we've seen post the GST rate cuts, which has benefited consumer sentiment, or is it that you feel that it is too premature to see any growth in FY26 in terms of revenue?
So, right, see, especially this current year has been very turbulent for the entire appliance industry, especially the cooling products, both ACs and coolers and all that. So significantly, the industry suffered at the hands of nature, the rains, and then everything disrupted the entire industry. And obviously, the industry has degrown quite a bit in Q1 and Q2. And then the overhang of inventory, though partly got liquidated thanks to the GST reform. There has been some liquidation definitely which has happened, and we see currently the sentiments are gaining and picking up. So at the same time, the new BE star rating label, which will get implemented from 1st of January, is again another one thing which will impact the prices again. So we will see price correction happening, one because of the star rating, and then the commodities and dollar impact definitely has its own impact on the overall pricing. So looking at the current new star rated and the new manufactured product
with the increased input costs, definitely the uncertainties are big. But at the same time, the industry is very confident, and the kind of RFQs or the planning what is in place as of now, everybody is planning for a growth for the calendar year 26 per se. So compared to calendar 25, 26 definitely looks much better. The outlook is definitely great, and the strong tailwinds still continue. And I mean, the AC is not a short-term story. So one bad year for the industry doesn't mean that the industry has lost its sheen. So I mean, everybody is very bullish. On in terms of the outlook for FY26, yes, definitely in line with the industry degrowth, there would be some impact, or EPAC has already taken some impact over Q1 and Q2 both. But Q3 onwards, definitely the order book seems very strong.
Right.
And we are recovering, although the entire lost sales recovery won't be possible. But yes, our other levers like the small appliances, large appliances are definitely helping us recover much faster.
So you mentioned that calendar year 26 will be much better than 25, point well accepted. But at this point, revenue guidance will largely remain flat for FY26. Is that the takeaway from this from you right now, Mr. Singhania?
So I'll not try to make any corrections as of now.
Okay, so it stays for a flattish revenue growth then for FY26. I know it's a very developing story. It's a very developing scenario that you're seeing on a daily basis. Just one question also on cost of raw materials. What is the current cost of raw materials for you from the imports that you're doing? And is the higher rupee to the dollar increasing your raw material costs as of now? If you can give us some perspective on that.
See, the dollar correction in past 6 months, if we see, has been close to, let's say, 4.5–5%. So that definitely impacts. But more than that, the base metals, especially copper and aluminum, both have increased by almost 20–25% in last 6 and 8 months. So that definitely is something which is a matter of concern. And the combined effect of both dollar and metal put together, the AC prices definitely are looking at like a substantial increase in the price.
Also, Mr. Singhania, your current, if you can give us some perspective on inventories as well. At the end of Q2, both at channel and brand level, it was roughly 3 million. Any number or is it largely similar as of now?
So the good thing is, like I was sharing earlier, looking at the upcoming season, the brands have already started ramping up production. So from mid-November till December, we see a lot of brands manufacturing, and our order book is also strong for the current quarter. So the inventory currently is being now piled up. So we're putting more inventory in place, especially for the 5-star rated product, in which the impact of B-star increase is substantial, and then again the impact of commodities. So all put together, a large production is in pipeline for the current November-December. So January quarter opening, we'll see a bigger inventory in place for the trade. So it could be as high as 4.5 million kind for the overall industry, from 3 million to almost increase to 4.5 million, which roughly is like, say, 25–30% of the projected sales for the calendar year 26.
All right, then point taken, Mr. Singhania, when it comes to the inventory, that's the outlook that you have. I also wanted to quickly try and understand the competitive intensity that you're looking at, because when it comes to the AC OEM space, it's a highly competitive space that you're looking at. Are you at all worried about competition there?
See, competition is not something which worries us more. I mean, it's one bad season doesn't really bother us much, because the long-term story still continues. And with the kind of penetration we have in India, definitely AC is going to double in next 3 years and onwards. So, I mean, a lot is yet to come. And in terms of competitive landscape, we rather see that there is scope for more players to come and join the race in another 2–3 years. So the outsourcing is increasing year on year, and players like us, OEMs, are definitely growing at a faster rate than the industry growth. So, I mean, the competitive intensity is not related to any price war or something like that. It's more of having a secured order book and capacity utilization.
Mr. Singhania, you mentioned that inventory will go up from 3 million to 4.5 million probably by January. Is that correct?
Yeah, that's the kind of outlook we are estimating.
And that's for the industry. For EPAC, will it be a similar trajectory that the inventory will go up compared to Q2?
No, so for us, the inventory is not there actually.
Okay, not
because
there.
Because we produce and we sell it to the brand. So the brand inventory, it's the brand inventory. Because whatever we produce in the current month gets built.
Got it. And because of paucity of time, just one quick question. Your borrowings had increased slightly, and the cash flow is something that everybody is looking out for now for all EMS companies. For you, any perspective on operating cash flow? Will it be in terms of positive this year?
Yeah, definitely yes. So this is what I meant when we say that the production is ongoing. So for us, the inventory is the other way around. We carry inventory in terms of the raw material. Since the production is already started, which means our inventory level will start coming down, and we will see operating leverage coming out of it.
All right, then. Thank you so much, Mr. Singhania, for taking time out and joining us this afternoon on Markets at 12. Thank you so much for taking out time there. But there you go, Puneet. That's a very clear clarification coming in there. When it comes to the management, and of course working capital has been quite the concern, so has valuations.
Yeah, most certainly, and I think the market will take the inventory point forward as well, but operating cash flow to be positive will be a key takeaway for investors as well. But that's all the time we have on this edition of Markets at 12. Stay tuned, a lot more action on the other side.
Woo! 2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched.
Hi, welcome back to NDTV Profit. You're watching Profit Buzzers with me, Puneet, and with me is Barsha. And over the next hour or so, we'll try and get you all the key stocks, all the key stories, and a key conversation in the healthcare space as well. But before we do all of that and a lot more, let's take a quick check of how the markets are doing, because at around 10:30, we did see the Nifty being up by almost 80 to 90 points. All of that has just got sold off in the last 3 to 4 hours. So we're back again below 25,900, below 25,800 as well. So it's a key trigger that we've broken in terms of support. The trajectory doesn't look too good, honestly, at this point of time. So we'll wait for the last couple of hours of the trading session, what happens with the closing of the Nifty 50. The heat map for the Nifty 50 will show you stocks like Eicher Motors and Mahindra, which were leading the day in terms of the Nifty. They have continued to do so. Mahindra has given up some of those gains, but Eicher continues to be the top gainer for the Nifty 50, but largely seeing some losses on Eternal, HDFC Bank, JSW Steel, amongst others. The advance decline ratio is going to be very interesting. A couple of hours ago, it was roughly 1,900 advances versus almost 500 declines. That trajectory has materially changed, as visible on your screen right now. So almost 1:1 now in terms of advance to decline versus 4:1 that was in favor of advances a couple of hours ago. So you're seeing that change happening in the markets as we go at the end of this week, and it just get weakened day by day. The mid cap and the small cap is also going to be the other interesting part. It was up by almost 0.3 to 0.5%. Those gains have reversed completely at this point of time, on the negative side now of almost 0.2 to 0.4%. So it is the pain in the broader markets very well visible, and the BSE 500 will tell you the similar trajectory as well, because across the board, some individual names that are doing very well in terms of 3 to 8% returns for ESAP, for MMTC, Balrampur Chini, amongst others. But the losses are also coming in on a bunch of stocks visible on your screen right now. But we're taking cognizance of the healthcare and the pharma space right now. And JP Morgan's Bansi Desai is now joining us to give us that perspective. She is the Vice President, India Healthcare and Pharma Research at the brokerage. Ms. Desai, firstly, very good afternoon, and thanks so much for joining in to NDTV Profit today. Largely, let me start off the conversation with what you feel of the outlook of the healthcare space, and it is multiple segments. So let me first focus on hospitals. It's a key segment that has done well at this point of time, amongst other individual names in the pharma space that have done well for investors. Do you feel that the capex cycle, which will continue over the next couple of years for a bunch of hospitals, will be the key driver for earnings for all these players, and how should we look at this from your perspective?
Thank you. Good afternoon, and thanks for having me. So yes, hospital remains one of the structural growth themes in the overall healthcare space. If you look at this industry has been consolidating over the last 4 to 5 years. But going ahead, most of these hospital companies have huge expansion plans. If you look at from a macro perspective, from demand perspective, in India, you have aging population, you have incidences of lifestyle-related diseases increasing, you have medical insurance penetration going up, and you also have, popular medical tourism, going in favor of driving very strong growth for these hospital companies. On the other hand, when you look at the supply, this is in huge shortage. So in India, we have close to 1.3 beds for 1,000 people, whereas the WHO guideline is to have 3 beds for 1,000 people at least. So we really need to more than double our capacities to meet the WHO guidelines. And to do this, most of these organized players, are embarking upon, huge expansion plans. So over the next 4 to 5 years, we are expecting these companies to almost, increase their capacity by 50 to 100% in some of the cases. This will clearly accelerate the revenue growth for the industry. So if you look at the last 5 years, hospital industry probably has grown at 17-18% revenue CAGR. We expect, that momentum to accelerate a bit on back of this expansion plan. Now, the good thing about this expansion is that this is largely, in most of the cases, this is brownfield in nature, which means that the break-even timelines of these beds are going to be a lot more faster, and it will contribute to profitability without, creating that margin drag. At the same time, it will also lead to improvement in ROCs. So while yes, there is, huge capex coming in. There is huge expansion plans over the next 4 to 5 years. It is unlikely to create a drag on margin, which has always been a concern for investors when hospitals enter into a capex cycle. So our sense is that yes, in the next 5 years you will see almost 17-18% revenue CAGR, but you will also see EBITDA growth of 20% plus coming on back of this expansion. The 17-18% growth that we talk about, probably 12-13% of this growth is going to come from the existing hospital setup, and the additional 4 to 5% per year will be contributed by these new beds which are getting put up.
And Ms. Desai, you make a very valid point that while the capacity will increase, it will lead to earnings growth. Margins are also expected to expand in this particular point of time. So is that largely broad-based across clusters like West, South and North? And is that also visible in your top picks from this space?
I would say that, whenever you have new beds, for sure, in the near term, it is going to contribute to losses. And it usually takes anywhere between, few months to a year for these beds to achieve break even. So it really depends upon the extent of expansion that is happening. So if your existing hospital is still a large portion of your EBITDA, which it is going to be, the margin, drag from the newer beds is going to get absorbed, because your existing beds are also going to see margin improvement because of operating leverage benefits playing out. So the trajectory of margin will be different for, different companies depending upon where they are. There are certain stocks, certain companies where there is room for even the existing margins to improve significantly or to reach a sector average, whereas there are certain companies which are already at an optimal level of margins, where there is limited scope of, margin improvement in the existing beds. So it all depends upon the mix of the nature of beds that you're adding, if it is brownfield or greenfield. For instance, brownfield beds can break even day one itself. So the extent of brownfield expansion and the execution, and the efficiencies of these companies will determine the margin trajectory in this period. Right. But we are cognizant of day one itself. So the extent of brownfield expansion and the execution, and the efficiencies of these companies will determine the margin trajectory in this period. Right. But we are cognizant of the fact that you will have those quarters in between where margins are probably lower than what you would expect, but over a 12 to 15 months period, we expect these companies to absorb these losses quite well.
Right. Just wanted to have an outlook. What's the outlook on the segment, and why do you believe that DVs or Cohens or for that matter Anthem will outgrow the sector overall?
If you look at the global CRDMO space, this is over $200 billion industry. And India's share today is very small. We just account for 4% of the market share of the global CRDMO space. Obviously, we've come a long way in this journey. A decade back, we only had like handful of CDMO companies. And now we have a bunch of companies offering host of capabilities within the CRDMO space. We are constructive on the space, given we see very strong macro tailwinds. And this is coming from the fact that multinational companies want to evaluate more reliable partners, want to evaluate compliant partners, diversify their manufacturing presence. And because of these supply diversification trends, we are seeing, Indian companies benefiting out of these macro tailwinds. That's number one. Even fundamentally at the individual company levels, we are seeing these companies seeing increased amount of RFQs, which is request for quotations. We are also seeing these companies investing into differentiated capabilities. So we have always been strong in the small molecule space, but incrementally we are developing our capabilities on ADCs, which is antibody drug conjugates, or peptides or oligonucleotides. So we are also moving up the chain in terms of offering complex capabilities. Alongside this, these companies have also announced huge expansion plans, huge capex, right, which is in their capacities. So all of those things, all of these factors, will definitely lead to these companies growing, at a faster pace. As such, India is expected to grow faster than their peers in the region. And within that, some of these companies who are investing into right areas, should grow, faster than the industry level.
Right. Considering the capex these companies are doing, Ms. Desai, when do you see these capex investments turning actually, into revenue of these companies?
Well, it really depends, but usually the rule of thumb is that it at least takes 2 to 3 years for you to reach a optimal level of gross asset turnover ratios. So these companies have been having a gross asset turnover ratios of anywhere between 1 to 1.5. Our sense is that if you're investing today, it at least takes you about 3 to 4 years for you to reach that full potential.
Ms. Desai, thanks so much for joining and giving us perspective across a whole bunch of spaces in that in the healthcare space. We wish you the best. Look forward to our next conversation, but thank you for joining us today.
My pleasure. Thank you.
Well, it's time now to slip into a very short break. A lot more action on the other side. Gaurang Shah is also joining us, Senior Vice President at Georgette Investments. Gaurang, very quick view of... Firstly, let me ask you a specific question on the CDMO space. I know we have spoken to you about it before. Does your larger picks remain kind of similar of what they have been in terms of preference?
Thank you so much, Puneet, for having me on the show. Good afternoon to all of you all. A small disclosure, all recommendations are part of our fundamental research team long term. Our company, Georgette or I, we do not have any personal investments, no conflict of interest, no financial interest, but we give recommendations to our clients on similar lines. They might hold their position. So, Puneet, the choices across the board, whether it is to do with pharmaceutical manufacturing, whether it is generic, CDMO or otherwise. But our view, especially my personal view, Puneet, is that along with pharma, you should also have healthcare, and along with healthcare, you should also have diagnostic center, because all these three verticals form the universe called pharma, right? Because they are very closely interlinked to each other. So we have on one company that is purely 100% CDMO play, Ekums Drugs. We had an IPO note on that, subscribes on the making a base of that IPO note. Yes, we like CDMO space. Other than that, we are positive on Cipla, Sun Pharma. We are positive on Gland Pharma. We are positive on Glenmark. We are positive on Aurobindo Pharma, Natco Pharma, to name a few. In the hospitals, healthcare, we are positive on Apollo, Fortis, and Max Health. And in the diagnostic universe, we are positive on one. In the hospitals, healthcare, we are positive on Apollo, Fortis, and Max Health. And in the diagnostic universe, we are positive on one company called Dr. Lal PathLabs.
Well, that's Gaurang's pick across the whole bunch of pharma space. But Gaurang, stay on. Time for a very quick break. Lots more action on the other side.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
'25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head to head.
Welcome back. You're watching Profit Buzzers. Well, 3 stocks which I'm gonna focus on. Let me start with Anupam Rasayan, wherein company is gonna acquire 100% a stake of Jayhawk Fine Chemicals, and the acquisition is at $150 million, which values the deal at 9x EV EBITDA. What are the benefits that Anupam will get through this deal is, one is the acquisition gives direct US manufacturing presence and immediate access to global customers and end markets, and it also strengthens their performance material and semiconductor linked portfolio. Now, performance material, if you see, is a high margin chemicals which will lead to aid in EBITDA margins, and also builds forward integration after the acquisition of Tanfex, which led to backward integration. Well, the second stock which is in focus is GPT Infra, wherein they've secured an order of rupees 199 crore from Northeastern Railway in Gorakhpur, and the order is to construct bridge substructure. Next list on this list is Godrej Industries and Godrej Agro, wherein the group is going to invest 10,000 crores in Telangana, and Godrej Jersey has signed an MOU of rupees 150 crore with Telangana government, and the MOU is for setting up a dairy processing unit. So these are 3 stocks, which are on my list, on the back of news flows. Well, Gaurang, let me come to you and let me ask on Anupam Rasayan, because if you see the acquisition that they're going to do is a good acquisition for them, because one is through Tanfac acquisition, they went to backward integration. Now they're going into forward integration, which will, help the aid in EBITDA margin, of course, after 2 to 3 years once the integration happens. Do you track this counter, and how do you see this acquisition for Anupam?
Well, hi, good afternoon to you as well, Vishal. So we have a coverage on a couple of specialty chemical companies. On Anupam Rasayan, we don't have a coverage, but let me share my insight, if you will. I think it's one of the strongest and well-placed players as far as the opportunities that are opening up with respect to the export market. And in the last maybe about year and a half, a lot of specialty stroke agrochemical companies invested a lot of money in R&D and in identifying new products which will cater to the global demand and markets. That is where I think Anupam Rasayan had a little bit of finer edge on the higher side. And the acquisition that the companies had, not only Anupam Rasayan, but earlier also, will only add to the good product profile offering in the domestic as well as in the overseas market. So it's a strong play, and I think this acquisition will definitely help Anupam Rasayan in the long period of time.
Well, the flash on the bottom of the screen right now is also a very developing story. Breaking news coming in that IndiGo CEO gets another one-day extension to appear before DGCA. Now, it's going to be a key one because we've got some very strong comments coming in from the aviation minister on him having the option open to sacking the CEO of IndiGo as well. It had an impact on the stock yesterday. Today as well, it's going to be a key one that we continue to track down almost 2.5%, and the correction has continued to develop over the last 3 to 4 days. So the cancellation of flights that we've seen from 4th of December all until the last weekend and has been consistent. So over the updates that were coming in, almost 1,600 flights that had come back for starting off from almost 2,200 that the company used to do at one point of time. Is something that we'll continue to track. Now, they have presented, of course, some comprehensive data, and the CEO will be submitting the complete report before DGCA by 3 p.m. tomorrow, and that will lead to, of course, a lot more conversation with DGCA. We will continue to track all those updates and get you right here on NDTV Profit. But the other aspect will be, and we'll get my colleague Danish also to talk about it, will be that the data they will be providing will have all the relevant updates to what they've done from December 4th all the way up till today. But my colleague Danish, who has been on top of the story, is joining in right now to get us some perspective on this. Danish, over to you.
Well, Puneet, that's right. The DGCA has given a one-day extension to IndiGo, and the CEO and other senior officials have been summoned to the DGCA office, and the meeting is expected to take place tomorrow at 3 p.m. And the DGCA is directed to provide the comprehensive data and updates related to the recent operational disruptions that we have seen over the past 1 week. And in the meeting, the DGCA has asked IndiGo to provide the comprehensive data on the flight restoration, that what is the current status and what is the progress in accommodating the affected passengers. Besides this, as far as recruitment plan and pilots and crew is concerned, they have to give DGCA the proper plan in place, that how do they plan to hire more pilots, what is the current status of pilots and the cabin crew strength, and what will IndiGo do to prevent a roster shortage as well as the FDTL related issues. Besides that, the other data that DGCA is seeking from IndiGo is on the status of the cancellation of refunds, what is the stage of the baggage returns, and they also have to give proof to the DGCA that as far as the flight cancellations are concerned, how timely were the passengers being informed, and apart from that, they also have to give DGCA the proper breakup of the rerouting and cancellations. So basically, the DGCA has sought some important amount of data from IndiGo, and this is not just what has happened in the past, it is also about the future plan. How do they really plan to navigate through the so-called pilot shortage that we're seeing right now?
Well, thanks so much for that, Danish, getting us those key updates, and we'll continue to monitor that counter as well as we go forward with the trading session. But Gaurang, anyone who's holding IndiGo right now, what would you suggest for those investors? Also, a lot of questions that we also want to ask Profit. If it's a good time to bottom fish in this counter post the correction, what would your advice be to investors?
Well, honestly, first of all, Puneet, I think Peter Elbers has got zero responsibility and absolutely no morale. He still continues to be at the helm of the Interglobe Aviation. It's rather sad, right? For whatever he's done on the company, and more importantly to the passengers. I equally hold DGCA responsible for it. I think you just can't put all the blame on Interglobe Aviation. DGCA is also equally responsible. Having said that, bottom fishing, or if you are already holding the stock in your portfolio, and this opinion that I gave, Puneet, was my personal opinion. We do have a positive coverage on interglobe aviation. I think it'll take a while. Peter Albers has mentioned that 15th of December. I don't think it's going to be that easy. Though he and the company management claims that the operations are back to normal, but the ground really is totally different. Very sad to say that the passengers had to go through what they had to go through. It still remains, after the 10% curtailment also in the flight schedules, it still remains to be one of the largest fleet operator and a market shareholder as far as the Indian aviation sector is concerned, domestic. We do have positive coverage. Yes, it will take time. It will be, at least in the short to medium term, Puneet, the stock will react to a lot of news flow which will unfold. But long term, we remain positive.
Well, that's Gaurang's view coming in on interglobe aviation. But, viewers, time for a very short break on Profit Buzzers. We'll be right back. Lots more lined up on the other side.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. Through the masters, understand markets, decode money. Through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back to Profit Buzzers, and looking at the markets, there seems volatility coming in. Let's just see quickly Nifty and Nifty Bank, how they're actually panning out. Nifty is trying to recover but still in the red. The same story goes for Nifty Bank as well. Volatility coming in, the heavy counters as well. Just to decode this, we are also joined by Gaurav Sharma. He's our technical guest from Globe Capital. Very good afternoon to you, Gaurav. Interestingly, what are the important levels being suggested here? And also, if you could just add in with your technical picks.
Yes, hi Sharad, good afternoon, Ranjing, and to all the viewers. So, Bank Nifty, of course, the catalyst, and today played its parts in taking the Nifty index downwards. Although I was expecting that the market should hold on to the higher levels and 950 would be taken out and more higher levels would be seen in day's trade, but that didn't happen. Now we are heading towards the support level mark. I'm just keeping the fingers crossed that the 25,750 level should be held. Otherwise, if that is taken out in today's trade, more sell-off can be seen and Nifty will open the gates for further downside towards 600 and even lower levels are possible. Now, overall, my bias is little towards the buy side. Therefore, I have my positions on the buy side only. Eicher Motors is one stock that attracts me too much. At the current level, which is 7261, it is all set for a fresh round of up move post the consolidation that we have seen in past 1 to 2 months. A stop close to 7150 should be enough, and I'm eyeing at levels around 77 in the next couple of weeks time. Now another stock which attracts me is from the metal space. Metal stocks have done well, and JSL is one stock that I think is all set for a fresh round of up move here. Considering its recent chart formation and overall what the metal pack and the performance has been, I think it is all set for a fresh, somewhat at least a 5% kind of an up move is what I'm expecting. At the current price point of 786, one can consider it for long positions close to 820, 825 levels. A stop should be placed at around 770.
Picks coming in from Gaurav. Jindal Stainless is also one of them. But now let's move on to a very special segment. It's time for the trending stocks in the trade. Your snapshot of the stocks making the most noise today. Jasmeet is here with us. All the details. First up on the list, what is the stock, Jasmeet?
Well, it's Swiggy on the first half. Now we have a new segment called Trending in Trade, where we are getting you all the stocks that are trending in the trade in today's market. Today's market has been a bit volatile, but we still have few picks that have been trending on the back of the news and volumes. First one is Swiggy. While we see Swiggy launches its QIP worth rupees 10,000 odd crores, while the QIP would have an indicative price of rupees 371 with a discount of 6.8. And as we speak, the QIP is fully subscribed, which is a positive sentiment for the stock, and that's why the stock is buzzing in trade today, almost 1.5%. And this QIP, the fundraise basically is to strengthen the company's balance sheet and make further investments in the growth areas. So this stock remains in focus on the back of the fundraise.
Namaskar, Gaurang. This is Sharad here. Swiggy is something which we are talking about, and there's a street is having concerns. Fundraise after fundraise after fundraise. Is this model actually going to go long term, or will there be some pivots in the way?
Hi, thank you so much. Namaskar to you also, and good afternoon to my good friend Gaurav. Always good to be with him on the show. Thank you so much. So, the core problem for certain e-commerce companies is the capability of scaling up and the constant requirement of injecting liquidity. And if you have it, fine. If you don't have, you have to reach out to it and create. I am a little bit short of how the funds are going to be used, but I am hoping that they are going to be used to possibly scale up the business operation and possibly venture into new geographies. I don't recollect we having a standalone research report on Swiggy, but I think we had come out with the IPO note long time back. But the competitor that was earlier known as Zomato and now it is known as Eternal, we do have a positive coverage on Eternal from a long-term point of view.
All right, so there is still a positive coverage when it comes to Eternal long-term basis. Its stock is down 2% near its day's low level. But moving on, Jasmeet, another stock from this new age tech space, that's Grow. Why it's in news?
Well, right, Grow has been in news since its listing. If you look at the overall stock movement, top 90% on the listing day itself, and then we had a 10% circuit hit. But today the stock is in focus on the back of the lock-in change. We see the stock is down almost about %, given that share lock-in period comes into an end today, and roughly 2% share, that's roughly 14.9 crores of share worth rupees 2,000 odd crores are getting freed in trade. While with this stocks being free in trade, they'll be increasing the free float capital of the stock. That's why the stock is tagging in trade today. Also, one important thing about Grow, what we have noticed that the employees have been selling out their stocks since the listing. So that's some pressure which is been creating on the stock. They have been cashing it out. While further, but the management remains confident about the long-term growth. And in the Q2, we also saw a good performance of the company with a margin expansion. So all in all, the stock is in red today, but we see a good up move coming in terms of the performance as well as the stock movements.
Interesting. Gaurav, let's have a look at the charts. From the IPO price itself, it is still 40% up, but kind of a minor correction. And this is, of course, the demand-supply aspect coming in. But will this be a good entry point for at least a positional setup when it comes to Grow, or you'll wait it out and let the stock fall a bit more and then maybe some attractive levels come in? Gaurav?
So Sharad, firstly, we also have to keep this in mind that post its listing, it went up to 190 plus levels, and then the profit taking set in, and currently it is heading towards the price point where it got listed. Although we remain bullish on the capital market segment on the whole, and that includes the stock broking firms as well. The kind of customer base Grow is having, I think, from a longer term perspective, it is wise to utilize these tips to gradually accumulate the stock rather than buying it outright now.
So a little bit of wait and watch is there. Another stock, Jasmeet, is Keynes Tech. It's latest in the spotlight from the EMS space, and each day there is a broking report which comes in. A lot of to and fro happens from the managements. What's new today then?
Well, right, Keynes has been in focus since a while now. The stock is down about 20% over last 1 month. And we see a lot of pressure coming in on the back of brokerage reports as well as the accounting error that the company came forward and accepted. Now, well, today we have Kotak Securities which have cut the target price to rupees 4,150, and this is a sharp cut from rupees 6,000 all levels. While what they see is certain aspects with respect to the accounting are still unclear with the management. Well, that's what they are seeing the reason behind the price cut. And they also see the FY26 guidance to be at risk from here on. That's why we see a sharp cut coming in, and the stock is down about 8% in trade, while what they see is a crucial point for the stock would be the growth guidance, the overall positive operating cash flows, the stronger controls, and the expansion plans for FY26 will be a crucial point for the stock going forward from here on. So all in all, we see brokerages cutting the target price for something like Keynes, but the management still remains positive and bullish on the performance.
Interesting. But Gaurang, there seems like there is no smoke without fire. It's been almost 4 odd days, and each time the traders are very confused and the broking community comes up with something, then the management comes up with their version. But Street is factoring in something else, it seems. What will be your view in this entire segment, EMS as a whole, and also Keynes? Is it attractive enough right now, or you'd like to stay away until the clarity emerges?
So Sharad, if the fire and the smoke is to a limited extent, which is manageable and under control, it is good. But every now and then when fuel gets added to that fire, then there is a flame that is uncontrollable, right? And that fuel is in form of the news flows and of course the management comments. So, I mean, no specific comments on Keynes Technologies since we don't have a coverage, but we like the sector, Sharad. We have coverage on 2 names and we are quite optimistic about the entire government policy making Bharat Atmanirbhar with respect to chips, semiconductor, PCBs, etc. The 2 companies on which we have coverage is PG Electroplast and CG Power. I think, and unfortunately, Sharad, we had one too many news flows related to this sector. Earlier it was Keynes Techs, then it was PG Electroplast, then it was Dixon Technologies. So it's rather unfortunate, but more unfortunate is the acceptance of such error by the management of Keynes Technology. I think you should be more responsible than what you have already done.
Important point raised by Gaurang in this. Systematics, the broking house has been bullish on the other side as well. But we see what's there in the screen, and that's the reality. And the stock is tanking. It's down 8% again today. But Jasmeet, AU Small Finance Bank, they have clinched an approval from the Ministry of Finance to hike the FI limit. Could you give some more color to it?
Sure. Like, let's quickly pull out the 1-year chart for the company. The stock has almost hit the the 52-week high levels in trade today. If you look at the overall performance, the stock has had a bit volatile performance, but showing the overall positive up move coming from the management, we see the stock is buzzing in trade. While the buzz comes on the back where the Minister of Finance has increased the FII limits to 74 from initially 49. What this means is more of FDIs and more of foreign flows will be entertained in the bank portfolio, and this will raise overall positive momentum among the current investors and the upcoming investors. So this is the reason why stock is buzzing in trade. It's up almost 9% in last 1 month. If you pull up the 6 months chart, we still see an up move coming in for the particular stock. It's up about 30% and today the stock hits the 52-week high levels in trade on the back of this positive news.
Thanks for that, Gaurav. Technically, seeing the charts itself, it doesn't look like a profit booking candidate, at least in some levels which I have been seeing, because whenever there has been a correction in the banking indexes, this stock or this counter has actually held its ground as well. Seems like some more leg of rally is still expected. You agree with me on this, Gaurav, or some profit booking is there on the cards right now for AU Small Finance Bank?
I think, Sharad, you have just said it all about AU Small Finance Bank. I'm left a little soft now. Yes, it tested and came to the 4-figure mark. Now 1,000 is on the table. A congestion breakout was witnessed yesterday, and what we are seeing in today's trade is a 3% up move backed by fabulous volumes, indicating that new fresh positions have been added at these levels as well. And there is all culminate to say that more room for upside still remains. I think yes, one should hold on to the position, but it is a wise approach to maintain a trailing stop loss. I'll advise traders, especially who are taking a position with a shorter term perspective, to maintain a stop at 950 and keep trailing it upwards with rising prices.
Yep, Gaurav, we'll look into that. AU Small Finance Bank, it's in 4-digit right now. Now, as we slip into the short break, NDTV brings you an exclusive with Oman's ambassador to India, Issa Saleh Al Shibani, who says New Delhi and Muscat have completed trade negotiations. Let's listen in.
The all-important CEPA that we've, both the sides have been talking about for a while now. How long until we have that final, ratification?
Well, I think is based on the latest comments that the negotiation has already been concluded. I think it's now for the different stakeholders in Oman and both in India to finalize the final steps out of it. And hopefully we will be hearing some good news very soon. Right.
And as far as I have read India remains an important economic partner for Oman. What specific, investment opportunities would Oman be looking at giving some Indian companies? Do you have anything in mind?
Well, I think it has been a very historic relationship between the two countries. I think Oman has the resources that would attract some of the Indian investments. Oman also a gateway either to the GCC market, to the Middle East, and to the wider world that has an Indian interest as well.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to.
Coming to your city. Stay tuned.
the NDTV Profit has
Indian markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
the NDTV Profit has come a long way.
You are
Hello and welcome back to Profit Buzzers, and let's look at the primary market action. You know, a very strong IPO listing has come in for Meesho as well, as we call it a good IPO pop. Looking at the numbers, it's up 53% from its IPO price, trading at almost 170 odd levels. Just to take a quick check, Gaurang, any views on Meesho? How it's actually panned out? And of course, right now it wouldn't be a good time to enter because of the up move coming in. But fundamentally, how you're looking at these companies, you already have a positive coverage in Eternal. So will this also go that way?
So to make your viewers understand better, Sharad, I'll just put across a list of all the new age technology or e-commerce related companies. So to answer your question first on Meesho, yes, we had a subscribe recommendation for the IPO recently. And if you have invested in for a long term, then you can continue to hold. Eternal, I've already spoken about. Other than that, we are positive on Policy Bazaar, we are positive on Paytm, and Nikia, that is FNS e-commerce. We maintain our positive coverage over here.
There's 3-4 important coverages coming in this new age tech space where the focus would be there as well. But let's focus on Meesho itself. Following a very strong market debut at a 46% premium over its IPO price, Meesho is in focus. My colleague Ronit John spoke with Meesho's CFO Dhiresh Bansal on the sidelines of the press conference about the risks associated with cash on delivery for the company. Here's what he had to say.
While I was going through your RHP, you have mentioned that about 70% of the deliveries that are happening right now, it's cash on delivery, and there are certain risks that are written there. Can we expect that in the near future this percentage will drop down and it will get digitized in some or the other manner?
So if you also look at the historical trend line, the percentage of orders on cash on delivery have been coming down every year. I think cash on delivery is a very fundamental need right now of our ecosystem because it is still in that phase of infancy where it requires to kind of build trust. Some people have cash flow problems, so they want to kind of order on cash on delivery, etc. And I think as time passes with the advent of UPI, with kind of all of the digitization that we're seeing on the payment side, every year we kind of see improvement in the number of people who are using digital modes of payment, and we from our side also make our products simpler, give them incentives to transact on digital payments. So that will keep sort of compounding over the next few years as well.
That's the management of Meesho speaking about the outlook going ahead. But as we bid adieu to 2025, let's look at the star performers of the year. And yes, these stocks have doubled, actually more than doubled in this space. Why this has happened, and will this momentum actually continue? To give the list of these important stocks which have sizzled in 2025, we get you Varsha here. Varsha, there's a lot of interest in these stocks.
Absolutely. You know, there's a famous dialogue from a movie, 21 दिन में पैसा double. Well, these stocks have not doubled investors' money in 21 days, but 365 दिन में तो double कर ही दिया है. Let's see which are those stocks. You have, you know, Force Motors, you have NACL Industries, SML Mahindra, Lumax Auto, Lumax Industries, and also L&T Finance, Axis Gates, Apollo Micro, Gabriel, and AB Capital. All these companies have doubled investors' money. Let's see, is doubling के पीछे की कहानी क्या है, and what's the outlook going ahead? Talking about Force Motors, the trigger of doubling the stock is, of course, 2,000 crore 3-year expansion plan that the company has set, and EV focus, strengthened outlook. Talking about what lies ahead, strong exports will support revenue visibility for this stock. Moving on to other stock, which is NACL Industries. Well, the trigger for over here has been the Coromandel, which has acquired 53% stake. This triggered turnaround expectations in this company. Well, they're going to improve margin from 4% to 9 to 11%. That's a very strong outlook, and the margins eventually will be closer to Coromandel's 17 to 18%. Well, moving on, let's see what SML Mahindra has done. Well, M&M acquisition has led to sentimental reversal, and which has led to doubling of the stock, while gradual shift towards electric vehicles is the outlook going ahead for SML Mahindra. Talking about Lumax Industries, they've actually increased their guidance to 20 to 25% for FY26. Earlier, if you see, the guidance was 15 to 20%. Strong order across two-wheeler and four-wheeler segments. All this have triggered a doubling for the stock. H2 launch indicate positive consumer sentiment for Lumax Industries. Talking about Lumax Auto, they expect FY26 revenue growth of around 20 to 25%, and they've given also long-term guidance of FY30 of 11,000 crore, which has triggered this stock which has doubled the stock, while order book stand at around 1,357 crore is the outlook going ahead for Lumax Auto. Talking about L&T Finance, well, shift towards high margin retail book, nearly 80% of the portfolio is the trigger for doubling of the stock, and of course NBFC sector tailwinds plus disciplined retail growth is the other trigger. While they expect 20 to 25% of AUM growth for next 12 to 18 months, and they expect to improve ROA to 2.8 to 3% by Q4 FY27 versus 2.3% in Q2. Well, talking about Axis Gates Technologies, well, a lot of investors are interested into this stock because of the ambitious roadmap of 9,000 crore revenue by FY30. They expect 20% of EBITDA margin, and the outlook for this company, if you see, they expect 45% revenue and EBITDA growth for FY26 and FY27. Moving on, you have Apollo Microsystem, strong defense pipeline. FY26 order book expected at 800 crore are some of the triggers, while they are confident of maintaining 45 to 50% of revenue CAGR over FY26 and 27. Talking about Aditya Birla Capital, where the trigger for the stock is NBFC and insurance business have scaled sharply, and also balance sheets have strengthened via capital infusion, and they aim to double their net VNB over the next 3 years. Then you have Gabriel India, wherein the major corporate structure and simplification has led to doubling of this stock, and revenue target of around 1,000 crores in sunroof business has been delayed by 1 to 2 years beyond FY30. So, these are all the stocks, if I were to talk about, which has doubled your money, investors' money in the last 1 year from January 2025 till date. And let's see what lies ahead in the next year.
Thank you very much, Varsha, for that. And 21 दिन में पैसे double, that's still in my mind, and I'm of course obliged, or maybe ask both of our guests what will be the stocks, but that's for the other day. Thank you very much, Gaurav and Gaurang, who joined with us, and wish you a very kind of a strong afternoon, and of course a double happiness as well. But that's all for the show today. Interesting show coming up on the small cap buzzers, which Somit gets.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In this special half-an-hour segment, we get to you the stocks, the small cap stocks that have been buzzing in trade on the back of price and volume action. So what's on the show today? Firstly, it's Manorama Industries. Now that stock has up 30% on a YTD basis. Ambit has initiated coverage on this counter with a buy rating and target price of 1,774, which suggests an upside of nearly 30% from the current levels. Second stock that we'll be discussing today with the management is Sambhav Steel. Now, they have announced a capital expenditure plan of 50 crore, but the stock is down 16% in the last 1 month. What's the way forward is something that we'll be asking the management on the show today. And lastly, Merck Electronics. That stock has locked in an upper circuit of 10% in trade. This is its biggest intraday move that we are seeing since August 11th. Volumes are also quite active. It's nearly 10 times its 20-day average. So these are basically the three stocks that we'll be discussing with the management and our guest on the show today. Well, if you look at the markets first, the Nifty benchmark, that's largely flat in trade. Not much of a movement. It's been quite volatile from the day's lowest point. We have managed to recover, but at this moment we are largely flat. And when it comes to the small cap stocks, GPT Infra is something that is seeing most of the volume action. Volumes are nearly 43 times its 30-day average. Venkis is another counter which is up 12% in trade on the back of strong volumes. And on the downside, it's Hubtown, which is down around 7.5% in trade, and volumes are nearly 3 times its 30-day average volumes that we are seeing. But firstly, let's start off with Manorama Industries. Ashish Sharaf, the CMD of the company, is joining us right now. So firstly, to start off with, in the last 5 years, the company's profit has grown at a CAGR of nearly 36%. Should investors expect similar growth rate or better growth rate going forward for the next 5 years?
Manorama is working round the clock and trying with its best efforts, and we expect that this trend should continue. But business is business, barring anything going wrong. Everything we feel is very positive.
Right. If you could also take us through the fact that you do export to multiple countries, so any impact that you're seeing because of this Trump tariffs that have been announced a couple of months back, any impact on any of your segments or any of your businesses?
No, every citizen in the world is our customer because everybody eats chocolate, everybody uses our butters, cosmetic. So these tariffs from America have had a very non-negligible impact on our business. And most of our exports which go to America are generally through Mexico.
Right.
But the percentage of exports to America is below 5%.
So no impact is what you're saying. Also, if you could just take us through what is the kind of margin? Right. So no impact is what you're saying. Also, if you could just take us through what is the kind of margin that one could expect from Manorama Industries going forward, and what impact prices, any impact on your margins that could come in?
No, basically we are giving consistently around 25% EBITDA, and we expect that this should continue going forward. But business is business. There are always overcome all these challenges. So barring any untoward, we expect that we should be able to expansions what we are doing. We have also entered into joint venture with the government of Burkina Faso for backward integration, and government in Brazil with Deckel for forward integration. So a lot of efforts, lot of movements around the company are happening rapidly.
Right. I believe you did increase your FY26 guidance. Any scope of further increasing that guidance or any update on that front?
Yeah, definitely we will do much better than what we have guided, and we are confident on giving better performance with better revenues and bottom lines.
Could you also take us through what is your capacity utilization at this moment? What is your target? And at peak capacity utilization, what is the kind of revenue investors can expect?
It's currently our capacity utilization is more than 75 to 85%. We have multiple plants, and it varies between them. And if we fully utilize our current facilities, when the capacity utilization is more than 100%, it can go on around 1800 crores with the existing capacities between them. And if we fully utilize our current facilities, when the capacity utilization is more than 100%, it can go on around 1800 crores with the existing capacity.
What could be the scope for margin expansion?
Currently, most of the products Manorama sells are all value added, and we are in constant touch with our all customers worldwide to make further valuation ongoing. We have continuous projects, R&D projects ongoing with them, and going forward with the better use, better synergies, more production, better capacity utilization, combination, a lot of more on-ground efficiency we can bring in the operations.
Right.
And we expect to do much better, keep on doing better than what we are doing.
Okay. Also, when it comes to your capital expenditure plans, anything that you have planned for this next 1 year, and how are you going to fund it?
Basically, we are planning a capacity. We have already in the high stages of planning and maybe fast implementation. of backward integration project in Burkina Faso, for which we have entered into MOU with the government there. And we have many two value-added projects coming up in India, which will create a lot of more value-added products and increase our revenues and our bottom line with significantly going forward. And as far as the financing is concerned, Manorama has very good internal cash reserves coming in. Plus, we may go in the future either through the debt route or the equity route.
Okay. Also, I wanted to understand this part where you're saying that you want to improve your working capital cycle. What is the current number and what is the target that you have for the next 1 year?
Current, basically, working capital, we are capital intensive because we buy from millions of tribals who collect these seeds from the forest in India, also in West Africa. So there is no credit line here. The payment is on spot. So basically, we are trying to more maximize our utilization of the capacities and sales to decrease the number of days. So we have given these projections in our con call also.
Lastly, sir, just wanted to understand, currently I believe exports contribute 58% to the top line. What would be this mix, say 1 year down the line?
Basically, see, the consumption in India is also going up and up with our young population eating a lot of these products. So basically, we expect it should be in the range bound of 60-40, 40-60, depending on the sales.
Thank you, sir. Thank you for joining us and giving us the way forward for Manorama Industries. Let's also welcome in our fundamental guest on the show today, G. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management of Manorama Industries. They are expecting their profits to grow at a much higher rate over the next 5 years. Obviously, with more capacity utilization, their margins are also expected to improve. Management of Manorama Industries, they are expecting their profits to grow at a much higher rate over the next 5 years. Obviously, go ahead and buy this stock.
Certainly, my research view would be that hold for medium to long term. If there is any small decline also, one can buy, because I looked at the fundamentals. It's really very impressive, the kind of revenue growth and profit growth. If you see last 3 years, sales have grown by 40%, profit has grown by 67% in the last 3 years on an average. It's really amazing. And, the management interview also gives more confidence on two grounds. One, the exposure to USA is less than 5%. And second, he talked about maintaining a 40% PAT growth. So that also gives, and he also sounds very confident. So therefore, I would give a buy call if stock corrects even 3 to 5% from here. But otherwise, definitely it's good to hold for medium to long-term wealth creation.
Buy call coming in from Mr. Chokhalingam on Manorama Industries. With that, let's slip into a short break and we'll be back with more stocks and news on the other side.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Small Cap Buzzers. Before moving on to the small cap stocks, let's get in Sharad to understand what's been buzzing in the FNO segment.
Interestingly, the FNO segment has turned a bit boring. The India VIX, which is the numbers which we are looking at, the PCR numbers, they are not suggesting any clear trend itself. Which side the market is looking at in the next 90 minutes, it's likely to be same. Metals have been shining, Reliance is holding the fort, but the pain is there in the private banking names, ICICI Bank, HDFC Bank, and that's actually dragging the BankX as well. Eternal also in the losing side as well. If you look at the options contract, also not much to look at. It's advisable that you have a light positions today because FMC meetings announcement will happen at night, so there will be a big reactions. FIs have been unwinding this trade, especially in the emerging markets. These are the important levels if you want to look at, but it's advisable to stay away from new actions in the next 90 odd minutes. Let's look at the BankX. That's also the story remains the same. HDFC Bank is dragging it largely, and this is also coming in from the ICICI Bank perspective as well. That's why the setup of BankX is actually weaker a little bit when it comes to Sensex. But remember, they're all stuck in a very narrow range, and throughout the day we have seen 3 to 4 levels of gyrations coming in the both upper levels as well as lower levels. Let's look at the stock because it's a stock specific market and action is happening there. And from those numbers, long build-up is coming in from ICICI Pru and AU Small Financial Bank. That means the financials are coming back in vogue. And HDFC AMC, there's a third financial coming in. The short covering in Hindustan Zinc, this totally a metal-led rally which is happening. Long unwinding from PB Fintech and Angel One, that's also BFSI space largely, but there are two sides of the coin. And last but not the least, short build-up, Keynes Tech again coming in. Look at the alarming number, it's 10% down. Short build-up is happening, and Inox Wind also makes it to the list. So stock-specific movements are definitely happening. 1 or 2 sectors are there, but largely no action so much in the space itself.
Thank you, Sharad, for that snapshot on the FNO segment. Let's welcome in Suresh Goyal, Chairman of...
are there, but largely no action so much in the space itself.
Thank you, Sharad, for that snapshot on the FNO segment. Let's welcome in Suresh Goyal, Chairman of Sambhav Steel. The stock remains in focus on the back of the capital expenditure that they have announced. So I'll ask the first question on the capex. Sir, this 50 crore capex that you have announced, will it completely be funded via internal accruals, and can you share the timelines of by when do you expect the same to be commissioned?
हमने लिया है
हमने उसमें सीआर कॉइल जो एसएस की हमारी सीआर कॉइल्स है उसमें हमने 58,000 टन की जो कैपेसिटी ऐड की है और साथ साथ हमारी जो गैल्वनाइजिंग यूनिट है उसके अंदर में भी हमने 58,000 टन 58,000 टन की कैपेसिटी हमने उसमें ऐड की है जिसमें हमने 50 करोड़ का ये इन्वेस्टमेंट गैल्वनाइजिंग यूनिट है उसके अंदर में भी हमने 58,000 टन 58,000 टन की कैपेसिटी हमने उसमें ऐड की है जिसमें हमने 50 करोड़ का ये इन्वेस्टमेंट किया है और हमारी जो एक्सपेक्टेड इसमें हम स्टार्ट करने की बात करें तो मार्च 26 में हम इसको हम स्टार्ट कर देंगे यूटिलाइजिंग द कैपेसिटी।
राइट सर, मुझे आपसे ये समझना था एक चीज कि अभी ये आप जो कैपिटल एक्सपेंडिचर कर रहे हैं इसके बाद आपका पेबैक पीरियड क्या होगा और कितना रेवेन्यू पोटेंशियल आपको दिख रहा है?
So, to be precise, we are expecting a revenue of around 400 crore rupees out of this additional capex. What we are doing, approximately 30 crore EBITDA is what is expected from next year onwards from this particular additional capacity that we are building up. In terms of funding, we are entirely funding this capex from internal accruals.
Right. You are also looking to set up, I believe, a 25 megawatt captive power plant. What is the capex requirement for that, and what will be your internal accruals? Because you're saying 50 crore will also be funded via internal accruals. All this also, if you're doing it via internal accruals.
एक्चुअली देखिए आपने क्योंकि हमारे नए प्रोजेक्ट की बात की है जिसमें हम 25 मेगावाट का पावर प्लांट भी लगाने जा रहे हैं और साथ साथ मैं बता दूं आपको कि हम 3 फेजेस में हमारा जो नया प्रोजेक्ट है केसदा यूनिट हम वो कहते हैं इसको, इसमें 3 फेज में हम 750 करोड़ रुपए का इन्वेस्टमेंट करने जा रहे हैं। इसमें हम फर्स्ट फेज के अंदर में 3,60,000 टन की एसएस कॉइल की कैपेसिटी हम ऐड कर रहे हैं जिसको हम कहते हैं कि हम 4 हमारी जो बनाने की इसकी जो टेक्निक है इसको हम कहते हैं कि हम मेल्टिंग भी करेंगे, इसमें हम स्लैब भी बनाएंगे, साथ में हम इसमें हमारी एचआर कॉइल को रोलिंग भी करेंगे और फिर बाद में अनीलिंग एंड पिकलिंग भी करेंगे। तो ये इंटीग्रेटेड प्रोजेक्ट है हमारा स्टेनलेस स्टील कॉइल्स का और 3,60,000 कैपेसिटी हम इसमें ऐड कर रहे हैं। उसी में हम 25 मेगावाट का पावर प्लांट भी ऐड कर रहे हैं ताकि हमारी सेल्फ पावर के लिए हम सेल्फ सफिशिएंट हो जाए और इसी परिप्रेक्ष्य के अंदर में हम जो हमारी कुथरेल यूनिट है उसके अंदर में भी हम एडिशनल 180 करोड़ का इन्वेस्टमेंट हमने प्लान किया है। इसमें हम एसएससीआर कॉइल्स जो हैं वो हम 1,20,000 टन कैपेसिटी ऐड कर रहे हैं और जो कि हमारी आप ये कह दें कि मार्च 27 तक हम दोनों प्रोजेक्ट को चालू कर देंगे और इस प्रोडक्शन को ले आएंगे।
राइट। तो whenever all of these projects come on stream, what is your revenue and EBITDA target, say for FY28? I believe this will be on stream by FY27. So what is your revenue target for FY28 and your EBITDA target?
So I will start with saying that our total expenditure on the greenfield project will be 750 crore approximately plus 180 crore, that is 930 crore rupees. Out of this 930 crore rupees, we have already spent approximately 200 crore rupees from our internal accrual. Balance 730 crore we are going to spend by FY27 quarter 4. So that will be also funded through mix of internal accrual and mix of debt. Approximately 600 crore rupees of debt that we are planning to take from financial institution and additional 150 crore will be infused from the internal accrual. Expected revenue out of this greenfield and brownfield expansion is approximately 5,500 crore rupees that we are expected to be achieved by FY28. So project will be commissioned by Q4 FY27 and entire benefit of this expansion will accrue to us in FY28.
And any EBITDA margin guidance also if you could share?
So expected EBITDA at the rate of 10% to 14% is the range on which we are operating. So I believe our EBITDA, including the benefit of 25 megawatt power plant, we are expecting in around 530 to 580 crore rupees.
Okay. Of late, we have seen that steel prices have been under pressure for quite a long time. So any impact on the stainless steel segment as well because of that?
So we are operating in two segments, in mild steel segment and in stainless steel segment. In stainless steel segment also, the price has in last 2 years corrected in single digit only. In that raw material, that is scrap of stainless steel, also corrected in the sink. So the margin impact of price correction of stainless steel is not much, but I would say in MS segment the price has corrected, but the raw material price get corrected in a lag manner. So in future quarters, the price of raw material gets reduced. So the margin pressure for in near term will always be there in mild steel segment. So if you see the price of stainless steel is reduced, but the margin pressure is not there in that segment. But in mild steel segment, there is some margin pressure, but it is near term. It gets adjusted in long term.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward and the business plan of Sambhav Steel. Mr. Chokhalingam, you heard the management, massive capital expenditure plans that they have. They're targeting margins of around 10 to 14%. They're expecting post FY27, the EBITDA could be around 500 crore from this additional plans that they will bring online. How are you looking at this counter? Would you completely avoid this given the fact that there have been a lot of volatility when it comes to commodities?
Existing shareholders can hold it. In case the stock is already down 37%, in case it further falls, one can buy. Because the pipe industry is going, in my view, a little bit of uncertainty on the margin, which is fluctuating in the industry. But to be fair, the company has done very well on one front in terms of revenue growth as well as capex. If you take 2023 March and September 2025, the capex, the fixed assets have gone up more than 2 times, whereas the borrowing remained more or less same. However, if you decompose further, you find that the liabilities to the vendors and others, that has gone up 7-fold in the same period. So they manage very well apparently, but if this kind of management continues in terms of financing their expansion, even by holding back the trade payable and other liabilities, then it's really good because it would strengthen their net profit through low interest cost. So therefore, net to net, yes, it's a hold for medium to long term, and one can consider buying also in case stock falls another 5-10% from the current level.
Right. Moving on, Merck Electronics remains in focus. The stock has locked in an upper circuit of 10% in trade today, and this marks the biggest intraday move of the counter since August 11. Trading volumes are also nearly 10 times its 20-day average. Let's get in, Puneet, on what could be the potential reason behind this move in the consumer durable company.
Well, thank you for that. It's definitely buzzing on the back of volumes, as you rightly mentioned. And the recent preferential allotment might be one of the reasons that is giving a positive trigger to the stock. Now, for the uninitiated, this company is largely known for its flagship brand Onida in the consumer electronics space, and hence the focus that we're putting on this counter. What's also interesting is that it approved 149 crores of preferential issue that was largely to strengthen the company's capital base. When you look at the approval, 8.89 crore shares have been allotted at 16.81 rupees on a preferential basis, which is much lower than the current market price. So market has taken this stride very positively. What's interesting is they attracted quite a lot of healthy participation from some prominent investors like Autumn Investment and Infrastructure, Vikrant Kotak HUF, as well as Jamnish Investments and APT Real Estate. Now, this infusion will help the company's leverage ratio, so we will continue to monitor this aspect. But that's one of the key reasons why the stock has been buzzing in trade today at least, and has been over the last couple of days as well.
So Chokhalingam, quickly, given that a lot of institutional investors have shown interest, institutional and HNI investors have shown interest in this counter, would you look at buying this counter at this current levels?
I won't. I may be missing, I suggest investors to do more homework before, taking cue from my suggestion. In the last 10 quarters, 7 quarters made losses. In our last full 4 financial year, it has been struggling to make profit. So I looked at the fundamentals. I'm not comfortable, but still, the investors are better. They would, be better off if they decode further what is their business plan and what is their growth opportunities. But I am not comfortable in holding the stock.
Right. Thank you, sir. Thank you for joining us and giving us the perspective on the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Business. Stay tuned and keep watching NDTV Profit.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational
Good afternoon and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and with me is Sharad Dubey and we'll take you through the next 1.5 hours of trade. I wish the market was as excited as I am to bring you this program. Sharad?
Alex, it's a very boring market for the traders and we had advised earlier in the morning itself that positions would be very low.
Why is that? Its volume is low, right?
Volumes
at this point?
is low. FIs have actually reduced their holdings, unwindings have happened and this is because of Fed's FOMC meeting which is there.
Okay.
And that is where the more action is coming in, and all the global asset classes are in a very small, narrow range.
Yeah,
Alex.
and so that's what you're seeing on the screen. You have the benchmark Nifty 50 that's trading at sub 25,800. That's actually a level that's been defended in the recent past. Actually, below that, right? The 50-day
DMA, yes.
The 50-day moving average has been defended quite considerably. That's what you saw in trade yesterday. We kind of bounced beyond that or above that, and we've stayed very close to that 25,800 mark. Pull up the heat map for the Nifty 50 and let's talk about that, right? Because midway through the session, you've actually had a pretty equal sharing of the heat map between green and red. Of course, at some points in the session so far, Sharad, you've had more declines than gainers.
Exactly, and that change has happened, but metal has actually performed well if you just look at these numbers coming in, but it's still even Stevens, and it might remain like that towards the end also. And the same story comes in the sectoral moves also, I had pointed out, but of course a defense pack and IT pack, there is some sell-off happening.
Yeah, all right. So that's what you have for the sectoral indices, but let's talk about the broader markets as well, because that's where you're seeing a little bit of selling pressure come through. Of course, in trade yesterday, you saw a very sharp surge, and the opposite is playing out, right? Where you saw a little bit of an outperformance at the start for the broader markets, but it's given up those gains, now trading with cuts of about a third of a percent.
Alex, just see the advanced decline ratio, and whatever the expectations were that, we'll have a broad-based rally all throughout, just look at it. The reversals have started coming in last half an hour. It's such a narrow breadth the market is. 1:1, it looks like the ratio coming in.
Absolutely. All right. So let's talk to our guests right now. We've got Kush Bora as well as Sudeep Bandyopadhyay joining us. Gentlemen, thanks so much for taking the time. Let me go first to you, Kush. What do you think about the setup that we have right now? Do you anticipate that it's going to be calm and quiet, relatively speaking, till we have this FOMC outcome out of the way, or do you see any big moves in the near term?
Hey, hi Alex. Good afternoon, everyone. Anything but calm and quiet, right? I mean, that's been the story for the last 3 sessions, including today, mind you. Yes, we've fallen off the high point of the day. We were looking at a mildly flat to positive start, but that's been given away. But I still look at this as glass half full. Let me just give you a couple of pointers. The PCR currently is at 0.7778. So if the Nifty were to slide immediately, there would be that support coming in. 50 DMA of 25,700, that support will come in. Also 25,800, has been held, even if it's, by the skin of its teeth, and it's been just given away as, we started the show. But if you see from a daily perspective, the candle is showing a higher high, higher low formation. So as I said, I'm right now looking at it as a glass half full. But nevertheless, caution is, the word on the street. I will not initiate positional long trades until we go back and climb that wall of 26,000, which also happens to be the 20 DMA. So yes, there are, some signs that, there could be some more consolidation, a sideways movement. But as I said, I would actually be looking for long opportunities in a market like this.
Kush, you mentioned that the glass is half full, but there are 2 picks also I'm expecting from you. Which will that be? Will it be full glasses, 2 both buy calls coming in, or a half glass? That means 1 buy, 1 sell?
Oh no, those are both, that's a total glass that is full, not even half. So that is both long trades, it is Samvardhana Motherson and Ajanta Pharma. If you look at the kind of setup that, both these stocks have had, Samvardhana is on the verge of, a Poland flag formation breakout, held out for the most part of the day, mild, a negative tick on it. But on the whole, if you see the volumes of the downside haven't really been as high, which is a good sign. So Samvardhana is a positional long trade. 120, 123 are your targets. 114 is where you keep that stop loss. Ajanta Pharma, very interesting claim. Our target of 2665, the first target of 2665 has been hit on this 2 sessions ago. Yesterday, you did see a profit booking, but pinpoint from the 200-day moving average, it's rebounded, and today also in a negative market, it's holding its own. So I think this is a very positive sign. You could now get into this or hold for 2730, the second target, and bump up your stop loss to 2600. So both long trades, one on Samvardhana Motherson and other one on Ajanta Pharma.
All right, so that is the view coming in on both the index levels as well as the individual picks that Kush has for you. Sudeep, let me come to you on one stock in particular, and also the space, right? The EMS space has been in focus in the recent past. And you saw PG Electroplast come through with a clarification. And in fact, they've gotten that stock exchange notification, and HDFC Securities coming through and saying that report was had inaccuracies in it, right? So the stock has recovered. But Keynes Tech has had a rough time of it. And even in trade today, it's down about 9%. What do you make of that? And do you think that you would enter at any point, given that these are better valuations that you've had at any point over the last 1 year?
What has happened with Keynes is definitely unfortunate. I mean, without getting into the merits and demerits of the supposed allegations, the correction was sharp. It came down roughly about 50% from its peak. And post the correction, I think it does look attractive from an investment point of view. Of course, the valuations are not cheap. It was around 70 multiple. Now it's about 40 multiple. So, of course, it's not cheap. But considering the growth potential in this space and the way the companies are grabbing the growth opportunities, I think, if you are a bit aggressive, it's a good opportunity to buy into Keynes Tech.
All about cash flows, about revenues, about maybe a little enthusiastic projections for revenue growth?
Yeah, absolutely. I think, look, we talk about valuation, we talk about 70 multiple and it's unrealistic and all. But look, these companies are growing at 30-40% regularly. And if they're growing at 30-40%, a P multiple of 40 definitely is justified. So all I'm saying is you didn't buy at 70, it's corrected, and now it's around 40 multiple. Why not look at that?
Yeah, it's a fair point. Sudeep, so we're in fact joined by the management of Keynes Tech as we speak right now. Mr. Ramesh Kunikanan, who is the Executive Vice Chairman, is joining us. Mr. Kunikanan, thanks so much for taking the time. And this is the second time in a few days that you're speaking to us. And it's important that you do address your stakeholders and your investors. So first off, the stock is under pressure today as well. You've clarified things that might have gone wrong. What do you think the street is unhappy with at this moment?
See, we are concentrating on our job. Whatever concerns have been raised, we have already addressed. And we are concentrating on our job for meeting our quarter results and year results. So I am very confident the street will understand and they will reward what the company deserves.
That's absolutely a strong statement, sir. But has there been any conversation with your large investors, with institutional investors?
No, there was no conversation at all. Many of them are convinced about what we have said.
Okay. Are you aware of any large institutional investors exiting?
No, I am not aware.
Okay. So at this moment, therefore, it's incumbent on me to ask you this. You've clarified on the issues that were highlighted, and you've said that corrective measures will be put in place. I won't ask you about that again. What I will ask you is, if there's a message that you were to give your minority shareholders at this moment, because there's been a significant amount of wealth destruction, what would that message be, sir?
I am very confident whatever earlier what we have promised the market, we will deliver it. And I'm sure and certain there is nothing to get panic. Everything should be back to normal in the days to come in.
Okay.
Is what my statement is if anybody asks me.
Okay. Sir, just so that all of your investors are aware of what these promises are with regard to revenue projection or guidance or whatever, would you like to reiterate it?
See, we are not a company who works on quarter, but yearly results, whatever we have promised, north of 4,000 will be definitely achieved.
Understood. Wish you all the best for the rest of the year, sir. Thanks so much for taking the time.
Thank you.
All right. So, Sudeep, you've heard from the management and they seem to be confident that they will deliver on their long-term targets. What do you have to say?
Absolutely. I'll repeat what I've mentioned already. I think if you're a little aggressive investor, it's a great time to enter into the stock at current levels. Have 1 year kind of time horizon. The growth opportunity is so humongous, they will definitely capture the growth. And I'm sure all these reports and all will be forgotten very soon.
Let me ask you about the technicals. Of course, very difficult to know when a falling knife will stop falling. And from that perspective, and I know for a fact that you wait for there to be a consistent up move before you get into a counter. When do you anticipate that opportunity will arise?
Spot on, Alex. I mean, there's no point, trying to catch a falling knife. You would want some sort of confirmation in terms of the price action, and preferably clubbed with the volume action. That seems to be missing on Cairns right now. In fact, as we speak, the stock is down on the back of very heavy volumes. 3,800. That's the medium-term support zone for the stock. That's the low that it's tested this time around as well. If it holds on, I don't anticipate a very sharp kind of an up move. The stock would then go into a time-wise consolidation. In fact, the same applies for a lot of its peers like Dixon also. So I would wait and watch. 3,800 is the immediate level to watch for, but I wouldn't be in a hurry. There could be time-wise correction also coming in, in the stock. I would actually be a little more keen on PG Electroplast and Amber. These are the two stocks that I feel perhaps have given early signs of a revival or a recovery. And between the two also, it's PG Electroplast with a stop loss at 535. You could consider a positional bet on PG Electroplast.
PG Electroplast is something which Kush is still bullish on. But moving on, meanwhile, Piyush Goyal says US trade delegation is currently in Delhi, marking a significant round of talks on the proposed BTA, which is the business transfer agreement, and indicating active engagement at a senior level. Listen in.
यूनाइटेड स्टेट्स ऑफ अमेरिका की टीम मंगलवार से भारत में है और उनके साथ बातचीत निरंतर प्रगति कर रही है। बायलैटरल ट्रेड एग्रीमेंट की तरफ हम आगे बढ़ रहे हैं।
These talks are continuing, and the US trade representatives talks also started from today. They'll last till December 12th for the next 2 odd days as well. But moving on, Meesho saw stellar debut at the Bourses, listing at a premium of almost 45%. Jasmeet justifies why it should be the stock of the day. Jasmeet, what is it after this listing pop and outlook ahead for the stock?
The company and what led to the seller listing. We see the stock has listed at a 45% premium and currently trading at almost 170 odd levels, which is up roughly 52% from its listing price. Now, if you look at the overall IPO, the IPO saw a huge jump in terms of institutional investors, where institutional investors stood at 120 times and the overall stock received roughly 80 times the subscription rate, which led to the overall higher grey market premium of the company as well. Now, if you look at the other aspect, we also see that the investors in the company remain very positive, as we spoke to Mr. Saurav Jain, who remains very constructive towards the upside growth of the company and has been a long-standing investor with the company, which brings the overall positive aspect for the company. Now, if you look at the operational performance of the company, we have seen the company, though is at EBITDA loss and overall loss, which has been contracting on YOY basis, but the company has been on cash flow positive since last 2 years, which the company continues to focus on. And the company also believes this is a long-term business and they would like to see it in that particular way. While we also see that the losses have narrowed sharply in last 2 years, what we have seen, and the revenue has grown at an 18% compounded growth on over last 3 years. Now, in terms of cost efficiency, we have seen that the company has improved the contribution profit per product from rupees 5.5, what they were getting earlier, to rupees 8 per, despite the average order value remaining the same. We see slight margin expansion coming in from that particular aspect as well going forward. Now, while we also see that efficiency has enabled the volume of the order to increase from 1 billion orders to 1.8 billion orders while keeping the revenue per order steady, which is a great jump when you look at the overall efficiency of the company. Well, lastly, if you look at the company's in-house Valmo, which is the daily logistics partner, caters to most of the logistics, making it a very cheaper aspect for the company that handles roughly 65% of the logistics, which is roughly handling of almost 2.8 billion orders so far. Now, if you look at the overall order handled by the company in terms of crore, we have almost 40 crores orders in Q2 FY26 being handled by this particular logistics partner, reducing the cost for the company. Now, moving on to the important aspect, that's the advertisement and sales expense. While this thing remains in focus, given that we see a slight uptick coming in with this aspect, as it has risen to 11% in the H1 of FY25, what we have seen. But initially, initially it was at 7.5%, but it was lowest in 2024 and 2023, where it stood at roughly 6% of the overall revenue. While this cost would be something in focus going forward, the management has raised the fund even to focus on the advertisement and the sales aspect. Now, lastly, if we look at the overall cash on delivery segment, even that's something to focus on, given roughly 75% to 70% of the overall orders are still on COD model, where the success rate here stands at 4 out of 3. That means every 4 orders out of 3 orders of every 4 orders are success rate, but 1 order is a rejection, is a negative loss for the company. So that's something where the management is focusing on going forward. Now, where we also got a chance to speak to the investor, that was Saurav Jain, and we questioned him about the profitability of this particular company going forward and how sustainable it is in the next 2 to 3 years, listening to what they have been saying for the same.
The company has remained free cash flow profitable since the last 2 years, and when you look at any of the global comps in the value commerce space, there's still a lot of upside that remains for the company. And from that perspective, the company is already a scale platform with 235 million annual transacting users, 230 crore orders placed in a year. So from that perspective, it's already a platform of scale, but we truly believe that there's a lot of potential for the company to grow from here, and we are very excited about the long-term potential of the company.
All right, thanks for that. Well, I would like to also ask you, we have seen a lot of consumer tech companies hit the profitability a quarter before or a couple of quarters before hitting the market. Do you think that's a criteria that we have been following?
No, so from that perspective, the company has remained free cash flow profitable since the past 2 years, and it's not something that has happened in the past quarter or so. So from that perspective, the company prioritizes what's good for it for the long term and not solve for any specific milestone, so to say.
Right now, I was asking about general consumer tech business, the listings which we have seen in this particular year. We have seen a lot of IPOs and consumer tech businesses coming out, being profitable in last couple of quarters. What are your views on that? Do you think that's the basic criteria to look forward before they raise money from the investors for IPOs, or how's the process? How's the mindset behind it?
Yeah. So I do not want to comment on specific companies, but if you look at truly special companies, most of it are solving for the long term, and the ones who will continue to remain focused on the consumers and focused on the long term picture will continue to remain exciting for the public markets as well.
Got it. Now, Swiggy is doing a fundraise of 10,000 crores, which is fully subscribed by the time we speak. So is Process infusing the fund in it?
Yeah, so for the purpose of this discussion, let's focus on Meesho. It's an exciting day for the company, and that's probably a question for Swiggy management and board to answer.
All right. But I'm glad that you asked that question, Jasmeet, in any case. Sudeep, I wonder if you heard the conversation, and that's a significant investor, right? And new kid on the block, 50+% on the first day. What an entry that is being made on Dalal Street. Did you have a view on Meesho?
Well, I think, it's definitely did look good from a long-term perspective. The oversubscription during the IPO process clearly indicated at the listing pop, and pretty much that's what happened. Let things settle down. I think there will be some movement in the counter, and the initial lock-in period will get over in some time, and then there will be some selling definitely. So things should settle down. But if you ask me fundamentally, from a long-term perspective, this is definitely a good stock to own. Whether you want to buy it today or wait for some more time before things settle down, my view will be let things settle down, then go for buying from a long-term perspective.
Sudeep's preference is Meesho on long-term basis. But moving on, Anupam Rasayan is set to acquire 100% equity in US-based Jayhawk Fine Chemicals in a deal. My colleague Varsha caught up with the CEO Gopal Agrawal. Listen into the slice of that conversation.
The acquisition of Jayhawk expands Anupam's footprint when it comes to high value performance materials. Now my question is, how will this change the revenue mix over the next 2 to 3 years?
So thank you, Varsha, for having us on your channel. Let me begin with saying that this is a very big milestone, in Anupam's journey to become a global customs manufacturer partner to our customers. In fact, both our promoter, that is Mr. Anand Desai and Dr. Kiran Patel, have this vision of making Anupam a global custom manufacturer. This is clearly a step towards that direction. As far as your question is concerned in terms of performance material, so currently Anupam has roughly 10 to 12% of his revenue coming from performance material. while as Jayhawk, the entity which we are acquiring has 70% of its revenue coming from performance material, which have application in a very high growth segment like aviation, semicon, and electronics. So as a combined entity going forward, which is Anupam plus Jayhawk, the way it will look is roughly the combined entity will have 40-45% coming from agrochemicals. 1/3 of its revenue will come from performance material, and the balance would be pharma and pharma and personal care for us.
Understood. Mr. Agrawal, you mentioned that the deal is an EPS accretive. Now, what are the biggest drivers behind this? Will it be cost efficiencies or high margins or scale benefits, if any?
So, kind of allow me a little time to elaborate this, Varsha. There are, let's say, number of synergies, which will go into kind of making the combined entity, I would say, much more, what you call growth oriented and margin lucrative as well. So there are certain chemistries, for example, let's say when it comes to high purity processes, oxidation, Suzuki, Azo, these are some of the key chemistries which Jayhawk has. Similarly, Anupam has, certain kind of niche chemistries. So from that perspective, it will be a good kind of a complementing kind of a chemistries which both the entities combined will be able to offer to the customers. Segment we spoke about, currently Anupam is more agro heavy and Jayhawk is performance material. So it will allow us to balance that as well. As far as the customers are concerned, there are some customers which are common and they will also get access through the acquisition to, I would say, some of the large global giants, which have been customer of Jayhawk for, I would say, for decades together. So, and last but not the least, there is also a decent bit of R&D facilities which are available, which again will allow both the companies to benefit from each other. So if I put all of this together, combined with, I would say, our whole thought process of, having Anupam, which is decently backward integrated, and Jayhawk, which will be a forward integration, I think what we will be able to offer to our customer is a complete supply chain solution, which will ensure that, there's a lot more business which will come our way as a combined entity than, it would have come otherwise.
Right. Also, Mr. Agrawal, when it comes to Jayhawk, the EBITDA margin for for Jayhawk is around 19% versus Anupam has a higher margin, ranging between 26 to 28%. Now, I understand that, post integration, you might see some dilution in EBITDA margins. But what is the projected combined EBITDA margin that you're targeting post acquisition? Maybe, in next 2 to 3 years, once things gets materialize.
So let me kind of explain this in 2 ways. So one, I will answer the specific question, but just to give you some idea, as you would appreciate, we did acquisition of Tanfec 3.5 years back. Today, if I fast forward in 3.5 years, we've been able to increase the revenue by 3x. Margin has gone up by, I would say, more than 50%. And if market cap is any indication, the market cap of the company when we acquired to now in 3.5 years has gone to as high as 7 times. Now, I'm not saying that we are going to be replicating the similar story, but please appreciate, like Tanfec was a good backward integration story, which obviously kind of ensured a win-win situation for Tanfec stakeholders as well as Anupam. Similar would be the case when it comes to Jayhawk. So I may not be able to kind of give you a specific in terms of stakeholders as well as Anupam. Similar would be the case when it comes to Jayhawk. So I may not be able to kind of give you a specific in terms of what margin we would be targeting, but please appreciate the combined force, of Tanfec, which is backward integration, Anupam, which is more in the intermediate, and Jayhawk, which will be forward integration, which is near to the customer, would be a pretty, I would say, unique proposition to ensure that, customer would find, the whole proposition very valuable. And hence, I think this should help us not only grow sales, but also kind of increase margin. Plus, not only grow sales, but also kind of increase margin in the near future.
All right, so that's the management of Anupam Rasayan talking about an acquisition that they have done that should open up the gates for several markets beyond just the shores of India, specifically the US and certain other markets. They're going to set up or have manufacturing in the US on account of this. But the one stock that we continue to talk about on an ongoing basis for reasons that are well known to you is IndiGo. And the stock is down about 3.5%. The latest, of course, has to do with what the Delhi High Court is doing and saying. It has hauled up IndiGo in a pretty blistering statement in a conversation today. it's been hearing a public interest litigation in the matter of IndiGo, and there are several statements that have been made and questions that have been asked by the High Court. Among them, it says that the rest of the airlines complied. Why was it that IndiGo did not? And the statement was that it was for various reasons beyond just a technical glitch or the staffing roster that led to the issue on the 5th of December. There is an order that has been dictated, of course, and the court is talking about the possibility of IndiGo compensating beyond just the price of the tickets returned to those that had paid for them, because there is a clear issue of inconvenience and damages and suffering that is undergone by the people that chose to fly IndiGo during that time frame. I mean, the least of which, Sharad, is...
there is a kind of a hint here that it's just not the refunds which will be coming back. There might be some more penalties. The tone, it looks like.
No, but they've said very clearly that they do not want to talk about it in terms of penalty. They've used that statement. In fact, we are not penalizing you. We do not. I'm going to read that. And this is a High Court judge speaking. Let me assure you that we will record that all of this is aimed only at remedying the issue and bringing the situation at normal, not to penalize you. Right? So, while we have taken cognizance of the issue, I'm reading forward in that order, of the issue in public interest, we make it clear that the observations are aimed to ensure best public interest is served both by the government and IndiGo. We make it clear that observations made in our order is only for issues raised in public interest, and the government and DGCA will take its decisions based on inquiry conducted independently. They've basically called for the reports to be produced in a sealed cover to the court. The next hearing seemingly is going to be in January, on the 22nd of January, unless I'm mistaken. We'll get you that clarity in just a bit. But speaking of which, you have Interglobe Aviation at the low point of the day. By the way, in the international space, there is precedence to this. Sharad, you were talking about that, right?
Yes, Southwestern Airlines, same thing happened in the early 2020s. And interestingly, the ex-promoter, Rakesh Gangwal, is sitting on the board right now. But of course, there is no timeline to that. But there is a precedence, and if it can happen in US, it can happen in India as well.
And also, okay, so when the court gets involved, of course, there's a separate issue altogether, and they'll take cognizance of everything that the government, through the Ministry of Civil Aviation and the regulator, that is the Directorate General of Civil Aviation, and everything that they do. And of course, at this point, you have a 10% curtailment of the operations of Interglobe Aviation or IndiGo that has been announced, and the airline will have to come up with a revised schedule later today. Sudeep, with all of this context and with the courts also walking into the fray, so to speak, this was anticipated because there was a lot of public angst and anger on account of this. Forget about trips being cancelled. People have missed international flights because they have not been able to take an Interglobe Aviation or IndiGo flight. And so there's money lost as well beyond what has been paid for the tickets themselves. So how do you think that this will play out? Do you think that there's a quick solution to this, or do you think that this is going to play out all the way heading into next year?
Well, this is definitely going to take time before we have seen the full implications of the same on IndiGo and IndiGo share price, shareholders, as well as valuation. So we have to be extremely careful. In fact, when yesterday the share price moved up a bit and all that, I was very skeptical, and I was advising investors to stay away and be extremely careful. We haven't seen the full movie yet. I think we've just seen the trailer as far as regulatory action is concerned. As we have seen, originally it was 5% curtailment of flight. Now that has become 10%. See, look, government cannot allow this kind of a monopolistic situation which can hold the country to ransom. Look at the telecom space, how much effort government is taking to ensure that the third player does survive. Vodafone Idea does survive. It's a similar situation. Actually, it's worse. With one player holding 65% market share, it is a recipe for disaster. So Interglobe will be made to shed market share, and that doesn't augur well for the market price as well as the shareholders' wealth. So we have to be prepared for that. And at this stage, it's better to stay away from Interglobe.
For that, Sudeep, that means just the trailer for Interglobe Aviation, and if there is a movie, then it will be, of course, a long movie as well. But let's take a quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं. The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Welcome back. You're watching India Market Close, and while we speak about stocks most of the time, sometimes we have to talk about silver and gold, and specifically silver today because it has once again crossed an all-time high, $60 per ounce. This is of course for the first time, but it's building on those 4.3% gains in the previous session. Why is this important, and what stock benefits? Specifically Hindustan Zinc. That's because silver contributes about 20 to 25% of the company's revenue and 35 to 40% of EBITDA. The stock is up 4.4% as a result of that. Why? Because every $1 per ounce move in silver prices has a 1% sensitivity to the company's EBITDA. Is there also an impact for other company? Well, yes. The parent company Vedanta, it owns 61.8% in Hindustan Zinc as of the third quarter of FY26, and Hinzinc contributes as much as 40% of Vedanta's EBITDA as of the second quarter. Now, what is happening right now is that there's a large part of the price of silver that is driven by the rise in gold prices, yes. But there's also an aspect of industrial demand, because a large part of the demand for silver comes through because of industrial utilization of silver, and there is a gap between demand and supply in the global market for silver. To talk about what it means for Hindustan Zinc, we're joined on this side of the show by Sameer Dalal of Natvarlal & Sons Stockbrokers. Sameer, thanks so much for taking the time, and good afternoon to you. What do you make of the move in Hinzinc, not just today, but in the recent past? And would this be your pick in the metal space, or would something else, be the top pick?
Yeah, so actually it's not our top pick. Yes, it definitely benefits. Hindustan Zinc definitely gets a benefit when silver prices move up. Like you rightly said, that 25% of the revenue comes from silver. So as the silver prices move up, they're mining it from the ground. That means the cost really doesn't change that significantly, and the profitability increases. So it's a definite positive for them. However, you got to realize that the silver price move that has come about has been quite stark. And I don't think, it probably on its last few legs of rally. And why do I say that? Today at the end of the day, silver is nothing. Silver, the use in industrial, which we discussed, is limited. It's maximum 20 to 25, 30% of the total demand for silver. Silver is also getting accumulated as a store of value, like you said, because gold prices are moving up, and the ratio between gold and silver usually has a 30% gap, and that gap has increased to 65%. So you saw silver moving up. Now that the gap has narrowed down, I don't know if that same kind of move will continue. So obviously, trading demand may come down. That may mean that silver prices stabilize, and if gold and silver eventually move down, whenever they do, because it's unsustainable at these kind of levels, because demand obviously will start coming off. So would I buy a Hindustan Zinc at this point? Probably not. The call that we have in commodities, let's take Indian commodities as three baskets. One is precious metals, which we have only Hindustan Zinc, which we can play with. Then you have steel sector. Steel sector, the world, I mean, India is asking for import duties. Now, given the fact that we are demanding import duties and at the same time we think the sector is doing well, kind of a diversion, I mean, kind of a dichotomy, right? You can't say that we are doing well and we still want protection. So I don't think the metal sector, steel sector is doing as well at the moment because international prices are down. And if that protectionism comes in, then we are getting a leg up only because of protectionism, not that the companies are doing extremely well. And last, the one where we have a positive view is Hindalco. And why we have a positive view is aluminium demand continues to increase. We think prices there will keep staying firm and over time move up because the use of aluminium in various products is constantly increasing, being the lighter weight product, lighter weight. So Hindalco, we think, has upside potential, and that is where our best bet.
Okay. So Hindalco is preferred. Kush, very quickly on the technicals from the metal pack, it's buzzing today as it has been in the recent past. What specifically would you be bullish on as things stand right now?
Yeah, so I'd like to go with what Samir said. So Hindalco is one pick, and the second is Hind Copper. Both these, doing rather well. Hind Copper seen a bit of a profit booking round in the last 3 sessions along with markets, but other than that, I think it's on a strong footing. 374, 375, that's the zone, and beyond that, 390 also. Stop losses at about the 345 mark. Hindalco also very similar levels on the upside in terms of percentage, but you could go with 850 and the recent swing high of 865 as your targets. And the 20-day moving average around the 810 mark will act as your stop loss. So Hindalco and Hind Copper, these are the two preferred picks in the metal space.
Well, there are some supply chain issues also happening for the copper and the silver space, so we'll be watching out for the metal pack. But another important thing to watch out for is our segment bull versus bear, and we have taken latent view. This is India's currently the only play, a pure play company in data analytics space, but in some time there will be another competitor also coming in. Last trading session there's a significant up move, and today we see there's a bear case scenario happening. A technical reversal has happened. Last trading session stock went up as high at 8 to 10 odd%. But why it's happening? Fractal AI came out with its DRHP, and interestingly there is a valuation catch up happening to Fractal AI, and I was just looking at the operational numbers also, in which latent view is actually doing better. Of course, the size of Fractal AI is on the bigger side. The second scenario which we would be focusing on is that the markets are expecting a very strong demand for data and AI, and that might be a re-rating thing for both Fractal AI as well as latent view, and perhaps that's why the IPO is also coming from Fractal AI. But more competitors will start coming in the data analysis space, in the BOSes as well. So there will be a lot to choose from, and not just latent view as well. The third important scenario, of course, is that the stock is up already 39% since March 2025 lows, but there was a significant correction from the highs. That means the stock itself was in the consolidation for the past 18 months, and that is something which has actually frustrated the long-term investors for this capital. But let's look at how the bull case scenario plays out. PL Capital has given a target of almost roughly 600 rupees. That's the bull case scenario coming in. But the recent report from ICICI Securities, we get a target of almost 480 odd rupees, which is like the current price level looking at. Kush, I'd like to take your view on this, and what would be your technical view coming in for latent view? There was a significant bounce in the last trading session, but it seems like it's not holding up. There is some profit booking happening. Will you see this consolidation continue going ahead? If you look at the charts, maybe in the last 2 years?
So, sure, there is a possibility that this continuation, could happen. This consolidation could continue for some time. But between the two, I'd pick the bull case scenario. The reason being that if you look at the moves that the stocks made from April onwards, it's been in a rising channel. Of course, it's seen its share of volatility, but 4 times it's seen rejection and slip lower from that upper end of the upward sloping channel. Exactly has been the case this week as well. In fact, just 2 sessions ago, the stock was up nearly 10.5%. And today, the drop that you're seeing in the stock, while it might appear heavy in terms of the price, price action, 5.5% or more, the volume action isn't really much. So as I said, I would be on the bull side of it. If it does continue to drop a little, comes close to that 450, 445 zone, I think the risk reward ratio on this will be extremely favorable. So while I may not buy it today because the stock is falling right now and hasn't really found its feet, but if this slide continues around the 445, 450 mark, it makes an interesting entry into latent.
By the way, Dixon Tech is also finding its way lower today, down as much as 6.5%. It seems to have caught that Keynes bug, if at all. The question is, Kush, on the downside, are you seeing any reason for it to continue the down move?
I figured I was on mute.
Okay, yeah.
I figured I was on mute.
I thought it was just me.
Nah. No. So I think there could be a bit of a bounce that could come about. That's only and only because of this technical reason that the RSI has now slipped below 20 as well. So I think there could be a technical bounce here or there. But does it warrant a case and a reason for buying here? Not at all. The long-term support zone for this one is close to the 12,200 to 11,800. That zone, with the kind of volume action that you're seeing today as well, after the kind of fall that it's already seen in the last 2.5 months, not very encouraging. So I would hold my horses. 11,800, 12,200, perhaps those levels. If it holds and it goes sideways, then perhaps you could consider. But for now, I wouldn't really be a buyer in Dixon.
Okay, so no major position right now. Maybe some more correction, then it becomes attractive. But now let's go on to our special segment. Somit gets in all the chatter from the dealing room. Somit, what you are gathering today, there seems a lot of lack of news flows coming in, so it must be very difficult for you to take out these stocks.
Yes, it's quite difficult given the fact that there's not much of action that we are seeing. In fact, making money is very difficult is what dealers are saying in this kind of market. Few stocks that they have highlighted. Firstly, it's Glenmark Pharma, where there are some buy flows that we are seeing on the large HNI desk, and dealers are expecting some positive news flow that could come in this counter. When it comes to Granules, there's a buzz that the reinspection for its Gagillapur unit has already begun, and this is one of the key units for the company and is currently under warning letter. So if that warning letter gets lifted, then it would be quite a positive for the counter. So keep an eye out for Granules. For L&T Finance, the stock is down in trade, but there are some buy flows on institutional desk at the lower levels. Both foreign and domestic institutions have been accumulating this counter at lower levels in trade, and delivery volumes could well be on the higher side. For NHPC and Paytm, multiple dealing rooms have given calls on this both these counters. In fact, for Paytm, it's a sell call, and for NHPC, it's a buy call that multiple dealing rooms have given to their clients. And lastly, when it comes to Bandhan Bank, there are some buy flows on the FII desk in trade is what dealers have indicated, and hence that is the reason why, despite the sharp fall in the banking stocks that we have seen, Bandhan Bank is still trading in green. And Prime Focus was part of our segment on December 2nd, and since then the stock has moved up nearly 20% and we had indicated back then that there were buy flows on large HNI desk as they're expecting some positive corporate development that could be announced anytime soon. The stock is up nearly 20% since we pointed out.
For that and Prime Focus, our khabar is confirmed. So that is something which we'll be watching out for. But in this list which Somit was discussing, L&T Finance, that we are seeing some kind of buying interest also coming in. And Samir, NBFCs, they have been doing well. The valuations were also a bit attractive, and we saw some institutional lapping last month as well. Samir, how do you see this stock, L&T Finance, and in a decreasing interest rate scenario and some operational numbers also improving for the company? Do you think the long-term growth is there and the risk-reward ratio is good to enter now also?
You're right. L&T Finance's numbers have been getting better. They're constantly increasing what businesses they're doing. So they've gotten into consumer lending, they've gotten into gold financing. So these are businesses that are relatively stable, which have capability to increase the ROE for the bank, for the NBFC. The last 2 quarters have been exceptional given the fact that, the funding cost has come down immediately from all the banking sources, but they've not passed on all of that benefit to the customers. But as we go forward and, the pass on happens, I think the profit, the NIMs and the profitability will come under a little bit of strain, although the growth will be there. It will not be in the same line as what we have seen in the past. Now, you're talking of L&T Finance, which is trading at 3.2 times book, which I think is probably fairly valued. There is risk to their book. They talk about 1.7% credit cost because of the kind of loans that they have given. 1.7 credit cost and a 3.2 times price to book. It seems a little bit on the expensive side. Personally, I would not be buying at this level. Yes, we thought it was a great investment around 150, 160 if you look at it maybe a year ago. But after the sharp run-up it's had, for me, valuations discomfort. I would not be buying. In fact, I would be advocating a sell at this point of time. You will get an opportunity to buy it back closer to 20 to 30 levels in the next 1 year.
Okay, all right, yeah. Look at that up move over the last 6 months or so for L&T Finance. I want to talk to you, Kush, about a few stocks, and let's slip back into our Ask Profit mode. I'm going to do a rapid fire with you, and let's see how fast you can answer these questions. Yeah. So from the broader markets, there are a few stocks that are standing out. Balrampur Chini up 7.5%. How does it look on the charts? The question is, would you enter at this point?
Yeah, I don't prefer sugar stocks anyway, so it's an avoid.
Okay, Wellspun Living up 6.5%. What about this one? It's buzzing today. Would you ride that up move?
No, I'd look at exiting on higher levels.
Okay. Naveen Fluorine, another stock that is buzzing from the broader markets, up as much as 5.7%. It has posted reasonably good set of numbers in the first and second quarter of this year. On the technicals, does it look good?
Very interesting setup. Accumulate a positional stop loss at 58.75, higher levels of 61.90 and about 6,300 on the cards.
And finally, Century Ply is up 4%. One of the top gainers in the broader markets. Would you bet on this one?
Oh yes, wild swings, but preferably, but largely on the higher side. On the upside, 845 and the recent swing high of 856 are your targets. Stop loss at the 815 mark. And Alex, I thought you'd throw me a challenge.
There you go. No, I think you've got enough practice because you've got several rapid fires on the Ask Profit show. I see they've trained you well, Kush. Not bad. Practice makes perfect.
Indeed, they have.
Yes, we might take a new round from Nirav as well. But before that, Alex, I think we should move on to our next segment also, and then we might come back to Nirav for another round for this segment.
Yeah, absolutely. Yeah. All right. But as we bid adieu to 2025, let's take a look at the star performers of the year. And this is stocks that have more than doubled. The question is, why has that happened? And could the momentum continue in 2026? Varsha has more in this Profit Intelligence. Listen in.
You know, there's a famous dialogue from a movie, 21 दिन में पैसा double. Well, these stocks have not doubled investors' money in 21 days, but 365 दिन में तो double कर ही दिया है. Let's see which are those stocks. You have, Force Motors, you have NACL Industries, SML Mahindra, Lumax Auto, Lumax Industries, and also L&T Finance, Axis Gates, Apollo Micro, Gabriel, and AB Capital. All these companies have doubled investors' money. Let's see, is doubling के पीछे की कहानी क्या है, and what's the outlook going ahead? Talking about Force Motors, the trigger of doubling the stock is, of course, 2,000 crore 3-year expansion plan that the company has set, and EV focus, strengthened outlook. Talking about what lies ahead, strong exports will support revenue visibility for this stock. Moving on to other stock, which is NACL Industries. Well, the trigger for over here has been the Coromandel, which has acquired 53% stake. This triggered turnaround expectations in this company. Well, they're going to improve margin from 4% to 9 to 11%. That's a very strong outlook, and the margins eventually will be closer to Coromandel's 17 to 18%. Well, moving on, let's see what SML Mahindra has done. Well, M&M acquisition has led to sentimental reversal, and which has led to doubling of the stock, while gradual shift towards electric vehicles is the outlook going ahead for SML Mahindra. Talking about Lumax Industries, they've actually increased their guidance to 20 to 25% for FY26. Earlier, if you see, the guidance was 15 to 20%. Strong order across two-wheeler and four-wheeler segments. All this have triggered a doubling for the stock. H2 launch indicate positive consumer sentiment for Lumax Industries. Talking about Lumax Auto, they expect FY26 revenue growth of around 20 to 25%, and they've given also long-term guidance of FY30 of 11,000 crore, which has triggered this stock which has doubled the stock, while order book stand at around 1,357 crore is the outlook going ahead for Lumax Auto. Talking about L&T Finance, well, shift towards high margin retail book, nearly 80% of the portfolio is the trigger for doubling of the stock, and of course NBFC sector tailwinds plus disciplined retail growth is the other trigger. While they expect 20 to 25% of AUM growth for next 12 to 18 months, and they expect to improve ROA to 2.8 to 3% by Q4 FY27. 2.7 versus 2.3% in Q2. Well, talking about Axis Gates Technologies, well, a lot of investors are interested into this stock because of the ambitious roadmap of 9,000 crore revenue by FY30. They expect 20% of EBITDA margin, and the outlook for this company, if you see, they expect 45% revenue and EBITDA growth for FY26 and FY27. Moving on, you have Apollo Microsystem, strong defense pipeline. FY26 order book expected at 800 crore are some of the triggers, while they are confident of maintaining 45 to 50% of revenue CAGR over FY26 and 27. Talking about Aditya Birla Capital, where the trigger for the stock is NBFC and insurance business have scaled sharply, and also balance sheets have strengthened via capital infusion, and they aim to double their net VNB over the next 3 years. Then you have Gabriel India, wherein the major corporate structure and simplification has led to doubling of this stock, and revenue target of around 1,000 crores in sunroof business has been delayed by 1 to 2 years beyond FY30. So, these are all the stocks, if I were to talk about, which has doubled your money, investors' money, in the last 1 year from January 2025 till date. And let's see what lies ahead in the next year.
All right, thanks so much for that very interesting presentation, Varsha. And by the way, Sharad was talking about going to Nirav. Who's Nirav?
Well, he's expected to be a researcher, I guess.
He's making things up. Samir, he forgot your name. Very bad. But having said that...
He owed me a coffee and now he owes me a coffee.
There you go. All right, but having said that, we're talking about doublers, and
doublers means 21 din mein paisa double. That joke also comes in.
Okay, but 21 din mein paisa double, I don't think that...
I think Kush has something.
Is going to have anything that will go that fast, right, Kush?
Oh, no, I'm just smiling that the name bug has caught on.
My inability that's quite the statement to make. It's difficult for me to pass that malaise on to anybody else. That is a purely Alex phenomenon. But having said that, let's get into this, right? Doubling of money. A reasonable assumption would be for a stock that does incredibly well on the fundamentals, Samir, is... Would you say 3.5 years at 20%? So let me ask you this. If you say that, if I was to ask you 2 or 3 stocks that you think could potentially be doublers from the perspective of the next 3.5 years, they would need to do what? 21%, right? Which is a little better than the benchmark. You say benchmark is what? 15% in a good few years. So therefore, what would those stocks be?
With you always. So one of our top picks in this space is Sterling and Wilson Solar, which is down so much. It's at 200 rupees yesterday. In fact, had a chance to interact with the management. Order inflow has been strong. They expect it to be even better in January. They've upped their guidance for the order intake and their execution for FY27. So I think that is one that would probably be more than a doubler over the next 2 to 3 years. We continue to like Samman Capital. We think that fund infusion that is coming, the low valuations at 0.7 times book, will re-rate over time, and that will continue, and that can probably double again, probably in 2 years period. So that is something that we look at. Then on the, it's a unique company which we think, which has the capability, is a one-off in India, is IGIL, which is International Gemologic Institute Limited, which is basically doing the rating of the diamonds. And as the lab-grown diamonds demand in India keeps growing, I think you're going to see more reports coming out, which will automatically mean more revenue, more profitability. It's a debt-free company. I think that is something that can do really well over the next 3 years. Then, of course, there's First Cry in the consumer space. We think we are very positive on. We think the children's space is very underpenetrated. That is something that it's again corrected a lot for 500 or 285. We are very positive there. Then we like QSR spaces. We think Westlife has seen a very sharp correction from 900 to about 550. We think the consumerism, like we said, is going to grow discretionary. McDonald's is a very strong franchise. They're not only going to see SSSG coming back, but the store expansions of 40 stores per year will lead to growth. So there's so many I can go on, but there are many stocks that have the ability and capability to double over the next 3 years. And this is, in this market correction, it makes a lot of sense to start building a good portfolio.
Absolutely. And when you're building that portfolio, of course, you anticipate that a few of them will be duds. That's just the truth of the matter. And you would hope that you limit the downside on those. But having said that, let's talk about a few newsmakers that are buzzing in trade today. And you have the likes of Credit Access, Grameen, you have Highway Infra and GPT Infra that are buzzing on order wins. Puneet is joining in with all of those details. Puneet, what stands out about these?
Well, thank you for that. So definitely the first one is Credit Access Grameen. Now, the company had mentioned that they will be looking to raise NCDs at the end of Q2. That confirmation has come now of 1,500 crores via debt on a private placement basis, and stock was reacting, has cooled off a bit as of now. But one of the key ones that you need to watch out for. The other one's an order win for a couple of companies. It's the one that I'm talking about is Highway Infra. Now they've got an order win of about 329 crore, letter of acceptance that is. And this one is for operation and collection of a user fee at the Casa Fee Plaza. Now the company had an order book of about 775 crores. So in that context, stocks reacting on this particular news flow. It's a small company. We don't talk about it that much, but one newsmaker that should be in focus. And the last one, again, GPT Infra Projects. Now, they've got almost a 199 crore order win from Northeastern Railway. Now, this is in Gorakhpur, and this order is for constructing bridge substructures. Again, one which we don't discuss too often. They have an order book of about 3,500 crores at the end of Q2 of FY26, building on to their order book with this one as well. So, these are three in focus on the back of order wins as well as funding in private placement.
Words, the building on those gains, right? All right, let's talk about GPT Infra and the other one, which is Highway Infrastructure Projects, right? Which is small companies. GPT Infra, by the way, is just about 1,400 crore market capitalization. Highway Infra is about 500 crore thereabouts, or less than 500 crores. So, Kush, the question to you, if you track these two counters, what would you say? Because they've already come off the high point of the day.
Alex, just very quickly, I hope more and more people listen to you that, indeed it takes at least 3.5 years on a reasonable basis for a stock to double. The expectations have gone haywire completely in the kind of rallies that we've seen. I don't track Highway Infra, a recent listing, but GPT Infra, yes, the stock has seen consolidation, negative bias, but if you want to do a range play, I think the stock is shaping up beautifully. 102, 101, that's the support zone. And on the upside, the upper end of the range is actually at 123. And once that is taken out at 136. So from a range play perspective, this is setting up beautifully. Mind you, momentum is missing. So you could perhaps see some sort of sideways movement as well. But like I said, the risk reward ratio from a range perspective is setting up very nice.
Okay. All right. A quick question with Samir. Samir, if I remember correctly, Kotak Institutional had an initiation of coverage on LG Electronics with a reduced rating. So that's an interesting statement, right? And we were speaking in the newsroom, actually on the anchor table, and we were discussing the fact that a lot of people go out and buy these electronics and they're less stressed about the brand nowadays, right? They're more sensitive about the price. So if they get a good discount here or there, they might as well move to another manufacturer, particularly in the television space. You see that a lot of people are buying flat screen televisions. They're moving not necessarily up the value chain. They're buying cheaper products because they know they'll replace it in 2-3 years. Are you positive on LG, and why?
So I do think there's a reason to be positive on LG. You're right. There are people who are moving to, the pricing points, but then there are all kinds of customers in the market. There are price sensitive customers, and then there are those who want the premiumized products as well. So you have across the value chain. We believe over time, branding is going to be something that attracts and brings more people in. LG has a good brand. It's not only televisions, it's also other products like washing machines, dryers, which are going to see momentum, fridges. So today, India is very underpenetrated. TV is probably the most penetrated, but if you look at the other products, they're very underpenetrated. And we believe that this is going to lead to a great amount of growth. LG, being one of the larger players with a great reach, will do well. Operating leverages will play through. Most of the gross costs, barring the commissions, will all lead to huge growth and profitability. Ideally, I would not say 1600 is the right price to buy. Maybe closer to 1300 would be my ideal price. That's what we had discussed earlier with you also. And I continue to maintain that the 1300 is the right price to buy it at.
And opportunities could well arise. Stock is still up about 37% from the issue price. Kush, on that note, thanks so much for taking the time. As always, pleasure speaking with you. We'll step into a very quick break. On the other side, we'll get you our top, not our top, but our experts' top buy today, sell tomorrow calls. Do stay tuned. '25 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान। सोनू निगम के लिए जोरदार तालियां।
coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investors is the correct advice.
Welcome back to India Market Close, and markets are still in a range but trading with a negative bias, and of course we are not getting important signals also, and it's almost flattish at the lower levels, but joining us is Shivangi Sarda. She's the analyst at Equity and Derivatives and Technicals at Motilal Oswal. A very good afternoon to you, Shivangi. Markets are not doing so much. These levels, and another 30 odd minutes are left, and there's a big event, Fed FOMC event happening at night as well. FIs have taken some positions off the table as well, and there is a buzz in the street of MTF margin trade facilities also, some of them getting broken as well in high beta stocks. How you're looking at the markets? What is the Nifty and the Nifty Bank technical setup looking like?
Very good afternoon, Sharad. Thank you for having me. So we've seen that markets have been facing some bit of jitterness from the last 3 trading sessions. And overall, we've seen that any minor attempts of recovery are not being respected. Of course, the global cues and the domestic cues have also come in the larger picture to contribute to this weakness. But the good part is that from the last 2 trading sessions, it is bouncing back from its 50 daily exponential moving average, which is near 25,700 odd marks. So overall, we are seeing that weakness is going to persist, but there is some bit of support-based buying which is present at 25,700, which will act as a major make or break zone over here. Of course, the upside still remains very capped, and we're not expecting the index to cross 26,000 on an immediate basis. So one could look out for these levels for the next expiry POV. Now, talking about Bank Nifty, of course, we've seen that this has been one of the strongest pillars in the entire rally in the last few sessions, last few months rather. But we've seen that this index has been fairly resilient as compared to the broader market, and even though the private names aren't contributing that much, the PSU are kind of holding one string of this index. So overall, we are expecting strength to continue here. And for the portfolio stocks, one should continue to be with the banking stocks.
With the banking stocks, we'll come back to you, Shivangi, to find out what your picks are. In fact, your BTST calls in just a bit. But before we do, let's talk about that key event that Sharad mentioned to you. And that is the Federal Open Market Committee meeting, or the outcome of that meeting, which is underway, which started yesterday. And that will culminate our time later tonight. And this is the last meeting, of course, of 2025. It's a wide range of expectations leading up to this event, because a while back, the expectation was that there would be a pause, and then it swung quite firmly the other way, where there's now a practically 90% probability of a rate cut, and 25 basis point rate cut is being penciled in by the Fed. Of course, amidst all of this, you've had President Donald Trump that has been demanding another rate cut. In fact, he's been talking about the next Fed chair, and the last round of appointment and all of that is playing out even as we speak. Every day he teases it a little bit. It's like who will be the contender to take that hot seat. So remember, the current Fed chair, Jerome Powell, has his term till May of next year, assuming that he completes his entire term. and there's widely expected to be a 25 basis point cut. Of course, experts are divided about what the course is going forward beyond that, because there's a lot of uncertainty about the statistics that have so far been disclosed. The latest data on the PCE, that is the inflation print that the Fed looks at very closely, has been reasonably supportive. At least it hasn't been alarming on the upside. Let's go back to the markets and talk about individual stocks. And let me ask Shivangi what she thinks about the defense counters, because they've been chop and churn in the recent past. You have one day when they're gaining, one day that they're losing. Is there a durable trend that you're seeing on the upside for any of these counters, Shivangi?
Absolutely, Alexander. Now, defense space has started moving because it has to fall. That has been the trend from the last few trading sessions. And if you talk about stocks like HAL or BDL, these stocks have kind of witnessed a lot of weakness of lately. And even though there is some bit of recovery here and there, but these stocks aren't being able to hold at these levels, and that is kind of concerning. One would want to wait and watch over here before starting to accumulate, because these are getting quite lackluster of lately.
Yeah, Samir, there's some stocks are there. These are high beta stocks also. Let's get in BSC, Keynes Tech, all these stocks in focus, even PB Fintech. These stocks are cracking in their trade. No major fundamental reasons, but they're at the day's low itself. Look at these stocks. These are high beta stocks as well. Is there any kind of a technical kind of a downtick coming in, Samir, or is it like, there's a buzz in the circles as well regarding the MTF part, the loan against securities, which is there across, in some places. There's just a chatter in the street, but are you looking at is any concern over here, or we'll see a kind of a pullback coming back in?
So if you genuinely ask me about BSE, I think that stock was massively overvalued. I think a lot of the capital market play stocks, BSE, MCX, market has become complacent and comfortable with stocks trading between 75, 80 times forward earnings, which makes no logical sense, especially when you are at a point where market activity has picked up to the level it has. Now, let us assume for some time, for a bit, that you get to go through a period of 6 months where the market becomes dull, volatility goes down. And if the trading volumes fall, what happens to these counters? Because they rely on turnover on the exchange, trading volumes on the exchange for their largest chunk of revenue. BSE, I think it's as high as 75%. MCX is pretty much 100% of its core revenue comes from. So for me, I think it's just valuation correcting, people accepting the fact that this is not sustainable. These growth numbers also that have come in the past are not going to sustain. So these valuations need to come off. And that's what I see. Keynes Technologies is going through its own other problem altogether. I think the EMS space had got a lot of extra interest also. Today, you've seen Dixon cracking, they were trading at 50 times forward earnings. We've been saying for a while, it's a little expensive. It was the best in the place. Dixon is the best stock in that space to be investing in. But 50 times comfort level doesn't come because you're not going to keep doubling your profits. Now the profit growth is going to start tapering down to 30%. And then at 30% profit growth, trading at 50 times means 2 times PEG. So these corrections are nothing but people realizing that at some point valuation also matters.
Yeah, that's fair. Speaking of valuation, let me ask you about ITC Hotels, because ever since you have British American Tobacco, BAT, sell stake earlier this week, you've seen quite the crack in the stock. Pull up the chart this week and you'll see that it's down about 7%, if I'm not mistaken. Is this an opportunity in your opinion, Samir, or would you wait for, say, 8%? Is it an opportunity, or would you wait for better levels?
So I think, honestly, ITC at this point, after whatever correction we've seen...
ITC Hotels.
Yeah, I'm talking about ITC Hotels. It's looking interesting. For the simple reason that, look, for them, expanding now is happening more through management contracts. So it's a slightly capital-light kind of a business model. Hotels can come up a lot faster. They have ambitious targets of what they want to put up over the next 5 years. If they're able to achieve that, with us believing that true tourism and travel in India is only going to see an uptick, ITC having the brand recall, ITC Hotels, having a brand recall that they have, which is the Fortune Brew, the ITC Hotels. I think the opportunity is there. this sector can generate strong ROEs, ARRs will move up, occupancies will move up, and that will lead to probably an uptick. So I think accumulated over the next 6 months, it may go down before it goes up, but this is a good time to start getting in.
Okay. Shivangi, let me ask you about your BTST ideas. And by the way, everyone calls me Alex.
Yes. So, from the BTST space, I've seen that, Titan is one stock which is kind of holding quite well despite the market weakness and bitterness. And this has been, one stock which has kind of retraced immediately. And we've seen that buying interest has been seen at the support levels, indicating that the overall structural strength is quite intact. We've seen a rise in the put writers as well, which has overshadowed the intermittent short-term drop as well. So everything is aligning with the increase in the volume as well, which is kind of seen while the price is rising. And of course, this is one of the most important counters in the sector and is driven by the retail growth and the steady margin expansion in the jewelry and watch divisions as well. So overall, signaling a quite bullish framework here, and we're recommending a buy. The momentum is intact as of now, and we're expecting the next target of around about 4,000 levels with the support of 3770 zones.
Okay. All right. So that's the idea that you should keep on your radar. Titan is one to watch. By the way, we're drawing to a close for 2025. It's been a tough year. So the question we're asking a lot of market participants is, does 2026 look better? And this is what Shripal Shah, the Managing Director and Chief Executive Officer of Kotak Securities, had to say. Listen in.
Trade deal is weighing on everybody's mind, and in fact, it has taken far longer than even market had expected. And sometimes market can go wrong. And in this, at least what I understand is that we did expect this to get resolved very quickly. It has taken time, and over a period of time, that is weighing on the levels. In terms of investment outlook for the next year, if one wants to start investing now, obviously the big area is it has to be a large cap, because the next entire earning growth will be driven by the large cap, and particularly within that, what we like is the financials.
Okay, financials are one to watch out for. We were talking about how the Nifty Bank has been resilient, but it's more than that. It's more structural, right? You have the Reserve Bank of India that has cut rates by 25 basis points, a possibility of another rate cut going down, and the NBFCs therefore come into focus on account of their cost of funds reducing. But let's talk about Grow. Billion Brains Garage, which is down about 2% at this point. Let's pull up the chart and see where it is. Remember that the lock-in ended today, and there was quite a bit of selling that came through. It has recovered from the low point of the day, though, and it's still about 46% higher than the issue price. Samir, at this level, would you wait for opportunities down the road to buy? If you have the stock, would you take money off the table or continue to hold?
I don't have the stock. I would not be buying it at this point of time. Like I told you, the capital marketplace, you see, right now we are in a situation where the activity is so high because the markets are so buoyant that these companies are able to earn a higher turnover. Get a higher turnover, which earns higher income. Their cost structure is fixed. So the operating profits have a huge benefit. So my cost, if it's 100 and I do a turnover of 120, 20. Now for companies like Grow, the cost remains at 100 or maximum goes up by 5%, which is your employee 7%. But if my turnover goes to 140, the additional, barring that 3-4% cost increase, comes all to my PBT. And when the turnover starts going negative, the operating leverage works negative. So to value these companies in a buoyant market is very dangerous, which is what I've been trying to explain. Wait for a bear market. You'll probably get this stock at 50% of where it is, maybe 2 years down, within the next 2 years. At that point, yes, it's a great investment to make, because at the end of the day, capital markets over a long term will see more participation, but it's going to be volatile. It's not going to be a straight line up.
By the way, we're at very close to the low point of the day for the market as a whole. Take a look at the benchmark Nifty 50 now trading with cuts of over 0.33%, and very close to that 25,750 mark. It's not too far away from the 50-day moving average. The mid-cap index down about 1% and having dropped quite considerably, about 1.5% from the high point of the day. and pretty much at the low point of the day right now. The small cap index at the low point of the day down about 0.8%. So whereas in trade yesterday,
it seems like a dead cat bounce, Alex.
You wonder, right? Because in trade yesterday, you had the broader markets that recovered quite sharply from the low point.
This seems a lot of technical factors are at play, and I feel that the small cap indices it might not be the right time to do value buying. I think let's ask Shivangi also. Shivangi, you're tracking the small mid cap space also. There is a significant correction coming in. Any good buy, if you could give us a positional bet on this, maybe for a monthly basis, anything good coming on your charts?
At the mid-cap space, they have kind of, bled from the last few months, and we've seen that, they have actually underperformed the broader market. Of course, we've seen a very good rally in the previous few years, but now is definitely not the year for these small case stocks. But of course, if you look at certain pockets, one could diversify in this space, but I wouldn't recommend a concentration here as well, because momentum kind of is fizzling out quite fast in these counters because of the lack of strength in the overall broader market. So I would recommend, to start with something like IT, mix it up with the PSU bank, and then include some consumption space stock along with the pharma space. So this is the kind of outlook that we could do with mid-cap stocks.
It is kind of a sectoral bet right now Shivangi is taking. But Samir, let's just pull up the Paytm chart. Alex had marked this also. This stock is, let's just show the intraday chart for Paytm. It is days low as well. It's almost down 4% odd. Technically speaking, this is still a medium term basis. It's still strong. But Samir, anything, for Paytm right now, because the fundamental triggers seem good. Would it be a good time to, nibble in?
Yeah, the fundamental triggers are definitely turning positive slowly for Paytm. You look at the reach that they've created for their cash collections, it's quite significant, which is going to lead to increase in turnover and profitability. Their BTST, not BTST, but their buy today, pay later, that part of the business is growing. We think profitability overall will keep increasing. Yes, the stock has run up. It's difficult to call it out on valuation because they're barely profitable, if anything. So it needs to scale up. Would I go out and buy it today? No, I'd wait for more correction. But yes, the long term for Paytm is definitely looking a lot better than it did 6 months ago. And we think maybe closer to 1,000 odd levels. Again, a good buying opportunity. It's run up a lot recently.
Yeah, up as much as 94.5% from the 52-week low. And by the way, the reason it's down in trade today is that there is a little bit of a buzz that Vijay Shekhar Sharma might have sold stake in a block. So certainly something to watch out for in the block and bulk deals data that will emerge later. Shivangi, anything on the charts for Paytm?
Looking at the technical setup for Paytm, of course, we've seen that a bit of recovery has been seen from the last few odd months, and consistently we've been holding on to an upward sloping channel on the monthly basis. Of course, there is some bit of weakness from the last 6 odd trading sessions, but overall it is still respecting its important EMA on the daily frame. And we would actually, on an immediate basis, watch out for 1250. So if this stock breaks 1250, then we could see some short-term, short-term correction in this. If it manages to hold above these levels, then we could expect another bounce towards 1300 plus levels.
Well, that's the important levels coming in for Paytm. Thank you very much, Shivangi and Samir, for your time, giving perspectives both in technical and fundamental space. But coming back to the markets, there has been a volatile session, and the bleed which we are seeing, that's of course in the mid space. Maybe in last trading session there was a dead cat bounce, but looking at the numbers, it's below the 25,800 mark for Nifty, and Nifty Bank also seeing sharper cuts, so it's below the 59,000 mark as well. Let's pull up the constituents for Nifty and see where the action is. Largely the auto and the steel and the life insurance players, they have done well, but the number of reds that has increased. Earlier it was around 40% at 2 p.m. and now in the closing this is almost 60%. Interglobe Aviation, Eternal, Trent, iBeta stocks are also cracking the trade. Street is spooked about the margin trade facility issues in some broking houses. let's look at the overall sectoral spaces, how things are moving out. Only metal and pharma barely in the green, but a sea of red coming in with the pressure in the consumer durable space, the nifty mid-cap space, and even the nifty PSU banking space. So that's a cause of concern. Let's pull up the advanced decline ratio, how things have panned out. Earlier in the day itself, it had shown a very good, strong strength, but then it started consolidating, and then the reversal has started taking place in the last 90 minutes, which we had stated earlier. Also, let's look at the mid-cap index and the small-cap index, how they performed. It's largely to come down and end near the day's low level, and the same story is repeating in the small-cap space also. So that's a major area of concern as well. But remember, the volumes have turned lighter, and this is because of Fed FOMC meet, which is expected to happen tonight, and that's why most of the global assets are trading light. BSE 500, interesting names, stock-specific moves, but nothing happening in the sector. Hindustan Zinc, that's up 1.5%. Century up 4%. Metro Brands, Hikal, ESAB, these are one-off volume moves. That's why these are up. The downtick, you see, Dixon Tech, Tata Teleservices, MCX, Latent View, even Persistence and Paytm, all of them cracking in the day's trade. And these are important stocks to note, especially on the delivery data, which we'll be tracking. But going ahead this evening, 25 basis points rate cut expectations is there in Fed FOMC meet. That's a very, very important decision. And after that, the major triggers for this year gets over. The board meetings which are there tomorrow, they include Asiana Housing Finance and largely the BFSI name. This is just a raw material for them. Some distilleries also are discussing their other business matters, and overall we will be focusing much more on the macro factors going ahead, as tomorrow we go into Sensex expiry. That's all for India Market Close. Stay tuned to NDTV Profit, and up next is Market Express by Himangshi.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Hello, good afternoon. I'm Himakshi Bahugna. This is Market Express. Quick, sharp, and always ahead. Let's hit today's biggest stories. First up, let's see how the markets have fared today. So, midweek blues for the market, as we can see, benchmarks end nearly, 10 days low. Nifty ends near 25,750 levels. And also, if we talk about Sensex, so that has dipped nearly 300 points. And talking about the sectors, so most of the sectors have ended in the red today, with IT and PSU Bank leading the losses. However, metals and media stocks managed to stay resilient, now bucking the overall negative trend. And also, if we look at silver, so that has hit fresh record high, crossing $60 an ounce for the first time ever. The white metal is building on strong momentum after a 4.3% surge in the previous session. Year-to-date, silver has outpaced gold with stunning gains of 107% compared to gold's 59%. Now, what's driving this rally? Three big triggers: renewed hopes of a Fed rate cut in December, persistent supply concerns after a historic squeeze in London, and also robust industrial demand that's been growing steadily for 8 years. So analysts are saying that the rally may not be over yet. And silver's record run is not just shining on the global markets, it's also boosting the sentiment for Hindustan Zinc. So silver has contributed nearly 20 to 25% of the company's revenue and as much as 35 to 40% of its EBITDA. So analysts are saying that every $1 move in silver prices has about a 1% impact on the Hindustan Zinc's EBITDA. So with silver crossing $60 an ounce, the stock could see some strong tailwinds ahead. And next up, we have AU Small Finance Bank that is in focus after the government approved raising its FII limit to 74%, matching the foreign direct investment cap for private sector banks. Now, under the current norms, FIIs can invest up to 49% automatically and from 49% to 74% through the government route. So this higher ceiling opens the door for greater foreign capital, improved institutional shareholding, and also the possibility of strategic global partnerships. And it also strengthens the bank's ability to raise funds for future growth. However, the move does bring the ownership dilution risk, which existing shareholders will need to watch very closely. And viewer, shares of online marketplace Meesho listed on the National Stock Exchange at 162.5 rupees per share, marking a premium of 46.4% over the IPO price. The company's stock listed at 161.2 rupees on the BSE, debuting at a 45.23% premium. So Meesho's IPO comprises a fresh issue of shares worth 4,250 crore rupees and also an offer for sale of 175.7 million shares by existing investors. So Kotak Mahindra Capital Company is acting as the book-running lead manager, while KFin Technologies will serve as the registrar of the issue. And SpiceJet is set to boost its flight operations by introducing up to 100 additional daily flights during the ongoing winter schedule. Pending regulatory approvals, once regulatory approvals are secured, the up to 100 additional daily flights will help SpiceJet capitalize on the increasing demand as well. So this would support both the market growth and also the passenger convenience during the busy winter months. Now, this expansion comes amid rising demand across the key domestic routes in India's aviation sector. So the airline has taken significant steps to expand its operational capacity by inducting 17 aircraft into the active service over the past 2 months. And Godrej Industries and Godrej Agro are in focus after the group announced a 10,000 crore investment plan in Telangana. Now, as part of this, Godrej Jersey has signed an MOU with Telangana government to invest 150 crore rupees. The agreement covers the setup of a new dairy processing unit, which is aimed at expanding the company's footprint in the state's dairy and also food processing ecosystem. Now, this marks a significant commitment from the Godrej Group towards boosting manufacturing and also agri-linked infrastructure in Telangana. And viewers, Kaynes Technology was also in focus today. Kotak Securities has maintained a reduced rating on the stock. The brokerage has also cut the target price sharply to 4,150 rupees from 6,180 rupees. Now, Kotak says that there are still concerns around intangible accounting and high working capital. It also believes that FY26 guidance is at risk. The firm says that Kaynes must generate positive operating cash flow in FY26 and that it also needs stronger internal controls and also timely execution of its PCB and OSAT expansion plans. Listen into what the management had to say about the Kotak note.
See, we are concentrating on our jobs. Whatever concerns have been raised, we have already addressed. And we are concentrating on our job for meeting our quarter results and year results. So I am very confident the street will understand
And Anupam Rasayan is also making a major global move there. The company will acquire 100% of Jayhawk Fine Chemicals in the US for about $150 million. The deal is valued at roughly 9 times EV versus EBITDA and also will be EPS accretive from the start. So the acquisition gives Anupam an immediate US manufacturing footprint along with direct access to global customers and also high value end markets. So Jayhawk adds diene hydrides and also polyamide intermediates, and also it's also expanding Anupam's presence in performance materials and semiconductor linked chemistry. So the move is strengthening the company's integration strategy, forward integration after its earlier backward integration with Tanfac. Next up, we have PG Electroplast that is back in focus after a brokerage-linked controversy. So HDFC Securities has issued a written clarification on the HDFC Sky article that raised concerns around the company. The brokerage says that it identified certain unintentional glitches in the piece. The article was taken down at 9:05 a.m. on December 9, and also HDFC Securities has extended a formal apology to PG Electroplast and its stakeholders. So the matter now appears to have been resolved, with the brokerage acknowledging the error and also retracting the content. Next up, we have EPAC Durables that is signaling a cautious outlook for FY26. So Managing Director and CEO Ajay D.D. Singhania tells NDTV Profit that revenue growth guidance remains largely flat. Though the order book stays healthy, inventory is expected to strengthen in Q4, driven by increased production from the partner brands. So, however, the company sees competition intensifying in the coming quarters, which could actually pressure the margins. But despite the muted growth forecast, EPAC is betting on operational efficiencies and also a strong pipeline to navigate the challenging environment. And next up, we have Delhi Bilcon that has secured a major win from NALCO. The company has received a letter of award for developing and operating bauxite mines. Under this deal, Delhi Bilcon will execute an EPC contract worth 1,750 crore rupees over 3 years for NALCO. Also, it has bagged a 22-year mining contract valued at 3,250 crore rupees. So this marks a significant boost for Delhi Bilcon's mining portfolio and also strengthens its long-term presence in the sector. And next up, we have GPT Infra Projects. That has also bagged a significant railway order worth 199 crore rupees. The contract comes from Northeastern Railway, based in Gorakhpur. The scope of the work includes constructing the substructure for a major railway bridge. Now, this order further strengthens GPT Infra Projects' position in the infrastructure sector and also adds to its growing portfolio of railway projects. Here's IndusInd Bank Chairman Sunil Mehta will not seek a reappointment in January 2026, according to two people with direct knowledge of the matter. Mehta will conclude his current 3-year tenure and also then move on from the lenders board. So according to the first person quoted above, this development has been communicated to the bank's leadership, its board and also the promoters already. So Mehta has previously chaired boards at Punjab National Bank and the reconstructed Yes Bank. So he had continued to run affairs at IndusInd Bank between April and August 2025 during a management transition. And we are focused on our job. Whatever concerns have been raised, we have already addressed them. Our priority now is meeting our quarterly targets, and I'm confident that the street will understand. So this is coming by Ramesh Kunikanan, Executive Vice Chairman, Keynes Technology. Now, on to the latest on the IndiGo flight fiasco. While operations are stabilizing and one-time performance has shown a dramatic improvement from last week, the security over the airline's sprawling operational breakdown has intensified. The DGCA has given IndiGo CEO a 1-day extension to present comprehensive data and also updates relating to the recent disruptions. So the airlines has been instructed to submit the complete report and also appear before the aviation regulator on 11th of December 2025. So that's tomorrow. So the directive was issued alongside a formal immediate on-site inspections at 11 airports. The Delhi High Court has pulled up the centre over the IndiGo crisis. So the court also questioned the centre's failure to prevent airlines from doubling or even tripling their fares at the time of the fiasco. So IndiGo, however, has objected and asked the Delhi High Court to not record any finding against them and has evidenced that they are back to 90% of their capacity today. The Delhi High Court has said that they will take strict actions against IndiGo, and also a show cause notice has already been served to the carrier. Next up, we have Air India that is gearing up for the winter fog season as aviation regulators officially designate December 10 to Feb 10 as the country's fog window. So Northern India, especially Delhi, which is Air India's main hub, faces severe low visibility conditions each winter, often triggering network-wide delays. So to minimize the disruption, Air India says that it has rostered more Cat 3B qualified crew, and it has also ensured that enough aircraft are configured for the low visibility operations. The airline also aims to reduce schedule ripple effects and also to protect the passenger experience during the most fog-prone months of the year. Here's SpaceX is moving ahead with plans for an IPO that could raise well over $30 billion. So potentially making it the largest public offering in history. The Elon Musk-led company is targeting a $1.5 trillion valuation. Now that puts it close to the market value Saudi Aramco reached during its 2019 record listing. So SpaceX management and advisors are aiming for a mid to late 2026 listing, though the timing could shift into 2027 depending on the market conditions and also other factors. If successful, the IPO would be a historic milestone and also significantly impact the global financial landscape. And Amazon has said that they plan to invest more than $35 billion, that is close to 3.14 lakh crore rupees, across its India business by 2030. So this would actually add to nearly $40 billion already invested since 2010. So this move came a day after Microsoft's commitment of investing 1.5 lakh crore rupees in the county. And Amazon has said that the planned investment will focus on business expansion and also three priorities: AI-led digitization, export growth, and job creation. So the investment marks a long-term commitment to India's digital economy and also manufacturing base. And viewers, the Defense Department has selected Alphabet's Gemini to power its new AI platform. Now, Gen AI Mill, for around 3 million civilian and military personnel, the platform will help the military quickly analyze video and imagery, enabling faster decision-making. According to Pentagon officials, Gen AI Mill aims to create an AI-driven culture that changes, the shape of the digital battlefield for years ahead. So Defense Secretary Pete Hegseth has emphasized that AI represents the future of American warfare and also signaling a major shift in the military technology and operations as well. US billionaire philanthropist Mackenzie Scott has donated $7.2 billion this year, marking her largest single-year giving. Her total contributions over the past 5 years now reach $26 billion. Now, the donations support 186 organizations worldwide, including universities, environmental groups, and also equality-focused non-profit Scott. So Scott, the former spouse of Amazon co-founder Jeff Bezos, has a net worth of nearly $40 billion, and she is known for giving large gifts to small or overlooked non-profits, cementing her reputation as one of history's most prolific philanthropists. And a massive fire has broke out early this morning at the Raj Textile Market in Surat's Parvat Patia area. So the fire department received the first call around 7 a.m. and over 20 fire tenders, including hydraulic platforms, rushed to the spot. Firefighters are currently battling the blaze on the top floor of the market, and because most of the material stored there is synthetic, officials are saying that it may take time, to bring the fire fully under control. So no casualties have been reported, so that's a good news there. And as fire started in the early hours before the market opened, firefighting operations are still underway. And Bengaluru is in the grip of a major bus strike, and with the festive season around the corner, travelers are scrambling for alternatives. The sudden shift to private buses has sent the ticket prices soaring on popular routes. Fares have already jumped by 200 to 300 rupees, and also experts warn that they could rise by another 400 rupees in the coming weeks. So with limited options and rising costs, early booking is now the only way to avoid paying a hefty premium. IMD has issued a cold wave and dense fog warning for several states, including Maharashtra, till December 12. So districts including Nashik, Dhule, Pune are likely to experience cold wave conditions and isolated pockets during this period. Now, as a result, the IMD has also issued a yellow alert for these districts, advising people to stay indoors as much as possible. It also warned that many states, including Maharashtra, Karnataka, Odisha, Punjab, Telangana, Vidarbha, and West MP, may experience severe cold today. Here's Commerce and Industry Minister Piyush Goyal says that India's trade talks with the United States are steadily progressing. Speaking at the Pravasi Rajasthani Divas in Jaipur, he confirmed that a US team is currently in New Delhi for negotiations on the proposed bilateral trade agreement. Goyal said that discussions are moving forward continuously and indicated that he may also meet the visiting American officials during their stay. So talks between both the sides are expected to pick up pace as they work towards a possible trade deal. And since January, the United States has revoked more than 85,000 visas as part of a broader crackdown on immigration under the Trump administration. So the State Department has highlighted that this step reflects stricter vetting measures aimed at enhancing the national security. The administration also emphasized that the move is part of ongoing efforts to ensure that visa approvals align with the US laws and also security protocols. So the revocations affect a wide range of visa holders and also signal a tougher stance on the immigration policies going forward. On to some more global news. Australia has officially rolled out its nationwide social media ban for children under 16. So from today, platforms including TikTok, YouTube, Instagram and Facebook must block their content for teenagers. Prime Minister Anthony Albanese called it a proud day, saying that the move shows that policymakers can curb online harm. In a video message, he said that the ban gives families a chance to take back the power from big tech, allowing kids to be kids and giving parents more peace of mind. So the new rules mark one of the world's toughest approaches to youth safety online. And if we talk about India-EU trade deal, so they are also ramping up efforts to close their free trade agreement as the year-end deadline approaches. Commerce Ministry says that Minister Piyush Goyal has held high-level talks with the EU's Commissioner for Trade and Economic Security on December 8th and 9th, giving a strategic direction to the negotiating teams. So this visit followed earlier discussions between the Commerce Secretary and the Director General of Trade from the European Commission on December 7th, underscoring the push on both the sides to clinch the deal as quickly as possible. And on to some sports news now. So Virat Kohli is inching closer to reclaiming the title of the world's best ODI batter. So in the latest ICICI rankings released today from Dubai, Kohli has jumped 2 spots to number 2, riding on a brilliant player of the series performance against South Africa, where he piled up 302 runs in 3 matches. So Kohli hasn't been at number 1 since Pakistan's Babar Azam overtook him in 2021, but he's now just 8 rating points behind the top spot. And leading the chart is still Rohit Sharma, who scored 146 runs in the same series to comfortably retain his world number 1 ranking. And viewers, UNESCO has announced the inscription of Deepavali or Diwali on the representative list of the intangible cultural heritage of humanity. So the decision was taken during a key meeting of UNESCO being hosted at the Red Fort in Delhi. So this is the first time that India is hosting a session of the intergovernmental, committee for safeguarding of the intangible cultural heritage. And with that, viewers, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable.
Benchmarks close near days low as broader markets underperform frontline indices. Most sectoral indices end lower, with Nifty IT emerging as the top loser. Meesho gains over 53% at close after a strong debut, lists at 46% premium. Co-founder says the IPO isn't the finish line, it's in fact the start of the next chapter. DGCA grants one-day extension to IndiGo for presenting comprehensive data relating to recent operational disruptions. The airline now has time until 3 p.m. tomorrow. Delhi High Court seeks a committee report on IndiGo's service disruptions in a sealed cover, asks IndiGo, the centre and DGCA to file a reply by the 22nd of January. IndiGo objects, asks Delhi High Court not to record any finding against them. US Trade Representative Jamison Greer says India's resistance on certain crops and metals has been difficult to crack, but the Indian team is quite forward-leaning. Meanwhile, Commerce Minister Piyush Goyal says a lot of progress is being made on the US trade deal, but the government won't negotiate with a timeline. Amazon commits over $35 billion in India investments through 2030 to become the country's largest foreign investor, with $40 billion in cumulative investments since 2010. Meanwhile, Microsoft CEO Satya Nadella says countries with fastest AI diffusion will win, as they won't just be the creators of technology but also emerge as global leaders. Swiggy ends in the red after gaining nearly 2% intraday in trade after its QIP worth 10,000 crore rupees was fully subscribed.
And US government's new social media vetting policy triggers disruptions for Indian H-1B visa applicants as their appointments get postponed to next year. US Embassy in India issues an advisory that the applicants must now come on the rescheduled date. Hello and welcome viewers, it's 4 p.m. A very good evening to all of you watching me at the moment. This is Profit 360 only on NDTV Profit, and along the next half an hour we'll be taking you through some of the latest updates when it comes to markets, national as well as international news. Let's check first how the markets fared. Benchmark indices ended lower for the day with the Nifty closing below 25,800 mark. That recorded about a subtraction of about 81 points at close. Meanwhile, Sensex shut shop around 84,390 odd levels, down about 0.32% at the end of business hours. Now, this is the third straight session of losses for the benchmark indices. Sectorally speaking, though, markets saw a mixed performance, with media, oil and gas, metal and pharma ending in the green, while indices to the tune of IT, PSU banks and consumer durables dragging down the markets lower. My colleague Puneet now joins us with a detailed market roundup of the day. Puneet.
Well, it was an down and out day to say the least for the markets today, with the Nifty ending well below the 25,800 mark as well. Consistent pressure that we saw from the start of the trading session. We were at almost 70 to 80 points uptick at 10:30 a.m. today. Since then, it has been all pressure on the markets across the board. The third consecutive day for the Nifty 50 when it was down today. This was led by stocks like Eternal, which was the top Nifty loser. You also saw Interglobe Aviation as the other key stock that has consistently been under pressure over the last 1 week, and that's largely for the Nifty 50. The auto pack, the names like Eicher Motors and Mahindra did try to support the larger bank and the larger index, but overall a very down and out day. The second key aspect that you see is the advance decline ratio. At one point of time, early in the morning, we were 4:1 in the favor of advances. That quickly reversed by the end of the day, with the declines actually having a much higher proportion to the advances, which is 900 at the end of the trading session for the advances versus 1900 at the start of the trading session. That was the second key aspect. And thirdly, the pressure on EMS stocks. It was led by Keynes Tech, down over 10 to 12%. But in the last hour of the trading session, Dixon Tech also ended lower by almost 9% in the trading session. One of the biggest losers in the mid-cap 150 along with BSC. So a down and out day, battered, bruised and hunted was the EMS space as a whole. When you look at the other key aspect in terms of sectoral allocation, Nifty IT emerged as the top sectoral loser of the day. Persistent System and Coforge were the top losers in that index. And when you look at the other key aspects in terms of the Nifty Auto, Financials, IT and Bank, they fell for the third consecutive day, while something like a Nifty Pharma has snapped its 3-day losing streak. Oil and gas as well as the pharma index also did the same. Overall, when we come tomorrow, we will have the FOMC meet decision as one of the key aspects on the back of banking stocks that will be in focus. Continue to focus on the EMS plays because that space seems to be under a lot of pressure right now.
Thanks so much for explaining how the markets performed today. But moving on, viewers, we always give you an expert voice followed by a market check as well. And therefore, today we have Manish Sonthalia's comment. He's a chief investment officer at MK Investment, and he said that large cap stock picking remains the easiest, while mid and small cap investing requires the most amount of research as well as caution. Sectorally, he expects consumption to make a comeback, with intermediary businesses standing to benefit from the due recovery. He adds that the capital market space has already corrected, and going forward, healthcare is positioned to do particularly well. Listen into the expert.
Picking stocks from the broader market is the most difficult form of stock picking that one could do. The easiest form of stock picking is basically the large cap space. And the mid and the small cap space is a lot of homework that you got to do before you basically take your call on the large number of stocks from within the large number of stocks that you have in this universe. Coming to which are the themes and sectors, I would believe that's a no-brainer that obviously consumption should make a comeback. You have platform companies, which are leveraging on technology. and basically these are intermediation businesses across domains. They would tend to benefit. Capital market plays have corrected and would offer great value at these levels from the next 2-3 years point of view. You have healthcare, you have rate sensitives, which is going to do very well over the next 1 year. So these are some of the pockets which I think is going to likely outperform the markets.
So going as per Sonthalia's comments, one may or should keep an eye on healthcare and consumption. But as we bid adieu to 2025, let's take a look at the star performers of the year, the stocks that more than doubled. Why did that happen? And will that momentum continue? Well, my colleague Varsha has all the answers and she is standing by with a deep insight on all of them.
Absolutely. There's a famous dialogue from a movie, 21 दिन में पैसा double. Well, these stocks have not doubled investors' money in 21 days, but 365 दिन में तो double कर ही दिया है. Let's see which are those stocks. You have, Force Motors, you have NACL Industries, SML Mahindra, Lumax Auto, Lumax Industries, and also L&T Finance, Axis Gates, Apollo Micro, Gabriel, and AB Capital. All these companies have doubled investors' money. Let's see, is doubling के पीछे की कहानी क्या है and what's the outlook going ahead. Talking about Force Motors, the trigger of doubling the stock is of course 2,000 crore 3-year expansion plan that the company has set and EV focus strengthened outlook. Talking about what lies ahead, strong exports will support revenue visibility for this stock. Moving on to other stock, which is NACL Industries. Well, the trigger for over here has been the Coromandel, which has acquired 53% stake. This triggered turnaround expectations in this company. Well, they're going to improve margin from 4% to 9 to 11%. That's a very strong outlook, and the margins eventually will be closer to Coromandel's 17 to 18%. Well, moving on, let's see what SML Mahindra has done. Well, M&M acquisition has led to sentimental reversal and which has led to doubling of the stock, while gradual shift towards electric vehicles is the outlook going ahead for SML Mahindra. Talking about Lumax Industries, they've actually increased their guidance to 20 to 25% for FY26. Earlier, if you see, the guidance was 15 to 20%. Strong order across two-wheeler and four-wheeler segments. All this have triggered a doubling for the stock. H2 launch indicate positive consumer sentiment for Lumax Industries. Talking about Lumax Auto, they expect FY26 revenue growth of around 20 to 25%, and they've given also long-term guidance of FY30 of 11,000 crore, which has triggered this stock which has doubled the stock, while order book stand at around 1,357 crore is the outlook going ahead for Lumax Auto. Talking about L&T Finance, well, shift towards high margin retail book, nearly 80% of the portfolio is the trigger for doubling of the stock, and of course NBFC sector tailwinds plus disciplined retail growth is the other trigger. While they expect 20 to 25% of AUM growth for next 12 to 18 months, and they expect to improve ROA to 2.8 to 3% by Q4 FY27 versus 2.3% in Q2. Well, talking about Axis Gates Technologies, well, a lot of investors are interested into this stock because of the ambitious roadmap of 9,000 crore revenue by FY30. They expect 20% of EBITDA margin, and the outlook for this company, if you see, they expect 45% revenue and EBITDA growth for FY26 and FY27. Moving on, you have Apollo Microsystem, strong defense pipeline. FY26 order book expected at 800 crore are some of the triggers, while they are confident of maintaining 45 to 50% of revenue CAGR over FY26 and 27. Talking about Aditya Birla Capital, where the trigger for the stock is NBFC and insurance business have scaled sharply, and also balance sheets have strengthened via capital infusion, and they aim to double their net VNB over the next 3 years. Then you have Gabriel India, wherein the major corporate structure and simplification has led to doubling of this stock, and revenue target of around 1,000 crores in sunroof business has been delayed by 1 to 2 years beyond FY30. So, these are all the stocks, if I were to talk about, which has doubled your money, investors' money in the last 1 year from January 2025 till date. And let's see what lies ahead in the next year.
And while Varsha has very well laid down the star performers of the year today, let's talk about a star that debuted today. Meesho closed over 53% higher after making a blockbuster debut on the bourses. The e-commerce platform listed at a 46% premium. We spoke to Saurabh Jain of Process, which by the way is one of the investors in the company, and he told NDTV Profit that Process is excited about Meesho's long-term growth and in fact sees significant growth potential going ahead in the company as well. Listen in.
The company has remained free cash flow profitable since the last 2 years, and when you look at any of the global comps in the value commerce space, there's still a lot of upside that remains for the company. And from that perspective, the company is already a scale platform with 235 million annual transacting users, 230 crore orders placed in a year. So from that perspective, it's already a platform of scale, but we truly believe that there's a lot of potential for the company to grow from here, and we are very excited about the long-term potential of the company.
All right, thanks for that. Well, I would like to also ask you, we have seen a lot of consumer tech companies hit the profitability a quarter before or like a couple of quarters before hitting the market. Do you think that's a criteria that we have been following?
No, so from that perspective, the company has remained free cash flow profitable since the...
And viewers, Swiggy also has been in focus because the food delivery giant's qualified institutional placement worth about 10,000 crore rupees witnessed strong demand from investors. The QIP was oversubscribed by 4.5 times within just an hour of opening. The indicative offer price was set at 371 rupees per share, which is at a 6.8% discount to its last closing price. The QIP has now closed and is fully subscribed, signaling strong investor interest. Swiggy says the funds will be used to strengthen its balance sheet, fuel growth, and support ongoing investments. And on to the latest on the IndiGo flight fiasco, viewers. While operations are stabilizing and one-time performance has shown a dramatic improvement from last week, the scrutiny over the airline's sprawling operational breakdown has intensified. First, the DGCA has given IndiGo CEO a one-day extension to present, in their words, comprehensive data and updates relating to the recent disruptions. The airline has been instructed to submit the complete report and appear before the aviation regulator on 11th December, that's tomorrow. Remember, last night NDTV Profit also broke the news on DGCA commanding IndiGo to curtail 10% of its flights. But let's now go across to my colleague Danish Anand to understand who else apart from the CEO has been summoned to this meeting tomorrow and what would be the key areas of discussion. Danish, what are you picking up?
Well, DGCA's scrutiny on IndiGo is continuing day by day, and the most recent update is the fact that DGCA has summoned IndiGo CEO along with the other vertical heads. And by that I mean we will be seeing Mr. Peter Elbers being accompanied by other heads like the head of crew and rostering, the head of flight operations. So similarly, all the heads at IndiGo will be summoned at the DGCA office, and this meeting will begin at 3 p.m. tomorrow. In fact, the DGCA has also ordered IndiGo to submit a comprehensive report, and this comprehensive report will include all the details since the fiasco began and what the airline has done till now and what it will be doing in the future. Besides that, IndiGo also has to provide all the details of the current fleet that it has and what are the plans regarding rostering, and as far as refunds are concerned, how many refunds have been issued back to the customers. What is the status of the lost baggages? Because even baggages were huge issues, and we saw all over the social media that how people are complaining about losing their bag and they haven't reached their homes. So this is what the DGCA has really sought from IndiGo in its comprehensive report. But we can expect a lot of back and forth between the DGCA and the IndiGo tomorrow, because we have seen in the past many few days, not just the minister, but even the regulator, that is the DGCA, it has tightened its news around IndiGo, and they're looking at the entire details, minute details of IndiGo. How are they operating right now? What are the flight cancellations that are taking place? So this is what is expected from the meeting tomorrow. But besides this, if we talk about how are things now with IndiGo, yesterday the airline flew over 1,800 flights, and today it's expected that they will be flying over 1,900 daily flights, and this will be in the particular range after what the DGCA has reduced, because yesterday in the evening we saw that the government has ordered 10% curtailment of IndiGo flights. So we are seeing that IndiGo's performance, as far as the on-time performance is concerned, yesterday the OTP has improved to over 87%. A day before that, it was 85%. So we are seeing that things are slowly limping back to normalcy for IndiGo. But all of this doesn't end there. For the IndiGo, neither for the DGCA, because now the government is really curious that if we have implemented the FBTL norms and if we have given you ample of time to adopt to the new FBTL norms, then why didn't IndiGo, really adopt the FBTL norms? So we can expect, a lot of back and forth happening between IndiGo and DGCA tomorrow, and then it is expected that DGCA might issue a press statement later in the evening tomorrow, and then we come to know that what exactly happened in that conversation.
Right, Danish. Thanks.